Thank you very much. Good morning and welcome to the IGE POSCO Group International Conference entitled 2022 ESG Global Summit, Embracing Sustainable Growth in the New Age of Industrial Transformation. We would like to extend our sincere thanks to the Institute for Global Economics as well as POSCO Group. I'm Hannah John and I have the honor of serving as your MC today. First, thank you to everyone who is joining us online and offline for this very special forum. Please note that devices for simultaneous interpretation are available at your tables. As we have a very busy schedule for today, I will do my best to keep us on time. To begin our conference, I would like to invite Dr. Chung Kwang-woo, Chairman of the Institute for Global Economics, to share his opening address. Please join me in welcoming Chairman John to the podium.
Good morning, ladies and gentlemen, and distinguished guests. It's a great pleasure and privilege for me to open this IGE POSCO Group International Conference on behalf of organizers and supporting institutions. I would like to extend my warmest welcome to each one of you. As you know, the world now stands at a pivotal moment in modern history as we confront devastating headwinds from geopolitical tensions and economic challenges. The global economy is under serious threat with the energy and food crisis as well as supply chain disruptions, making the world more volatile and vulnerable. However, now is indeed high time to look beyond the current crisis to solidify the long-term values of securing socio-economic sustainability and resilience for the future. With the ramification of the pandemic driving fundamental shift in the corporate management paradigm and accelerating the transformation towards new industrial ecosystems, ESG-focused strategies are not just a trend, but an imperative if we are to achieve sustainable performance at both corporate and national levels. Against this backdrop, the conference is intended to explore a broad range of interrelated issues pertaining to the post-pandemic new era, which include the topics of coping with the challenges of changing global economic landscape and international order, strengthening ESG as a central corporate management strategy and investment, and pursuing industrial growth strategy in the age of new trade regime and carbon neutrality. Ladies and gentlemen, I'm so grateful that we are joined by some 30 of the world's leading scholars and prominent business leaders, as well as senior public officials in Korea. Although I cannot recognize all the outstanding participants individually because of time constraints, please allow me to extend deep appreciation to His Excellency Mr. Ban Ki-moon, the 8th Secretary General of the United States, the Honorable Mr. Ahn Cheol-soo, a member of National Assembly and Chairman of the 20th Presidential Transition Committee, and Dr. Bang Ki-sung, the first Vice Minister of Economy and Finance, for their congratulatory addresses. In addition, I would like to thank our distinguished speakers, especially Mr. Henry Fernandez, Chairman and CEO of Msci, Morgan Stanley Capital International, Nobel laureate Professor Merton of MIT, Mr. Bob Zoellick, former president of the World Bank, Professor Jeremy Rifkin of the Wharton School, Professor Ann Kruger of Stanford and former acting managing director of IMF, and Dr. Henny Sandra, managing director of Blackrock and former chief correspondent at the Financial Times FT, for joining us today. Special thanks must also go to Dr. Sagong-il, Chairman Emeritus and the founder of IGE, and last but not least, Chairman Che Jung-woo of POSCO Group for his strong support that made this excellent gathering possible. I sincerely hope that all the speakers and participants will join us to make our conference a highly productive and successful event that contributes to creating a better tomorrow for Korea and around the world. I wish you all the best, and thank you very much.
Thank you very much to Chairman John for your welcoming address. Also, if you need devices for simultaneous interpretation, they should be found at your desk. 혹시 동시 통역기가 필요하시면 자리에
If you need simultaneous interpretation service, you can make use of the receiver at the table.
of POSCO Group for a special welcoming address. In addition to his prolific career at POSCO Group's major affiliates, Mr. Che was also recently appointed Vice Chairman of the World Steel Organization, one of the world's largest industry associations representing global steel producers. Please join me in welcoming Chairman Che Jung-woo to the podium. Thank you very much.
Good morning. I'm Joe Choi, CEO of POSCO Holdings. 2022
Welcome to the 2022 ESG Global Summit under the title of Embracing Sustainable Growth in the New Age of Industrial Transformation. I'd like to join you in celebrating this special occasion. My gratitude goes to Chairman Chung Kwang-woo of Institute of Global Economics. I would also like to acknowledge the presence of Mr. Hwang Ki-moon, His Excellency, Secretary General of the United Nations, and An Chol-soo, a lawmaker of the People's Power Party, and Bang Ki-sun, a Vice Minister, Ministry of Strategy and Finance. And we also have Henry Hernandez as a speaker, CEO of Msci. I am grateful for the presence online and offline. We also have many distinguished speakers and leaders from many organizations, and I welcome you all. We are living in and preparing for the post-pandemic era, and we are in the midst of epochal civilizational change. Our challenge is to pull off once again a dynamic growth and development. Climate change, pandemics, poverty, inequality are only some of the earth-shattering challenges that we must successfully meet to build a thriving community. This is our aspiration and ambition, and this in turn requires us to completely change our business operation in industrial processing, energy transition, and shifting in supply chain networks and digital transformation are ushering in a fundamental restructuring of our industrial landscape. ESG is attracting finance, and it has risen as a new normal in our economy. Low carbon, circular economy are some of the major changes that we are seeing after the pandemic. Cutting-edge technologies introduced by companies are driving new values in our economy and making our economy more inclusive. This is the vision that we must pursue going forward. Most important of all, as we are living in an era of great change, we must recognize this transformation as a new opportunity to develop nascent technologies and identify new business opportunities to further promote dynamic growth. We are facing many challenges in our community, and As the provider of goods and services, businesses should take a pioneering role in having a positive impact on our community so that we can pursue a happier and a more thriving and sustainable economy. These are the roles that must be taken by businesses. A POSCO Group is committed to being a responsible corporate citizen as a member of our community. And it will continue to engage responsible stakeholders to create not only new economic activities but set new social agendas so that we can present a role model in promoting sustainable growth. Not only that, by transforming ourselves into a holding company, we will continue on our success story that we have written for the past half a century. Moreover, we will take a pioneering role in promoting a greener, low-carbon economy. And to pursue these goals and to promote a truly sustainable growth, we are committed to rising as a new business leader and strengthen our ESG operation so that we can drive new innovation and transformation. And we will continue our pursuit of building new mobility, producing green steels, and presenting new business operation models and securing new resources and food, all of which are propelling us to changing our business portfolio. The POSCO Group is writing new business success stories so that Korea could take a leading role in a new era of sustainable growth and take part in building a truly thriving and sustainable economic world. And amidst this great transformation, POSCO, along with all stakeholders, should join hands in raising our ambition and achieving our commitments. All members in our community, and indeed all stakeholders, to recognize themselves as noble companions so that we can promote the values and causes of co-growth and co-development. To take just a few examples, POSCO has built up rich experience for the past several decades in technological innovation. It is part of our very DNA. And we have been developing hydrogen reduction iron making technologies. However, achieving a net zero carbon emission is an undertaking that must be joined not just by POSCO, but other businesses, government agencies, and research institutions. We need to mobilize all of our resources and technological know-hows and innovative drives to accelerate our progress towards building a truly green economy. We have many experts here, and I have no doubt the insights that will be shared and presented in today's conference will further raise the awareness of building a green economy, raise our ambitions, and become ever more audacious and propelling a sustainable growth. I count myself as fortunate in joining in this noble cause. And last but not least, I'd like to thank the Institute of Global Economics, which has prepared this event today. And I'm also grateful for the presence of many distinguished guests who are joining online and offline. Thank you for listening.
Thank you, Chairman Che, for your welcoming address. We are now honored to invite His Excellency, Mr. Ban Ki-moon, 8th Secretary General of the United Nations, for his congratulatory address. His Excellency has also served as Senior Secretary for Foreign Affairs and Security, Director of U.S. Bureau and Foreign Policy, Minister at the Ministry of Foreign Affairs, and is also founder of the Ban Ki-moon Center for Global Citizens. Please join me in welcoming His Excellency, Mr. Ban Ki-moon.
Ladies and gentlemen, good afternoon. First, allow me to extend my sincere congratulations on the opening of the 2022 ESG Global Summit, joint hosted by IGE and POSCO Group. At the outset, I would like to applaud Dr. Jeon Kwang-woo, the chairman of IGE, Dr. Sa Kong-il, chairman emeritus of IGE, and Choi Jong-woo, the chairman of POSCO Group, for their visionary insights and leadership to convene such a meaningful and timely event. I would also like to recognize An Cheol-soo, chairman of the 20th Presidential Transition Committee, Pan Gi-sun, first vice minister of Economy and Finance, Henry Fernandez, chairman and CEO of Msci, Professor Robert Merton, a Nobel laureate in economics, and Yu Jang-hee, professor emeritus of Ewha Women's University. I would like to extend a very warm welcome to all the distinguished scholars and participants here today. Thank you for joining us. I've had the honor of being part of this very prestigious event every year since 2020. It's truly an honor to be invited back here today, especially since climate change, carbon neutrality, ESG, and other sustainability agendas are topics that are very near and dear to my heart. Armed with sharp insights and perspectives about global economic trends, IGE and POSCO Group are exemplary leaders contributing to our 2050 carbon neutrality goals by leveraging cutting-edge technologies such as hydrogen reduction technologies in steel making. And in particular, I would like to express my deepest gratitude to Chairman Choi of POSCO Group. I know that the way forward has been fraught with difficulties, but I applaud your efforts to come up with this very grand vision of greening the steel and iron making industry. And I always believe that POSCO Group is a leading example that everyone should follow. As COVID-19 is gradually subsiding, we are slowly picking up the pieces, and countries across the world are trying to regain a sense of normalcy as we see people and businesses find their footing and vitality. Making sure we maintain this positive momentum requires us to learn from our mistakes and not repeat them. By that, I mean keeping up our guard despite the conveniences provided by a carbon-intensive economy, and ensuring that we never again pursue growth with detrimental consequences to our environment. If we lose sight of these important lessons, we will soon experience a pandemic even more catastrophic than COVID-19. Frequent floods, high temperatures, and torrential rain, not to mention massive wildfires and other climate disasters will threaten our very existence. Carbon neutrality 2050 is the only solution that we as a humanity have. If the 2015 Paris Agreement was a set of, let's say, commandments, 2050 carbon neutrality is an imperative for humanity and the entire world. However, prospects are still up in the air, and we have been slow to act. Last year, global greenhouse gas emissions increased by 6%, and emissions rose 4.6% in South Korea last year. The Ukraine crisis and rising inflation across the world have intensified the need for immediate climate action, but has made our efforts more difficult. These are times when political leaders must demonstrate their unwavering commitment. Of course, the Ukraine government and the Ukrainian people need our support, which is why leaders across the world must allocate some of the climate funds, but that is a mistake. That is a grave, erroneous mistake and a misjudgment. I am very critical of these actions. Of course, the Ukraine crisis is important, but responding to climate change is an imperative. We do not lack the funds to help the Ukrainian people. We have the funds, so there is no need to take away from climate funds. to help the Ukrainian people because we have other funds available. This is why the determination and commitment of leaders from all across the world towards climate action is so important. According to the IPCC's working level reports from August 2021 to April 2022, global temperatures will increase by 1.5 degrees compared to pre-industrial levels 10 years faster than we had previously postulated, which means that carbon greenhouse gas emissions by 43% at the very least by 2030 is critical if we are to meet the 1.5 degree imperative. In this vein, the IPCC declared that it is all hands on deck in terms of climate policies, technologies, and climate finance, meaning we need to leverage everything that we have at our disposal. These reports should not be taken lightly as mere suggestions, but should be taken to heart as obligations. Last year, the Korean government pledged to reduce 40% of carbon emissions by 2030 and reach net zero by 2050. The new administration has picked up the baton, reaffirming its commitment to reduce carbon emissions, but has expressed that the roadmap and energy mix previously planned in particular may need adjustments. The previous administration pledged to reduce nuclear to 67% in the energy mix and ramp up renewables to 70.8% by 2050. However, the new government believes this is the exact opposite direction from where the global nuclear market and industry is headed. French President Macron unveiled his vision to bring about a nuclear power renaissance by 2050 by constructing 14 new nuclear power plants by 2050, and the UK has also 10 new nuclear power plants in the pipeline. Along the same lines, China also announced last year its plans to expand nuclear power infrastructure by adding at least 150 new nuclear power plants over the next 15 years. The previous government excluded nuclear power from South Korea's green taxonomy, but the current administration is looking to change that, which I think is a very smart move. One thing I would like to point out, however, is that we lack a governance system that can implement these policies, which is why I urge the government to organize and put in place a carbon neutrality green growth committee that can provide clarity on South Korea's environmental and energy policies. I cannot stress enough the importance of even legislative amendments, if need be, to delegate leadership from the current two-person structure led by the Prime Minister and Commissioner to a direct coordinating power under the President of South Korea, so that a stronger governance system can drive these policies, roadmaps, and plans forward. Although some were skeptical about ESG, the global movement has become more refined with objective standards. At COP26 in Glasgow last year, the IFRS spearheaded efforts to standardize ESG disclosure, and before the year closes, a global disclosure standard will be released. Reliable and objective ESG information will help provide businesses with clarity on divergent and disparative ESG disclosure standards and strengthen ESG evaluations on businesses. In December 2021, Korea's Ministry of Trade, Industry and Energy announced KESG guidelines comprised of 61 indices, and the new administration plans to further upgrade and reinforce KESG as a part of its national agenda. ESG is not simply a criteria for investment or risk management anymore. It's part and parcel to corporate management philosophies and standards. And as such, the government's ESG policies must adopt a regulation-free approach grounded in support and autonomy. Human resources and physical resource-strapped SMEs, or small and medium-sized businesses, ESG initiatives should be supported through education and counseling to create an inclusive ESG ecosystem as a part of the government's policy goals. Advanced economies are also upgrading and expanding their ESG policies and initiatives. For example, the EU's plans to implement the Carbon Adjustment Mechanism, or CBAM, by 2026 have been revisited to discuss options for implementing the mechanism by 2025, a year earlier, and expanding the target scope with the Supply Chain Due Diligence Act to be enforced in 2024. RE100 has now united 370 global companies, including 19 Korean companies, and the membership continues to grow, putting pressure on non-member corporations to join in the initiative. This can potentially create trade barriers for Korean companies, which is why the government must provide wide-ranging support and better information so that our companies don't lose their competitiveness. Carbon neutrality and ESG pertains not only to industries and our economy, but is integral to the paradigmatic shift human civilization will need to pursue towards greening our economies. If our goals are clear, there is no reason to delay in taking action. I look forward to your solutions and ideas for ways we can improve our efforts. And once again, I hope today's conference is a resounding success, and I wish everyone all the best in health and happiness. Thank you so much for listening.
Thank you to His Excellency, Mr. Bang Ki-moon, for your congratulatory address. We are also honored to have with us the Honorable An Cheol-soo, Member of the National Assembly, People Power Party, and Chairman of the 20th Presidential Transition Committee. Mr. An has been a leading figure in calling for national support for climate change response technologies, and we're delighted that he is able to join us this morning. Please join me in welcoming the Honorable An Cheol-soo to the podium.
Good morning. I am encouraged by the presence of so many distinguished leaders and influencers in many fields. I recall the time 26 years ago when I started a new company called IT Security and Company. And I thought, or even before launching this business, or 7 years before launching this business, I developed an antivirus software and distributed it for free. I was a researcher in the medical field, and at the same time, I also set up a software company and freely distributed VT antivirus software. So I was wearing two hats as a medical researcher and software developer for several years. And virus has been growing in size 100% for the past several decades. And in the medical, so that was my challenge I was facing in the software industry. And on the medical front, as a professor, I had many teaching and research assistants under my direction. So I had teaching and research obligation in the medical field as well. So I had to choose between these two hats. And I thought that we had many medical researchers in Korea, but I was the only person I thought at the time in Korea to develop that successfully delivered an antivirus software. So I left the medical field and pursued my career in the venture capital and the business community. So I became an entrepreneur since then. And as I said, I've made publicly available antivirus software. So I wanted to serve the public interest even after launching a private business. And my business model was underpinned by the philosophy that software should be freely available to the general public, but we can provide this for profit to enterprises who wanted to beef up their cybersecurity capabilities. So I thought that we deserved taking such profit from great businesses, which could be in turn channeled to financing software development that will be shared, and that software which will be shared with the general public. At the time, this idea was opposed very strongly by many people because it might undermine the profitability of my business. So, promoting public interest by freely distributing software to ordinary users was opposed by many people, but I thought that this was a right decision for me to take. And as it turned out, and in retrospect, that my decision at the time could potentially evolve as a sustainable economic growth model, because freely distributing software to ordinary users allowed me to identify a worldwide security threat that was posing a challenge to many Korean businesses and Korean software users. And OnLab that I have launched serve as a hub of getting all the relevant information on the cybersecurity threat that we have faced in Korea, helping us to significantly save resources. And we were able to build a infrastructure for sampling viruses in cybersecurity. So that helped us to make our businesses even more sustainable. So it was 26 years ago that I launched the OnLab, and our market share has been growing by 60 to 70% during the period, and without a single exception, and every year we increased our profit. Not once have we seen a decrease in our profits for the past 26 years. So this experience taught me that building a sustainable business is indeed possible. And my next interest was building a strong governance. As a member of the board of POSCO, I have taken many valuable lessons, one of which was the importance of building strong governance, along with pursuing a sustainable business. So I was one of the first members of the board of POSCO, and outside director took off half of the board of directors of POSCO, after which I stepped down as a member of the board of directors of POSCO, and 10 years have passed since then. And as I said, every year, OnLab has seen a growth in revenue and a profit, and this is a testament to the validity of pursuing a sustainable business. So my experience as a director of the board of directors of POSCO was indeed a very important time for me, and it was a very enriching experience. But it also posed many challenges to me, one of which was being a socially responsible corporate citizen under the mantra of CSR. However, this is a very generalized term, and CSR was a concept that was hard to quantify. And Peter Drucker, a business guru, said as much. He said, "If you cannot measure, you cannot manage." So it was hard to have a quantifiable measuring tool that would enable me to assess I've seen any progress on the CSR front compared to last year. That was a significant challenge, and I think this gave rise to the idea of ESG to build a more quantifiable methodological tool so that citizens can make informed decisions in their consumption, and investors, on their part, can have a better idea of whether a particular business is truly pursuing a sustainable growth. So ESG was created to help investors and citizens to identify truly sustainable companies. And I served as a chairman of the 20th Transitional Presidential Committee. And as a chairman of that committee, I worked very hard to incorporate ESG on 100 key governmental agendas of the transition team. And I am sure you have many articles, very in-depth articles on ESG in the media. And I am proud to say that those articles, many of those articles reflected my suggestions on ESG. However, out of the three pillars of ESG, E and S and G, I think E has received disproportionate attention at the expense of S and G. So to look at, let's say, G, the governance, businesses should be encouraged to build a stronger governance structure and not be forced to do so. So businesses should take initiative in identifying the most important agendas on the G front. So giving more autonomy to businesses, I thought, was the key in G. Although I didn't have enough opportunities to present such ideas on G. So I regret, I'm sad somewhat that I was not able to include agendas on S and G as opposed to E when I served as the chairman of the presidential transition team. A work which I have no doubt, however, will be taken up by many other people, and I have taken keen interest in the development of POSCO. And hydrogen reduction, steel making is one of the core technologies built by POSCO, and I had a chance to visit Pohang, the steel plant of POSCO, and I heard at the time that 40 trillion won was required to develop hydrogen reduction technologies. That was what I heard from one of the engineers, managers of the plant of POSCO, 40 to 50 trillion won. So this is a very large sum of money against the profits of POSCO. So this is an undertaking that must be pursued not just by POSCO, an individual business, but other research institutions and stakeholders in Korea. So we should build a coalition of building these core technologies, innovative technologies, and we should commercialize these innovations, and that could bring in valuable export revenue and help us to promote sustainable development. And this is not just a case or agenda pertaining to POSCO. This is relevant to all businesses. And I think we have 5 areas in which we should build new technologies to pursue sustainable growth. Moon Jae-in administration had a great misunderstanding in electricity generation. Moon Jae-in administration thought that just reducing CO2 in electricity generation was all that was required. However, electricity generation accounts for only 20% of the overall carbon generation. 32% is taken up by the manufacturing sector. 19% of CO2 is emitted by agriculture and fisheries industries, and heating and cooling and transportation account for a significant share of carbon emission. So these 5 areas all need new and novel technologies for carbon emission reduction, and the government should take a leading role in developing such technologies and bringing them to the market. And this is an undertaking that requires a time period much longer than 5 years, the term for the President of the Republic of Korea. So as part of the transition team, I thought that we put ourselves into the 5-year straitjacket, a single presidential term, which made us to pursue short-term goal. However, I hope that the current Yoon Suk-yeol government will launch ambitious new projects that will last beyond 5 years or 10 years. So even if we do not see tangible results in the next 5 years in this term, more mid to long-term projects could be launched, could be pursued by the Yoon Suk-yeol administration. Thus, I think this represents a great potential, and I hope that our new president and new administration could be persuaded to promote such mid to long-term agendas. And I have noted that we will see an outpouring of very insightful suggestions which could serve as an input to the government, the legislative branch and the administrative branch. And I am committed to helping in this endeavor. Thank you for listening to my speech.
Thank you very much to the Honorable An Chol-soo for your congratulatory address. And last but not least, we are delighted to invite Dr. Bang Ki-sun, first Vice Minister of Economy and Finance. Among other distinguished posts, Dr. Bang has served as a Senior Assistant Secretary to the President for Economy and Finance at the Office of the President, Deputy Minister at the Ministry of Economy and Finance, and Executive Director at the Asian Development Bank. Please join me in welcoming Vice Minister Bang Ki-sun.
네, 안녕하십니까. 기획재정부 1차관 방기선입니다. 앞서 두 분께서
Ladies and gentlemen, good afternoon. Because we had already prominent speakers who have gone over a lot of what we have to deal with today and given us such good remarks, I will try to keep mine short. At the outset, I'd like to offer my congratulations to IGE and POSCO Group for putting together this international conference, and a special thank you to Dr. John, Chairman of IGE, and Choi Jung-woo, Chairman of POSCO Group, for all your efforts. I'd also like to thank Chairman Pan Ki-moon, Congressman An Chol-soo, Henry Fernandez, CEO and Chairman of Msci, and all the other distinguished guests for taking time out of your busy schedules to join us here today. Ladies and gentlemen, the age of rapid globalization we've witnessed throughout the past 3 decades is slowing down, with a new Cold War regime brewing. The COVID-19 pandemic, Russia's invasion of Ukraine, the G2 hegemonic struggle, and more has increasingly divided the global economy into blocks and regions, while tensions surrounding global supply chains continues to intensify. Productivity and growth is in decline in South Korea. Challenges that are compounded by expanding inflation and tapering policies gradually implemented by the US and other major countries, which has increased volatility in financial and forex markets, bringing about a confluence of multifaceted crises. The new administration will focus on navigating these structural and complex challenges through building a dynamic economy, opening up a new chapter of growth, leading growth, and enhancing welfare and happiness across the country. These are the 4 pillars of the economic policies we envision. First, we will build a dynamic economy led by the private sector. We will remove the red tape that stifles private sector freedom and creativity to boost investments and create jobs. This will be our pivot to corporate-led market growth strategies. Second, structural economic fundamentals will be strengthened to prime the economy for another period of advanced growth. Public sectors, labor markets, education, finance, and service sectors will be the 5 major areas of structural reform, which will put our economy on a solid trajectory of growth. Third, we aim for Korea's economy to become a trailblazer, to be ready for future challenges, including digital transformation, demographic changes, climate change, and other structural shifts that require preemptive action. Last but not least, the economy must serve to enhance the happiness of the citizens. This means social safety nets for marginalized people, advanced welfare systems, balanced regional development, and other measures that allow people to turn their lives around for the better and make sure no one is left behind in the dust. Ladies and gentlemen, climate change, digital transformation, other future industrial transformations, and the need for sustainable development can be addressed by transforming Korea into a pioneering economy. Against this backdrop, science and technology R&D, cutting-edge and strategic industries, and climate change will be the focal point of our government's efforts. Becoming an IT powerhouse amid hegemonic struggles between countries across the world will require Korea to have an edge in R&D. Hydrogen, quantum technology, and other source technologies will be acquired by improving relevant policies and supporting startups, scale-ups, and sales channel expansions by providing end-to-end support for commercialization. Next, cutting-edge and strategic industries will receive unwavering support from the Korean government. Semiconductors, AI, and other experts and professionals will be trained and investment incentives strengthened, while large and small-size enterprise partnerships and international cooperation will be fully leveraged to create a strong industrial ecosystem that can catapult Korea to the top. Lastly is climate action, a global agenda that no country can solve on its own. Korea will do its part by transitioning to a carbon-neutral economy. We will strive to meet existing greenhouse gas targets while coming up with a smart energy mix that can provide efficient pathways towards carbon emissions and transition to a green economy, carbon emissions reductions and a green economy. In addition, carbon neutral investments and low carbon consumption will be encouraged using stronger incentives. Ladies and gentlemen, humanity faces a wave of seemingly unending crises and disasters, or a so-called black tide. Crises upon crises compound the challenges we face and increases the level of uncertainty home and abroad, making lives harder for everyday working-class citizens. During the height of the World War II, Winston Churchill said, "Never waste a good crisis." This crisis, although daunting, could be a blessing in disguise if we respond promptly to strengthen innovative capabilities and resilience. In that sense, I hope that today's conference will result in innovative ideas for overcoming multifaceted economic challenges. Thank you for listening.
Thank you to Vice Minister Pang for your congratulatory address and to all of our honored guests for your kind words. At this time, we would like to reset the stage, and I would like to introduce a special live conversation with Mr. Henry Fernandez, Chairman and CEO of Msci, and Dr. Jeon Kwang-woo, Chairman of the Institute for Global Economics. In addition to his distinguished career in private equity and formerly as a diplomat, Mr. Fernandez has been an avid supporter of the Institute for Global Economics, and we are delighted to hear from him this morning. At this time, Dr. Jeon, I would like to invite you to begin today's special dialogue with Mr. Henry Fernandez. Please wait just another moment as we set the stage for our conversation.
We ask for your understanding. We are making tactical arrangements, and speaking while wearing a face mask may decrease the quality of sound, so I would like to take off my mask for better sound quality, so I ask for your understanding on that.
Do you hear me? Yeah, are you there? Can you hear me fine? Or
Yes, I hear you a little faintly, but I hear you.
Oh, okay. Is that the sound is fine? We had trouble earlier on when we had a test before this conference started. Is that okay now? I would like to make sure that everything is fine. Now communication.
Yes, I can hear you as long as you speak loudly.
Okay. All right. Thank you. Thank you very much for being with us today. It's a very late hour in New York. I appreciate your support very much. The only regret is that we are hoping to have you in person this time, but we'll reserve that for our next event. Okay.
Yeah, as I mentioned to you, I promised to be with you in November of this year.
Yeah.
And I would like to thank you for the invitation to be here today and the opportunity to be part of this fabulous conference that is co-organized by the Institute and also by POSCO. I'd like to congratulate you and the chairman of POSCO because it is in events like this that the issues get discussed in an open and constructive forum, and hopefully we can find solutions to many of the issues that we face, and that we can execute on them for better prosperity of our societies.
Okay, thank you very much. Henry, I have broadly three areas of issues that I would like to talk to you today. But before I do that, I think it is appropriate for me to say something about you and MSCI so that our audience can have better understanding of what sort of background and main business that you carry on, so that it could serve as useful background information. So let me read what we have here. Actually, your bio is in 2 pages. It's a very long bio. Ladies and gentlemen, let me briefly introduce Andy Fernandez, who doesn't really need much introduction, but to give you a sense about what he does most of the time. As MSCI's chairman and CEO, Andy Fernandez has led a firm for over 2 decades. So he's been CEO for a long time as a premier provider of indexes and portfolio construction and risk management tools, as well as, important thing here is, as well as ESG, environmental, social, governance, data, and research. That's where MSCI plays a leadership role in the world. MSCI is an S&P 500 company listed on New York Stock Exchange. Well, Mr. Fernandez, Henry, was one of 30 CEOs named in Barron's list of world's best CEOs. Congratulations to you, and our audience will appreciate your presence today. Now, given the time constraint, I would like to move on rather fast because we were kind of behind the schedule a little bit, and also I have to let you go to bed as soon as possible. So let me go on. I would like to start with the current situation about our global economy and finance before we move on to the main theme, which is ESG. Now, with this 75 basis point hike, interest rate, benchmark rate hike by the Fed the other day, now, do you see this recession, is it pretty much inevitable anytime soon this year or next? Or what is your sense about the overall economic situation and prospect through next year or two?
Well, first of all, I will say that the global economy is facing significant challenges. We are likely to see a significant slowdown in China. we're likely to see not only a slowdown, potentially a recession in Japan, given the high energy prices and high food prices. As you know, they import a lot of their food. It is difficult to imagine that Europe will not slow down at a minimum or potentially fall into recession. Confidence levels in Europe at the consumer, investor, and corporate sectors are declining fast. And in the US, for different reasons, the economy was overheated by too much fiscal policy and obviously a relatively easy monetary policy in the last 2 years. So, Larry Summers, the famous, Harvard economist, has said that since the 1950s, every time that inflation has been above 4% and unemployment has been below 5%, the US economy has always gone into a recession in the following 2 years. Now, we are at 8.6% inflation rather than 4%, and we are at 3.6% unemployment, so rather than 5%. So it will take a lot of monetary tightening and fiscal restraint to avoid a recession. Obviously, there are a lot of other factors going on, but I will say the probability of a recession in the US, in my opinion, is higher than 50%.
You mean this year?
Well, it will probably be, most likely next year. We are already seeing confidence levels coming down, consumer confidence levels, consumer spending has come down a bit. Obviously, inflation continues to be high and persistent, and the Fed is committed to fighting it. Contrary to that, to the UK, in the UK, the monetary authorities can say that their aim is to throw the economy into a recession. Politically, in America, it's very hard for the Fed to say that, but that's their intent. In order to slow down demand and reduce, significantly the pace of economic activity. If they wait too long, which they already did, inflationary expectations get built into every part of the economy, and it becomes even harder to eradicate inflation. I would say the silver lining is that the financial markets, especially the treasury bond market, is not yet predicting a continuation of high inflation beyond 2 or 3 years. When you look at the treasury, the 30-year bond rate, the 10-year bond rate, they are, in the 3+, 3.5%, category, and therefore, if inflation were to be believed to be 4 or 4.5% over the longer term, those bonds will not be trading at those levels. So that's the silver lining at this point, but we have a lot to go before we get there.
Okay, Henry, I think we should move on to ESG issues. That's the main theme of this conference and for our conversation. Now, in your view, what are the most important recent developments in the area of ESG management and investment? Lately, a lot of debates going on about whether or not climate crisis have been overstated, or greenwashing problem has also attracted attention. So all things considered, what would be the most important significant developments in this area of ESG management?
So first of all, I would say that we are in a process of redefining capitalism, improving capitalism in a more inclusive way, in a way that incorporates all externalities into the pricing of assets and into the capital allocation of society. And these events happen only every few decades, every generation, every 2 generations. And we are in that process with respect to ESG, for example, but in other aspects, the geopolitical system, the international economic order, the nature of globalization, and so on and so forth. So I think we're likely to see major changes. Now, with respect to climate, we clearly are in a historic existential threat to the planet that is not going to be decades or a large number of decades. It's only be a few decades that we have to confront this problem. So in a situation like that, there will be a huge balancing act between the forces that take you in one direction and the forces that take you in the opposite direction. So when you look at ESG itself, it took off significantly in investing and in companies in the last 2-3 years. And there is a little bit of a backlash right now because many of the ESG investments that were made are being accused of greenwashed investments. Many companies that have touted themselves as green are being accused of greenwashing as well. So, for sure, there are elements of that happening. And for sure, the regulators are looking into that in Europe with DWS, in America with Goldman Sachs Asset Management. And therefore, they're looking for understanding the disclosures, understanding the claims that are being made, and whether those are followed through in the investments that they sell to investors. So there will be a pendulum switch there, and there will be a lot of good things that come out of that, especially disclosures of what constitutes a particular type of ESG investing. And that's good because that is the nature of progress. It goes in reaction and counter-reaction and reaction and counter-reaction, in order to get the right center move. In climate, obviously, because of the increases in fossil fuels, because of the lack of energy security by Europe and its dependence on Russian oil and gas, and the rapid increase in food prices and all of that, we are in an energy crisis right now. This energy crisis came to Europe recently, but obviously it was big in Asia last year with coal prices going through high prices. So now we have an energy crisis both in Asia and in Europe, and maybe not a crisis of supplies in America, but for sure a crisis of prices that create incredible political reaction because it affects the pocketbook of so many consumers. So that process is going to create, and logically so, a reaction that more investments will go into fossil fuels. There will be more encouragement to use highly polluting energy, and because there's no alternative. In the very short term, people have to eat, they have to move around to different places, they have to heat and cool their homes, our factories need to operate, and so on and so forth. Having said that, though, I think that a lot of what is happening right now is sowing the seeds of significant progress, because you already are seeing that in countries like Germany, for example, and Germany and Italy and other countries like that, they began to put in place, in the US, the UK as well, more ambitious decarbonization and clean energy targets and investments. Belgium has expanded the life of 2 nuclear reactors for another decade or so. Finland has opened up the first new nuclear facility since 2007 in Europe. The demand for electric vehicles in the US, in the UK, in Australia, and elsewhere is significant. If you want to get an electric vehicle in the US, there is a long waiting list and the like. So I think that all of that, is going to bode well for, even though in the short term there is going to be significantly more pollution, it's going to bode well for an impetus for cleaner energy and less carbonization in the world. But as I said, it's a big balancing act. At the end of the day, every society in the world needs to balance out economic growth, energy security, and environmental sustainability. This is what I call the 3 E's. And it's never going to be a straight line. It's going to oscillate into more energy, fossil fuel consumption rather than less, maybe more environmental degradation, maybe less economic growth sometimes, and so on and so forth. But it is a huge process that the world has to go through. The last thing that I would say is that this process is clearly a major opportunity. Everyone sees this energy transition to a low carbon society as a big problem, which in fact it is. But it is one of the biggest commercial opportunity of our lifetime and potentially many lifetimes. Therefore, I encourage the Republic of Korea. You have always been a leader in a lot of what you do. I encourage you to embrace this change in ESG, embrace this change in the transition to a low carbon society, and become one of the big winners among countries in the world in that transition.
Thank you, Andy. That's great. If I quickly rephrase what you said, is even though we have to have short-term cost for green transition, and but in the end, at the end of the day, we'll have more robust, stronger ESG principles contributing to a better world for our future generations. Now, that in the process may have to go through this resetting ESG principles and procedures, and some sort of adjustment as for pacemaking, in good order, speed, good combination of various energy sources and so forth. So is that a fair?
Definitely a fair. And now the important thing to remember, JK, is that ESG is not a fad. It's not a temporary process. ESG in economic terms is a very simple concept, which is there are externalities that a free market system creates in discrimination, lack of working environment, in pollution, in governance. We'll talk about governance in a minute, and other aspects. And those externalities are not priced into the securities, into the assets in a country, and therefore they are not properly allocated. Capital is not properly allocated optimally, and therefore we are in an interdependent world, interconnected, in which everyone finds out what the other company is doing or the other country is doing relatively quickly. So societies are becoming extremely intolerant of the mispricing of these externalities and the misalignment of that capital allocation, meaning their savings are being misallocated and therefore creating less economic growth than they would otherwise be able to create.
Well, just a quick final question on ESG. As the world's leading rating institution for ESG, have you changed any sort of guidelines or anything in the process of the latest market turmoil, where energy prices increases, and all those challenges at the moment? And was there any material change in your rating system or process?
Well, the ESG, the same way that I describe it as a very large balancing act, ESG is also very dynamic, very dynamic. A lot of it has to do with the preferences of citizens in a society. If you have a political system in which the citizens are extremely intolerant of certain matters, that's going to be very high on the agenda of ESG. If it's a low tolerance, then for it may have a different weight. But therefore, that dynamic process that we follow is we do that every year. Every year we do a consultation with investors around the world about what becomes more important in ESG as time goes by, and we make adjustments to our methodology of ratings with those improvements that we make. So, for example, one consultation that we're going to be holding later on this year is, ESG has a component that is climate, but there are other components, governance and social issues. There are other environmental issues. So the question is, what should the weight be of climate in a particular company and in a particular industry? Should we be assigning a very large weight? And if so, that swamps the governance and social issues and other environmental issues, or should we not? So that's an example of that process. So we are constantly improving the methodology because this is a very dynamic field, and therefore that leads to changes in the ratings of companies and industries.
Thank you. Thank you. That clarifies pretty much. Time is running out, so I would like to finish up with the two parts, two notes, if you like. One has to do with our co-organizer of this event, POSCO Holdings. They have changed its governance to holding company structure. The aim is to promote more eco-friendly business sectors within the group. So have better business portfolio structure for eventually for higher shareholder value. Now, in other words, they changed the G to promote E and S factors in a more efficient way. Does that make sense to you?
Well, first of all, we applaud and commend the leadership of POSCO, the board of directors of POSCO, to take such a significant action in the direction of the future. We like what we have been seeing from them with respect to the holding company structure, so that they can invest in the energy transition in the areas of battery materials and lithium and nickel and obviously hydrogen. But also importantly, the governance in the strengthening of the ESG committee of the board of the holding company, and the creation of ESG committees at the POSCO steel company level, and the independent directors that they're looking to put in these positions. Also the ESG council that is being headed by the CEO of the holding company with the CEOs of the subsidiaries. All of that is definitely a step in the right direction. So congratulations on that. I think the two other aspects of it, clearly the investments in some of these areas that will provide the energy transitions are going to be should be very profitable investments and should create great returns for the shareholders. We also would like to see out of these ESG committees of the board and the ESG council more and more transparency at the steel company level of the carbonization metrics that they are creating, because obviously steel is one of the most highly carbonizing activities in the world, and what are the remedies that they're using, what are the steps that they're taking to decarbonize. Transparency is important. Nobody really is expecting that they're going to solve the problem, especially overnight. But I think what the world is expecting is a great deal of transparency. So I hope that this governance structure that is being created also leads to much higher levels of transparency and disclosure about the steps that they're taking. So congratulations.
Okay, thank you for your encouraging comments. The final question, very quick one. Now, excuse me. Now, MSCI has become a household name during our presidential election because the point that was raised during the debate was that when can Korea join MSCI's developed market index? Now, as you may remember, Henry, I started 14 years ago when I was FSC chairman, when we had first encounter. And we are still working on this issue. So you tell me in 30 seconds, what do you expect?
Yeah, so,
how Korea should do, and when that timing will come in your best judgment?
Well, first of all, as an admirer of Korea and the Korean people, there will be no more satisfaction to me. It will be a great honor to see Korea be part of the developed market indices of MSCI. Is the kind of place that you should be in. The decision to get there is actually not ours. The decision is the Korean government. There are three areas, and by the way, these are not demands of MSCI. We're an intermediary. These are needs and conditions of the investors around the world of the Korean system. So the three areas that need significant improvement are the full convertibility of the Korean won, especially the trading of the Korean won. Right now, the trading is limited to 6 hours or so during the day in Korea with Korean institutions. So any investor that wants to rebalance its portfolios is extremely handicapped by that. So at a minimum, the extension of hours of trading, which I know that has been announced, that will be helpful. But secondly, the trading of the Korean won in the spot markets, in the financial centers of the world, will be very important. The second area is the Korean system of identifying, investors is extremely rigid, and it creates significant operational issues for investors in creating in-kind transfers of shares and off-exchange trading. That needs to be addressed. Third, the Korean exchange has limited the permissioning of the Korean stock market data for the creation of investment and derivative instruments that can trade around the world. So what I can tell you is that there is no other developed market in the world that has these restrictions. And there's only 3 or 4 of all the emerging markets that MSCI follows that have these restrictions. So we're not only talking about an exception in the developed market, we're also talking about that the policies that you have are an exception that they are in the total minority in the emerging markets of the world. So I would encourage the new administration to take a look at this. We will be more than happy to work with the new administration to try to figure out a way that a lot of these policies can be adapted and can be changed in order to have Korea be in this place in the developed markets of the MSCI indices.
Excellent. Thank you very much, Hani, for your time, long time, more than 30 minutes, late hour in New York, and your insight, very informative stories that you shared with us. On behalf of our audience, I would like to thank you very much. Wish you all the best, and I'll see you in November.
Well, thank you for having me, and also thank you for your friendship of more than 14 years.
Okay. Thank you. Thank you.
Thank you very much again to Mr. Henry Fernandez and to Dr. Tung Kwang-woo for the insightful conversation. Now we can actually start our first session for the day, and we will have the stage reset to start our first session. And today we're going to begin with the theme of advancing ESG as a central corporate strategy, issues and best practices for ESG investing and management. To moderate our first session, of course, Dr. Tung Kwang-woo will be here to moderate, who has just stepped up the stage. And Dr. Tung Kwang-woo, of course, is the chairman of the Institute for Global Economics. First, we will reset the stage, and then we will begin with our first session in just a moment. Thank you. Okay, thank you very much for your patience. At this time, I would like to invite the moderator and the panelists for the first session to come to the stage and to be seated before the start of our first session. 네. So thank you again for your patience. Our first session today begins with the theme of advancing ESG as a central corporate strategy, issues and best practices for ESG investing and management. To moderate our first session, I would like to invite Dr. Chung Kwang-woo, Chairman of the Institute for Global Economics, as well as all of our panelists to join the stage for our first session. Thank you very much. And Dr. John, I would like to invite you to moderate our first session for today.
Okay, thank you, Hannah. Ladies and gentlemen, please understand that we have two English native speakers for this session, so we would like to manage this session in English, so please bear that with us. The way I would like to proceed is as follows. We'll have first speech from Dr. Hanny Sander, followed by Professor Shin Sung-hwan, and NPS CIO, Mr. An Ho-jun, will be next. And last but not least, Will Simons will have a last word for this session. Now, because we are way behind the schedule, we are supposed to finish at 11:20. So we have essentially 70 minutes. So what we have decided is to show a very interesting video speech from Nobel laureate, Professor Robert Merton, during the lunchtime, so that we can have sufficient time for our speakers to talk about this issue in this session. Okay, now before we start, I would like to have a very brief introduction of our key speakers. Now, starting with Hanny Sander, whom you know very well. Dr. Sander is Managing Director at Blackrock and Senior Advisor to Blackrock Investment Institute. Her previous positions include Senior Special Writer at the Wall Street Journal and Far Eastern Economic Review, and most lately, Chief Correspondent for International Finance at FT, Financial Times, based in Hong Kong. She's a highly respected journalist around the world. We are so very happy to have Hanny in person here, flying all the way from New York. Floor is yours. You will talk about the main theme of this session for whatever time you like to spend. Thank you. Okay.
Thank you. Thank you so much. You know, while I was sitting on the plane thinking about coming here, I was thinking about how all of us in this room have been the biggest beneficiaries of globalization. And we all thought that borders would only go down and never come up. And that world seems to have been passing. But even sitting here for the first 2 hours of this wonderful conference, I'm reminded that globalization isn't dead. And I thought Dr. Ban Ki-moon's speech was so inspiring, making us feel that globalization isn't dead. And while borders may be going up, they're still going down in many places, especially here, which is why I am so thrilled to be here. It is almost 35 years since I came to Korea the first time and met Dr. Il-suk-hung. And in that time, the world has changed greatly, but in some ways, I feel that Korea has not changed, and I mean that in the best possible way. The first time I came to Korea, I was so impressed by Korea. This country, even 35 years ago, was talking about how we have no resources here. But it seems to me you have the greatest resource of all, and that is human capital. And that is why I am so encouraged by every conversation that I've had in the past few days in Korea. And I think our conversation this morning will reaffirm that. I think the human capital here is the most important resource, and I'm confident that the challenges we face in this complicated world, that Korea will meet them. And I have learned so much since I first arrived, and I look forward to learning for the rest of this day. This is my first time here when I've not been a journalist. It's quite challenging for me to be at Blackrock, and I've changed since I joined 18 months ago, and I think Blackrock has changed as well. As a journalist, I was very happy to ask questions and focus on risks and downsides. Since I joined Blackrock, in part with the help of my wonderful colleague, our country head, Msci Choi, who's sitting at R3, I have learned to think much more about the opportunities in this challenging world and come up with answers. And for me, it was hard to join any firm but Blackrock after being a journalist. And I was in sync with all three of Blackrock's themes for the next decade. And Asia's a big part of that, and ESG is a big part of that. And at Blackrock, we've identified 4 areas to focus on. The first is decarbonization. The second is transforming mobility and industrial production. And the third is all about green molecules and things for which I need a chemical engineering degree, which I do not yet have. And the fourth is all about agricultural and sustainable food supplies and this sort of thing. And Asia is at the forefront of the challenge. You've heard some data points earlier, and I'll just give you a very brief summary. And this is from a McKinsey report, which points out that the single largest source of greenhouse gas emissions in Asia is the industrial sector, accounting for over 35% of the region's annual CO emissions. And that number is 60% higher than the global. And of course, China is over half of that. But that gives you some magnitude of the challenge. I wanted to just, because our CEO can't be here today, I thought I would just give you one or two excerpts from a recent speech of his to make you more familiar with how Blackrock sees ESG in the world today. And I want to emphasize that everything is so dynamic, and we're learning as we go, as all of you are as well. And I think one of the things we've really learned in the last few months is that the progress will not be linear. We will have steps back as we move forward. And one of the things that we've learned is that the transition has to be just. And there are trade-offs, and things may not happen as quickly as we thought they would. And balancing those trade-offs, as Henry Fernandez just said, will be a challenge. And what our CEO says is, and this is the context of the war, as more and more countries prioritize national security, we are seeing an immediate effect in both supply and pricing. This is what happens when you try to transition away from one kind of energy without figuring out how to replace it with another type, at the same time as people are dealing with high costs for food and basic goods. The transition was never going to be smooth or linear, but I believe both inflation and the search for energy security can ultimately serve to accelerate the shift to find new and more affordable and cleaner sources of energy. This will mean investing in wind and solar power and emerging technologies, including carbon capture and sequestering of carbon. And I have been so encouraged by what we're hearing today about what companies like POSCO are doing. And I have already asked POSCO if I can come back in 2028 when their first, experimental facilities using these newer technologies is ready, and I'm looking forward to that. One of the things that I learned when I was getting up to speed for today is that private market initiatives are becoming increasingly important for Blackrock, and we are putting our money and our clients' money in sustainable investing, especially in infrastructure. And one of my favorite projects that we've done is actually working in Korea for offshore wind investing to help Korea's journey to decarbonization. And if you're interested in that, I think our country head during the next break can provide you more information about that. We see that there are two main challenges. One is the direct impact on assets and operations of companies in the short term, and in the long term, what we refer to as transition risk, which jeopardizes the long-term profitability of a lot of companies. But that doesn't mean not investing in these companies. And something that has come up a lot in our conversations with people is the fact that there are so many investment opportunities as companies become leaders in decarbonization. And so it's not that we will not invest in companies, but we will ask, whatever sector you're in, whatever producing you're in, are you going to be a leader in that decarbonization? And that's where we see so much opportunity as an investor and one of the largest investors in the world today. And one of the subjects that's come a lot, and I hope we'll have more discussion, is how to create the incentives, and that involves burden sharing and the cooperation between governments, between public sector and private sector. And I'll love to listen to all of you and how you see that. I don't want to make much more comments and take much more time, but I just want to close with a few of the things that I hope we will touch on today. So I was in London at an ESG conference last month, and one of the things that came up with increasingly was to what extent are climate risks priced in the market today with the risks. You know, what is the timing of a transition that is just? What are the trade-offs involved? And Henry touched on this a lot. You know, if a company is very good on corporate governance, but less good on environmental, how do you rank it? And these are things that we will all be struggling with. And hopefully over time, we will have clarity of data and clarity of, and consensus on what are the right standards. Finally, I want to tell you all how much I admire the intensity and the determination of the Koreans. I share your impatience, and I look forward to learning for the rest of the conference. Thank you very much.
Thank you, Henny, very much for sharing Blackrock's perspectives on ESG issues. Just for your information, Blackrock is the world's largest asset manager with about $10 trillion assets under management, by far the largest, and largest shareholder of major companies around the world, in many cases. In Korea, for POSCO, for example, if I'm not mistaken, second largest shareholder of POSCO is Blackrock. And the largest shareholder is sitting next to me, NPS, National Pension Service, here. So, you know, major investors are well represented here for POSCO. Now, I would like to invite Professor Shin Sung-hwan, just with a brief introduction. Previously a senior financial officer at the World Bank, a committee member at the Financial Supervisory Service, president of Korea Pension Association and president of Korea Institute of Finance, and a variety of excellent experience he had. Mr. Shin, Dr. Shin is a professor of finance at Hongik University, and very importantly lately, he served as a member of the 20th Presidential Transition Committee as well. Dr. Shin?
Thank you very much for your introduction. And first of all, many thanks to Chairman Chung Kwang-ho for inviting me to this wonderful IGE and POSCO conference. And I am very much honored to participate in this first session with such outstanding panelists. The ESG finance has shown a rapid growth in Korea for recent few years. From Korean won, 144 trillion, which is about 110 billion USD, Korean won, in 2017 to Korean won 531 trillion in June. June 2021, so in 4 years, about 4 times bigger. And the number of ESG funds also increased rapidly from late 2020. As of September last year, the reported number of ESG funds was 111. ESG investment size of Korean public funds also increased significantly, and it is well over 100 trillion Korean won now, and keeps rising. ESG for long-term sustainability has become a key investment variable in addition to the traditional financial risk and return metrics. Now, most sovereign wealth funds and pension funds are actually implementing ESG investing, including NPS Korea, and large asset managers also align their interests with these asset owners. This trend will continue in this Yoon's administration. There are 110 policy tasks presented by the Transition Committee, and several ESG tasks are included in the tasks. And once it is included, it should be regularly checked by the government over the period of 5 years. So as one of strategies for task number 15, it is about public institution reform. ESG capacity building in public institutions and their partner private companies was presented. Also in task number 18, which is about financial and tax support for innovation-led growth, scaling up financial support for ESG-related areas was presented as one of implementing strategies. Moreover, as the Congressman An mentioned in his talk in this morning, one whole section was devoted in carbon neutrality from task number 86 to 89. Covering green economy, water and nature, ecosystem, dust-free environment, and circular economy. Through ESG investing, many of fair trade issues could be resolved, I hope, or at least mitigated. For example, task number 30 and 33 presents zero tolerance for technology stealth, meaning that one company steals technology from other company and use it without paying due proper patent fee. And this happens mostly in the direction that big companies steal technology from their small partner companies, and that becomes kind of dispute. And also the task presented in task number 33 was fair trade between supply chain companies. In the case of technology stealth, legal resolution typically takes a long time and requires lots of cost to SMEs. So even in the best case, SMEs win the legal fight for nothing. ESG can be a useful tool to discourage technology stealth for big companies because it will damage their ESG rating and shareholders may not want it. In the case of fair trade between supply chain companies, ESG investing can give an incentive to big companies to manage their relationship with their supply chain partner companies well. For ESG investing to be effective for its long-term sustainability mandate, there are several issues to consider. The first one is importance of ESG impact investment. Roughly speaking, ESG investment can be categorized into two. The first, investing in good ESG-rated companies, and the second, quite contrary, investing in low ESG-rated companies and then make change. For the sake of this discussion, let me call the former integration investment strategy. I think this strategy is kind of the terminology that is used in the industry, I think. And the latter, impact investing. Both investment strategies are important. for ESG investing to achieve the long-term sustainability mandate. Integration strategy gives incentives to companies to maintain good ESG rating, whereas impact investment directly brings about changes in companies. In Korea, most of ESG investing is in the integration investment strategy category. It is therefore necessary to increase the size of investments in the impact investing category and balance the two types of ESG investment strategies. The second, consistency and comparability of ESG metrics and reporting frameworks. There are multiple ESG measurement and reporting frameworks, but they typically lack consistency and comparability among them. There are many ESG rating agencies, and their influence on ESG investing keeps growing. Because their ratings are typically based upon the metrics and the reports, it is an urgent matter to develop a good standard for ESG metrics and reporting frameworks. Several multilateral organizations and even private institutions like WEF, IOSCO, and IFRS have been collaborating to develop a standard for ESG metrics and reporting frameworks. And I hope that they come up with good ESG metrics and reporting frameworks soon. The third one is accountability of rating agencies. In case of ESG rating, the relationship between ESG rating and the long-term performance of companies is difficult to prove. Therefore, the market-based quality control of ESG rating agencies may be a little bit tricky. Also, the incentives for rating agencies to put their best efforts for better rating frameworks can be weak. In this regard, how to impose an accountability to the rating agencies is a big challenge. And of course, a financial authority can step in, and this is the case of credit rating agencies in Korea, but it will also have pros and cons. Hopefully, the standardized ESG metrics and reporting frameworks provide a good common ground for ESG rating agencies to have better accountability. The fourth one is ESG benchmark. In investment, the importance of benchmark cannot be overemphasized. For ESG investing, right benchmark should be set up. If, for example, KOSPI, this is a general stock market index. KOSPI index is used as a benchmark for ESG investing. ESG investing is hard to be differentiated from other types of general investment. Therefore, it will be necessary to set up a proper ESG benchmark. And finally, of course not the least, the performance evaluation. The basic motivation for ESG investing is to consider the impact of non-financial factors to long-term financial performance of companies in investment decision. Therefore, how to evaluate the performance of ESG investing is not so obvious and hard to be 100% mechanical. This means that performance evaluation should be the first on a long-term base, and second, as transparent as possible so that the evaluation outcome can be agreed by related parties. Conclusively, ESG is an important paradigm shift in corporate management strategies, and ESG investing actually expedites this shift. And in case of Korea, public funds like NPS stand in the center of ESG investing. I hope that public funds play a leading role for this ESG paradigm shift in Korea. Thank you very much. 감사합니다.
Thank you very much. Dr. Shin, you shared very useful information about the new administration's policy agenda for ESG implementation. It was very much appreciated. I think they are very specific, very useful set of information that we can use and follow. Appreciate that very much. And some of the points you mentioned with regard to like rating standard and so forth, perhaps later on, will Simon, so you may have any sort of cross-country perspective on that point. Happy to have your views on that later on. Now let's move on with Mr. An Hyo-jun with a little bit of introduction for him. After serving as the CEO of Kyobo Aksa Investment Managers and CEO of BNK, that's the Busan in Gyeongnam, this banking group, BNK Securities and BNK Financial Group CEO. And Mr. An is currently Executive Director and CIO, Chief Investment Officer of the National Pension Service, which is one of the 3 largest pension funds in the world, with something like $800 billion of assets under management. Okay, Stan?
Okay, thank you. First of all, thank you for inviting me to this conference. And I think it is a great opportunity for MPS to communicate with the market on ESG investment. Today, I will talk about what we've done in the past and what we are doing currently and what we will do in the future. It might be a little bit boring, but as a CIO of MPS, what I want to emphasize on is we are doing our best only to enhance shareholders' value and try to be and should be independent from all other consideration when we implementing ESG investment, okay? Since MPS started responsible investment in 2006, through externally managed domestic responsible investment fund, we have gradually established the responsible investment framework. We joined the 2009 PRI. In 2015, we set up an ESG evaluation system on domestic equities. In 2018, for the first time among Korean pension funds, we adopted our own stewardship code. And to further boost the responsible investment, we have enhanced the ESG integration throughout the portfolio. Moreover, we plan to materialize negative screening approaches. In May 2021, the Fund Management Committee announced that it will limit investing in industries related to coal mining and coal-fired power. Immediately after the announcement, MPS stopped investment in new coal-fired power projects and commissioned a research project to find effective ways applying negative screening. We are now in the process of designing detailed action plans. Furthermore, we proactively conduct engagement strategies toward the companies we invest in. When key issues of focus are identified, we hold dialogues with the companies. Our responsible investment include our voting activities. We exercise our voting right for listed equities in the best interest of contributors and beneficiaries of National Pension Plan. MPS pays particular attention to ensuring transparency, impartiality in voting activities by disclosing the direction of voting right and a reason for voting against. Our responsible investment also include strengthening internal ESG strategies and encouraging capital market participants to promote ESG incorporation. In selecting external managers for equities and fixed income securities, we give higher scores to external managers. With well-developed ESG policies and practice in place. After the selection, we constantly monitor their implementation of responsible investment. In terms of brokerage firms, we have revised the selection standard. In a way, brokerage firms include ESG-related information in their company analysis report. From now, I will talk about three main areas we will focus on in order to boost responsible investment. Firstly, we will expand the application of ESG investing. This year, we will apply ESG integration strategy to overseas equities and fixed income securities. For domestic equities and fixed income securities, we already initiated the ESG integration last year. Secondly, we will more actively engage in dialogues with the companies we invest in. Currently, a discussion is underway to add key ESG areas of focus in engagement strategies for domestic companies, including climate change and industrial safety. For overseas companies, we are in the process of designing engagement strategies aimed at helping enhance their corporate value. Last but not least, we will strengthen our internal capacity and global networking. As a part of efforts to capture global trends and expand global networking opportunities, we joined International Corporate Governance Network, ICGN, and the Asian Corporate Governance Association, ACGA, in 2019, and Asia Investor Group on Climate Change, AIGCC, in 2020. Furthermore, we already decided to join Sustainable Accounting Standard Board, SASB, this year, and the process is in progress. ESG is another static concept. It is dynamic and quickly evolving, along with a global and macroeconomic trend. As you witnessed, actually, last year, the European Commission unveiled the revised version of EU taxonomy, a classification system for sustainable economic activities. The main revision is to include nuclear and gas as an eco-friendly energy source, and it is under review at the European Parliament. What is the most intriguing aspect in the process is countries had different views on nuclear energy. Countries heavily dependent on nuclear power support the Commission's plan, while others relying mostly on other energy sources oppose the idea to include nuclear and gas in the EU taxonomy. In the past, nuclear energy was considered only harmful, but now there is a perception that nuclear power is an efficient energy source that helps secure energy securities. I believe this was possible thanks to the change of perception and technological advancements. In addition, Russia's recent invasion of Ukraine is taking a toll on the world economy. It has caused disruptions to already distressed supply chains and led to further spikes in energy and commodity prices. Amid such situations, I believe that EU taxonomy will play a pivotal role in the green energy transition and energy source diversification in the EU region, and ultimately help ensure its energy securities. As such, ES has become a must for achieving sustainable economic growth worldwide. Thus, MPS will do our best to implement on ESG investment. I think what we do now will lay foundation for the future of our nation and for the future of the world as a whole. Thank you, and thank you for listening.
Thank you very much, Mr. Han, for your very comprehensive and accurate description of NPS ESG strategy, past today and tomorrow. You have a series of changes that you have implemented for sharing that information with us. Very much appreciate that. Just to give us a sense about why ESG, the concept of ESG and principles are so very useful and important for institution like NPS. That's because I had an opportunity to serve at NPS before. Essentially, there is that NPS liability is a long-term liability. It's a duration of liability is very long-term because NPS is there to serve retired people's living for a long period of time. So what that means is that the return on investment NPS makes is hopefully better be long-term stable and sustainable return so that we have a better asset liability match management. So if you look at it from that angle, I think NPS enormous interest in ESG management could be more understandable. Okay, thank you, Mr. Han, for your brilliant performance at NPS throughout your stay as a CIO. Also, okay. And now let's move on to Will Simons. Most importantly, we should thank Will for his making long trip from Australia this time around. So appreciate that very much. And Henny even it took 15 hours or so on the way here from New York because of headwinds. So you said 16 hours. Okay, all right. So, right. Yeah. Okay. All right. Okay. All right. Thank you very much. Okay. Okay. Right. This apparently this is not so convenient for us to have a good communication on this stage. Mr. Simons is as Deloitte's Asia Pacific Sustainability and Climate Change Leader. Mr. Simons has extensive experience in leading sustainability and carbon management infrastructure projects. Before joining Deloitte, by the way, Deloitte is the world's largest consulting group. Am I right on that? Okay.
Yes.
All right,
yeah.
thank you. I wouldn't say world's best consulting group. That's very judgmental, but as far as I know, it's world's largest and very informative consulting group. Before joining Deloitte, Mr. Simons was at COM, where he served as a project director on a number of climate response strategies for both national governments and multinational corporations. So, okay, well, floor is
Thank
yours.
you so much. It doesn't matter to me that Deloitte is the largest professional services firm. What matters to me is that we're the most impactful, and hopefully that's the case. And Henny, I win. It took me 22 hours to get here. But thank you so much for the invitation to this important conference, to IGE and to POSCO. So perhaps to start my remarks, I've been working in climate and sustainability in professional services for over 20 years. And I can tell you 20 years ago, we didn't have conferences like this. This has been an enormous change. And what we're seeing now is that the climate, ESG, sustainability agenda is one of the top agendas for C-suites and boards globally. And this is new. This is new, and this is a trend that really started only 18 months to 2 years ago. So there's been a huge change, a huge shift in the interest of our largest corporations in this agenda. And that's incredibly important. It's a critical shift. At the World Economic Forum meeting last month, Deloitte released the final in our series of global economic studies from our Economic Institute, looking at the upside and the downside of climate action. And what we found was that without rapid action to decarbonize our global economies, we face global economic losses of $178 trillion in the next 50 years. That's a number I can't even conceptualize. It's many multiples of the biggest economy in the world right now. But the good news is that with rapid response, rapid action, we have the opportunity to gain a $47 trillion upside. And so this is an incredibly important agenda for all of our economies. As well as being conscious of the economic costs and benefits, we also need to have in mind why this is important for our communities and for people. And it's important because the alternatives to rapid climate response are unimaginable. And it's the most vulnerable people around the world who'll suffer the most and who are already suffering the most. It's people who live in low-lying areas who are already suffering from extreme weather events, sea level rise, etc. And so I always like to try and center these conversations on our communities and our loved ones. That's why we're doing this. We're not doing it because we enjoy the theoretical exercise. We're doing it because the alternative is far, far worse. And so we need to decarbonise and we need to reduce the physical risk exposure of our assets and our communities to climate change that's already baked in. And as I mentioned, this is a new agenda. It's rapidly emerging. And what I see in my conversations with boards and C-suites is a great desire to act, but perhaps a lack of understanding of what to do and how fast to do it. And so what we need to do is reskill ourselves, build our capabilities as leaders to face into this agenda, to lead our organisations and our communities into this agenda. And I thought I might offer 3 themes of response that I'm seeing our clients leading into. And many of our previous speakers have already touched on these, which is, I suppose, both validating but also slightly irritating for me because they've stolen some of my thunder. The first is around partnerships. And we've heard several speakers already talk about this. We need to build new ecosystems for decarbonisation and risk reduction. This is because for many of our large companies, many of their greatest climate risks and ESG risks and opportunities sit in their value chain. And so, for example, POSCO, for POSCO to decarbonise, it will require its supply chain to provide zero carbon molecules through hydrogen or through renewable energy. It will also require its customers to accept the products that they're receiving in this new world. And this is equally the case for all large companies. None of our companies are islands. And so building these new decarbonisation ecosystems is going to be incredibly important. And I think in particular, there's a great opportunity for new partnerships between countries like Korea and my country in Australia. Korea will need enormous volumes of zero carbon energy for both its industrial processes and its electrical power needs. And Australia needs customers for its resources, and in particular as we transition our economy. And this will happen anyway. I have absolute confidence in that. The problem is that we don't have time for it to happen in the normal way, for the market to adjust in its normal way. We need to rapidly accelerate and decarbonise our economies. As we heard from Dr. Ban Ki-moon, we really have 7 years to go from where we are now to minus 43% to avoid dangerous climate change. And there's a role there for all of us. There's a role for us as business leaders, for government leaders to de-risk and establish the relationships and the rules. And there's a role for civil society to support this transition as well. So new ecosystems for decarbonisation. The second theme that I'd like to highlight is nature. All of our societies, all of our organisations rely on ecosystem services to exist: clean water, clean air, etc. And we cannot neglect the importance of nature as we decarbonise, both in terms of its inherent value, but much more importantly, as a key enabler as the ROI of decarbonisation technology decreases. Nature provides very cost-effective ways of uptaking carbon from the atmosphere, far, many orders of magnitude cheaper than emerging technologies like direct air capture. And we in Asia have some of the greatest resources of nature anywhere in the world. So many organisations now are starting to think about how they can better protect and leverage nature as part of their ESG journey. The third theme I'd like to quickly discuss is on governance, and we've already heard some comments on this. Deloitte published a study earlier this year where we surveyed 2,000 CXOs, so CEOs, CIOs, CFOs, etc., around the world on their climate change responses. And what we found was, I think, deeply encouraging. We found that over 80% of CXOs agree that there's a climate emergency. They feel hopeful that with rapid action, we can reduce the threats to their companies and to their economic systems. And they feel like their companies and them personally have been impacted by climate change. So we have the burning platform. However, only 20% feel like their companies are taking the actions to really move the needle. And importantly, only 20% felt that they have the capability and the capacity to lead their organisations into this new reality. And so of critical importance now, I think, is to support leaders, as I started my remarks, to support our leaders to build their capacity and capability to act and to lead their organisations into this new reality. Very briefly, I thought I'd touch on the finance sector, given the theme of this conference. The finance sector has an incredibly important role to play in decarbonisation and physical risk reduction. The finance sector needs to decarbonise their finance, and they need to finance decarbonisation. And to do this, they need data. They need to understand financed emissions, and they need to understand where to put their bets, and with whom and when. And so reflecting on another theme that we've been discussing around ESG ratings, this is where I think ESG ratings come in, to, as Henry mentioned, to enable more efficient capital allocation, internalising externalities into company valuations. He also mentioned the legal action that's underway by the German Federation with DWS and in the US with Goldman Sachs around allegations of material misstatements. He characterised this as a pendulum. I actually think of it slightly differently, that rather than a pendulum, it's an important step in the maturity journey of our system of ESG disclosure. ESG ratings are clearly now material for company valuations. 5-10 years ago, they weren't, and it was okay for marketing departments to control ESG disclosures. That's clearly no longer the case. We've already had mentioned some of the emerging ESG standards. This is going to be very helpful, but it won't solve the problem. What I hear from CFOs globally is that they pull their hair out at the alphabet soup of ESG ratings out there. What we need to do is go back to the fundamentals of how we're performing and disclosing that performance in a way that's material to the most important stakeholders of the organisation. And having the right metrics will certainly help with that. But I would say that the lack of a consistent ESG rulebook now is clearly not an impediment for regulators taking action where they feel that material misstatements have occurred. And so we're in a period of great disruption. This was not just predictable, it was predicted. Our entire economies are transforming from a fossil fuel-based system of production to a zero carbon system of production. What we're experiencing now will not be the first disruption on this journey. But as, again, Henry mentioned, with great disruption comes great opportunity. And as we're redefining capitalism, those that move first, that move most strongly and most intelligently, gain to benefit the most. Thank you so much.
All right, thank you, Will, for your perspective on this. And also you touched upon the role of finance, which is the key subject in the last session, but still it's useful here to talk about. Now, for the rest of the time, we have about 15 minutes left. I would like to have some sort of cross-discussion amongst ourselves on based on the earlier presentation. Now, perhaps I may pursue this a little bit further. Professor Shin mentioned this, and also Will also just touched upon this. Clearly, one of the issues that we face in ESG management, and especially with respect to mainstreaming ESG framework, is a lack of standard for rating system. There's some inconsistency there. Maybe a latest example is S&P's bad rating given to Tesla, to which Elon Musk responded very nastily, as usual, perhaps. And I don't think MSCI did that themselves. Apparently, there are different sort of rating system, and more so than credit rating system, which has become much more standardized than this ESG rating. Perhaps because it's still early stage, but are there any efforts, developments toward making this system more harmonized or standardized lately? Will, do you have anything in mind?
Sure. There is a bit of a sense and that has been emerging that as ESG has become of increasing interest to investors, the rating schemes have, I think, perhaps lost some credibility over the last few years. The Tesla example is a case in point at the same time as ExxonMobil being rated more highly. And so what I would suggest is that with the emergence next year of a new set of ESG disclosure standards from the ISSB, this will help enormously. What that will do is it'll provide a common language at the very least for disclosures. But what will remain is, as Henry said, what these are founded on are societal expectations of performance around ESG. Those are shifting rapidly, and their materiality changes between different jurisdictions, and that's changing asymmetrically. So for an MNC who's operating across multiple jurisdictions, it makes it incredibly complex because expectations in Australia might shift in one dimension of ESG. In the US, they've shifted very strongly towards the social and racial justice has been a huge issue there, but much less of an issue elsewhere. And so the rating schemes really struggle, I think, to stay up and catch up with those shifts.
Okay. Okay, thank you very much. Anything to add? I think it is very important to have a consistent message from rating agencies. It cannot be exactly the same, but broadly consistent message would be important for corporations because they get mixed signal from different agencies, and then it's very difficult for them, for corporations to pinpoint exactly where we should make improvement or else. So I think that that effort, as Will said, something maybe on the rise, perhaps in a year or two, we have a much more reliable system to be used in that case. Is anything you'd like to add?
Okay, and I just want to explain what we are doing for ESG ratings, currently. We have two different divisions. Actually, middle office function, we have a responsible investment division, and we have a front office function, domestic equity division and domestic fixed income division. We co-working together, we developed the ESG rating system for domestic equities and fixed income. By working together, the relevant factors, actually we categorize the A, B, C, D, 4 categories for ESG rating system for the investment. And depending on ESG ratings, actually we modify our rate on the investment. That is what currently doing. And for overseas equities and fixed income, actually right now we are in the process, for the research, how to rate the company rating on the investment, and we are in the process right now. I think hopefully we can implement to apply ESG investment rating strategies into global equities and fixed income together this year. That is what we are doing. And we are still long way to go, like, developing benchmark for ESG investment. I think it is, we have to outsource, customize the index for ESG investment. So we have a long way to go, but we gradually, step by step, actually enhance our, enhance to implement ESG investment strategy into our portfolio.
Yeah, honey?
So I have a slightly different take, but I think Tesla is a great example of the trade-offs that are involved. So from a corporate governance point of view, they're great questions, but from the necessity to move to cleaner transportation, you rate it very highly. So Blackrock more and more believes that our clients have priorities and everyone has to decide what their priorities are. And we hope, and we're moving in the direction of giving our clients more and more say. And you can't use the rating agencies as a total crutch. You have to decide what you value the most in this very complicated world where there are trade-offs.
Okay, that's a very good point. In fact, unlike credit rating exercise, we have a number of non-financial factors incorporated in ESG rating. Quite a few of them could have a different sort of weight at different rating agencies, meaning that some rating agencies may put greater emphasis on, say, E factor, whereas some others put relatively higher weight to a G element. Now, obviously, from that point on, the final rating would be quite different. So what sort of perspective or what sort of priority rating agency has would affect the different elements. So I think it's up to the corporations, perhaps, to digest what's involved in different rating systems. Right.
You must, have your priorities clear. And, Blackrock, is giving our clients more and more of an opportunity to voice what their priorities are as we all allocate capital in a more inclusive way.
Okay, all right. Professor Shin, you explained several areas where in the government's policy agenda for the new government reflect ESG elements. You described that they're very useful for us. Now, at one point, there was some expectation that the new government may establish ESG committee, if you like, to help implement ESG-related policies in a much more effective way. Is that idea still around, or it's not moving forward at the moment?
Actually, in the beginning of the committee, there were discussions about creating several the public and private presidential committee, and ESG was one of them, and the others are like pension and digital, the digital assets. But actually there has not been much progress after that. I guess there are several reasons, but I'm not in the position to explicitly say that. But at this point, I would like to say it's not clear.
Right. Okay. I certainly understand the situation there. Thank you very much. Well, perhaps this may be the last question that you may like to have your insight on. Now, since Deloitte is such a large consulting group, now apparently out of ESG, your main responsibility rests with E, mostly as far as your title goes. Although it's ESG, three items are not separable, but you may be more engaged in E. I may be wrong, but I would like to have your response to that. So what sort of demand do you get these days? Out of one of the questions that we often get about ESG consulting, roughly what sort of a proportion of a business, consulting business, that are being generated or demanded by corporations out of ESG? General perception is that given the huge interest in climate crisis, E components takes up, a majority of consulting, but sometimes we hear something different. So I would like to have your sort of view and experience on this.
Sure.
And the trend-wise.
So my own technical background is in climate change, climate risk and adaptation planning. So that is, I suppose, the lens through which I think about ESG. I do think that, and what I hear from our clients increasingly is that there are many, many issues that they need to address across the spectrum of E, S, and G. The thing that means that climate stands apart across that spectrum is the urgency with which we need to respond, the complexity of those responses, and the fact that if we don't respond, that lack of response will overwhelm progress, particularly in the S. Social disadvantage and vulnerability is amplified and accelerated by climate change. There's much research done into this around the world, and as I mentioned earlier, it's the vulnerable people who will suffer the most. Deloitte more broadly, this year our ESG-related revenues, which is, I suppose, one way of measuring the importance of this topic to our clients, represents around 1.5% of our total global revenues, which is a big number. I mean, it's a small number of a big number, which means it's a fairly big number. But that's growing at around 60% per annum. So as our leader across Asia Pacific, if I had 10 times as many people who I could put into the market to help our clients, they would all be busy. The demand has increased and will continue to increase exponentially for our services.
Okay. Right. Okay. Great. Very happy situation to have such a strong demand from clients. And it's good, in a way, good news for ESG management and its trend, because more and more clients, corporate clients, are getting serious about ESG management and system to take root in their corporations. So with that, I think we have to, unless you have anything to add, then we're exactly on time. I would like to close this session by saying thank you very much for a brilliant participation for this session one. Thank you very much. Okay, thank you.
Thank you very much to Dr. Chung Kwang-woo, as well as our distinguished panelists and speakers in our first session. At this time, we would like to take a quick break, a 10-minute break, before we start our second session. So we look forward to seeing you at 11:30. Thank you very much.
철이 세상을 진화시킬 때 환경도 함께 지켜지는 내일.
We would like to start our second session for today. So please take your seats. Our second session today delves into the theme of reshaping of the world order and global economic landscape, emerging new Cold War and its policy implications. To moderate our second session, we are honored to have Dr. Seo Gong-il, founder and chairman emeritus of the Institute for Global Economics. Among other distinctions, Dr. Seo Gong-il served as Minister of Finance and held key positions that include Director of Finance at the Korea Development Institute, Special Economic Advisor to the President, Chairman of the Korea International Trade Association, and Chairman of the Presidential Committee for the G20 Summit. Please join me in welcoming Dr. Seo Gong-il to moderate our second session.
Well, good morning, ladies and gentlemen. It's so nice to see you all in good health. I'm particularly glad to see Henny Sander, whom I met about 35 years ago. Of course, we're a little bit younger then, but she is still very attractive, beautiful, but she was more beautiful and more attractive than, of course. I'm so glad to see you. Well, it is indeed a great privilege to participate in this conference and to chair this conference, this session. The primary purpose of this session is to provide a foundation for discussing main theme of this conference, and that is sustainable growth and ESG. By first, quickly overviewing current global macroeconomic landscape, and second, highlight the rapidly shifting world economic and security order. For that purpose, we will first show you a pre-taped Zoom conversation between myself and Mr. Bob Zoellick. As you know very well, he's a former president of World Bank. In fact, this Zoom conversation was taped about a week ago. I will say a few words more on Bob Zoellick later. After the video presentation, I will invite Professor Park Chul-hee, who is from Seoul National University, to share his views both as discussant and keynote speaker for this session. Before we put the video on, let me just say a few more words about Mr. Bob Zoellick and Professor Park. Mr. Zoellick is a globally renowned U.S. public policy maker, scholar, and author. In fact, he recently published a book, which I brought here. It's titled America in the World, which is a history of U.S. diplomacy and foreign policy. I was surprised to know that this book is already translated into Korean, and the Korean version is already available in bookstores. In fact, this book published end of last year in the United States. Bob is a senior fellow, I'm sorry, senior fellow of the Belfer Center for Science and International Affairs at Harvard University's Kennedy School of Government. Now, a few words for Professor Park Chul-hee. Professor Park is one of the most distinguished political scientists and scholars specializing in international relations and diplomacy. In particular, Professor Park is a leading expert, I would say the leading expert in Japanese politics and foreign policy and diplomacy. In that capacity, I'm sure the current government may get a very close consultation from Professor Park Chul-hee, since we have to normalize or even strengthen our relationship with Japan. Currently, Professor Park teaches at Seoul National University and serves as director of the Seoul National University's Institute of International Affairs. With no further ado, let me now turn to the pre-taped video. By the way, Zelig and myself just had almost an hour conversation, which covered, during the conversation, we covered much ground, but we had to they shorten it and edit it into a 30-minute long video, which you will see. So inevitably, you may find there are some logical jumps and disconnections. Well, but I think you will get the essence of particularly what Bob Zelig have to say. Okay, could you please turn on the video?
Why don't we begin by having a quick overview of current state of global economy with special reference to the U.S. economy. As you know very well, the World Bank very recently put out its global economic outlook report with a stern warning that there is a possibility of stagflation. In fact, U.S. has been experiencing very rapid inflation. What is your assessment of the current situation?
Well, first, thank you very much for the invitation to be with you and to be with your audience. As you suggested, I think we're in treacherous economic waters. If you look at the core points in the World Bank Economic Outlook Report, you first have supply side shocks and high inflation after a protracted period of monetary expansion, which we know quite well. But also, particularly in the US, we've had very strong fiscal expansion. And all this is in the overall context of a debt buildup. And so that would suggest, and certainly the Federal Reserve is moving in this direction, that we're in for an era of higher rates. And given the debt in developing countries, the World Bank was trying to signal the particular dangers for emerging markets. Now, to give your audience a fuller sense of the US situation, I think there's a challenging combination the Federal Reserve is trying to work through. First, there's very strong demand. And at least in my view, the government stimulus last year was too large. So we had a strong fiscal response. Then you've also got the supply side constraints and shocks. And as the Federal Reserve has pretty much admitted, they misjudged the situation and now they're trying to catch up. And as you know, that's always a challenging position for central banks to be in. Despite the higher inflation, spending in the US still looks resilient. There are capacity constraints, and that will take either time to fix them or adjust it in a downturn. The labor market conditions remain tight. And so I think the stress, as in developing countries, will be most on the lower income. When you talk to the bankers in the United States, the middle class has some cash buildups, which they're still sort of working through. So I think one of the challenges is even though you've got inflation and they're trying to create constraints, you still have the demand. So I suspect we'll see some short-term decline in inflation, But because frankly, as you look at the 12 months period, some of that's built in. But then I think over the course of this year and next year, you have to expect either more tightening or more inflation. And as you know from your experience, the challenge is monetary policy has to be anticipatory. And so in a sense, I think we're still going to have to face the fact that there's going to have to be some slack to reduce the inflation that's already built into the system. And so it gives me no comfort to say, but I think the most likely scenarios that I would see are either stagflation or even possibly a recession. Now, to bring this back globally, of course, the forces of deglobalization and supply shocks will add friction. And to bring it back to the developing countries, if you take the Fed tightening, the enormous strain for some countries because of the food problems coming out of Russia, Ukraine, the absence of cooperation, interdependence hasn't been lost. We've just sort of added costs and frictions, and we still have the spillovers in the system. So I think for Korea and for all the economies, it's going to be heavy weather economically.
Yes. You just briefly mentioned the Russian war in Ukraine. In fact, that also exacerbated the already existing inflationary trend. The war in Ukraine now is exhibiting very serious and significant impact on the existing global economic order and the security order and geopolitical implications and so forth. So since our main interest is in this area of world order and geopolitics, could you share your insights with regard to this Russian invasion to Ukraine?
So for your audience, I think it's important to start with the most basic point, which is the mindset of President Putin in Russia.
Yeah.
And he's explained a lot of this in his own writings. He's very focused on Russian history and his place in Russian history. And he believes that Ukraine was never an independent part of Russia. And after his action in 2014, where he invaded Crimea and some of eastern Ukraine, he had hoped, I think, that shock would pull Ukraine towards Russia, but it had the actual opposite effect. Ukraine was being pulled west. He spoke to Bill Burns, who's the CIA director, a former colleague, a friend of mine, at the end of last year. And Putin said something to Burns that I found very telling. He said, "What choice do I have?" Now, of course, he has many choices, but what that gives you a sense of the mindset that Putin felt at age 69, Ukraine being pulled west, that he had to act. And I think this also means he had a growing appetite for risk. I think his intelligence about what would happen in Ukraine was poor. And he's made a big miscalculation. As we saw, the Ukrainian defense was quite stalwart. But what I think it also means for all of us is I wouldn't expect Putin to retreat easily. In fact, I would expect the opposite. I think that he will be doubling down. So what are the possible outcomes? Well, one might be a rump state. That would be Putin's hope, where he could squeeze it. Another would be a stalemate. And this is one that Korea is very familiar with. Then there's the possibility of settlement. I think President Zelensky of Ukraine has sort of signaled what he might like to try to achieve here, but he's got his own public opinion to deal with. And he said that any settlement would have to go to referendum. Then there are the broader issues. For example, we've seen the interest of Finland and Sweden sort of joining NATO. Another issue that Korea has been an important part of is the sanctions regime. And I think the biggest surprise in this area was the effectiveness of the controls of the Russian reserves. And there are about $300 billion of reserves, whether they're held in dollar or euro or pounds or yen or others. And those have basically been blocked. And then we have the food and energy prices that we alluded to. So I was at the World Bank, as you will recall, you were working on these issues for Korea for the 2010 summit. We had, at the time of the global financial crisis, a huge food price crisis.
Right.
And there were about 50 countries that suffered riots or major upheavals. And I think we're at risk of that again. So then there's, I think, two other big geopolitical questions here. One is China. China, Xi Jinping and Putin had, I think, about 38 meetings. Xi referred to a no-limits partnership with Russia. But he's being careful. He doesn't want to risk sanctions being imposed to China, so you see the state oil companies and the banks are keeping some distance from China. He doesn't want Putin to lose, but he also doesn't want to get drawn into the morass. And I think the other part that for Korea and the United States to keep in mind is while there's been an impressive coalition of which Korea has been an important part, one also sees there are a number of countries that are uncertain. I call them the abstainers from some of the UN votes. So if you look across Africa, Latin America, Asia, and others, and frankly, this is an important part of your question on economics, they've got other concerns. They're worried about food prices, energy, sanctions, COVID, and the United States and Europe and others in Asia are going to have to pay attention to some of those concerns.
Since you mentioned China, maybe we turn to the intensifying U.S.-China rivalry and competition and its impact on the existing post-World War II liberal economic order. China, unlike earlier decades, now does not want to hide its ambition to become a hegemonic power, perhaps by 2050. And U.S. policymakers, particularly the Biden administrations, is unlike Obama administration, which had the rhetoric of pivot to Asia. But Biden administration at least initiated what you call IPEF, Indo-Pacific Economic Forum, and the Quad, and the AUKUS, and so forth, which all worked to counter the Chinese security and economic dominance. But the thing is that the IPEF is fine, and the Korea decided to join as well. But IPEF does not have the access, provisions for access to US markets. So people are wondering how much it can do in increasing the US economic influence in the region. So I mentioned all this and to get your reactions and your insights in this regard.
So I think coming to the Biden administration, the good side is they recognize the need to repair important alliance ties, including with Korea. I recall during the Trump administration writing and pushing to make sure that we could keep the US-Korean free trade agreement, which is an important dimension, and also recognizing the security ties. And as you said, Biden, I think, has done a good job by building on that with the AUKUS arrangement, which is more than submarines. That's looking towards future technology arrangements. The Quad, which involves India. As you know, that isn't an alliance. India will always want to act with strategic autonomy, but it's important to bring them in the process. I think the failing, as you hint at, has been on the international economic side. Unfortunately, the Biden administration still represents trade protectionism, and I think that's a big handicap for the United States. So while I'm glad that they moved, they at least recognized the issue with the IPEF proposal, but as one friend said, well, it's rather weak tea and we're not sure when it will be served. And so the question, it's an interesting framework, but how would it be filled in? Obviously, it would have been good if the United States had stayed in the Trans-Pacific Partnership. I think this will be one of the historical failures. the politics here don't look good for joining TPP. I hope someday, by the way, that Korea joins TPP as well. I think it would be good for the Korean system as well. But I think then the challenge will be, and this is one of the things I push, and I hope our allies in the region, which is to urge the administration to keep looking for ways to play a leadership role again on trade and the international economy. Honestly, I don't see the current U.S. Trade Representative is doing that. She doesn't speak in those terms. The Secretary of Commerce, Rolando, has been sort of more positive about it. But importantly, I think even when I talk with members of Congress, there's a recognition the U.S. is falling behind. So whether it's digital or whether it's some of the other topics, I think this is an area that with good partners such as Korea, we need to turn around the present policy.
I fully agree with you, and Korea should be an important part of the partnership with the United States in those areas. By the way, the Korean government decided to apply to join CPTPP.
Oh, excellent.
Yeah. You know, in this connection, in your other contributions and writings in Wall Street Journal and Financial Times and Foreign Affairs, you've been saying that the Americans, globalists and the internationalists at heart. Could you elaborate on your point on this?
So what's interesting is if one looks at surveys of U.S. public opinion, the percentage of Americans who say that trade is important for the U.S. economy and even for jobs is often in the high 70s. People understand the nature of the connection. But I think what's happened is we've had a breakdown in that while the phenomena of globalization remain very strong, the governance of globalization, the rules, the systems, the institutions, those have frayed and have fragmented. And I think in the case of the United States, you do have protectionist constituencies, just as you did in Korea. They're often concentrated in certain political areas. So this is one of the challenges that you're starting to see a greater debate on the United States. You're starting to see people recognize if they're worried about inflation, trade barriers are not going to help the problem. So in fact, the administration just finally took some steps to remove some of the barriers for solar panels because they want to expand in the solar area. And then there's the questions about falling behind. And obviously the US is falling behind in East Asia, where you're seeing a greater regional pull of economic power centered on China. This can't be good for the United States or its friends in the region. I think what this relates to the broader discussion we're having is there is a recognition in the United States of Chinese economic power. There's a recognition of the importance of the Indo-Pacific. And if we fall behind economically, we're not going to be serving our strategic interests.
Yeah. Yeah. The reason why I mentioned the market access provision in relation with CPTPP is that Korea and US, we don't have much problem. We already have Chorus FDA. But Southeast Asian countries, for example, you know, one of the US foreign policy objective is to counter Chinese, particularly economic influence in this region. Then Southeast Asian countries are important, and their access to the US market.
I think when President Biden came into office, he had two priorities. One was to overcome the pandemic, and second, a good economic recovery. Those would be the key to his success. And unfortunately, we've seen some stumbles in both. We talked about the economic recovery. In some, I think they overdid the stimulus. And on the pandemic, we've learned that it's something that people are going to have to live with over a longer period of time. We're going to have different variants. And so in addition to vaccinations, you're going to have sort of ongoing treatment. I thought that the Biden administration's natural approach to foreign policy would be to link its international actions to some of its domestic priorities. And this involves what some scholars call the transnational agenda. So for example, focusing on the climate agreement or focusing on COVID and vaccines internationally. They made some progress on some of these, but I think that's, it hasn't really carried forward as a success for the president. But I think on the positive side, I think the administration gets generally good marks for its handling of the Russian invasion. The US intelligence was ahead of the curve and people were trying to warn people. So I wrote a piece recently that drew a comparison between President Truman in the late 40s and Jimmy Carter in the 70s with Biden. And the similarities were that all three of them faced inflationary problems. All three of them were struggling to hold their party coalition together with pressure from the left. And all three of them faced dramatic international events that they didn't expect. And the question was whether a president can adjust the course. Truman did, Jimmy Carter didn't. And so I was outlining how I think one of the challenges for President Biden is whether he explains to the American public the changes in the world and how the US policy will also have to change, whether it's our sort of military position and work with allies, whether it's some of the issues about safety and security at home. And then finally, a different type of international leadership, dealing with some of the issues that we've talked about today. I think this could be done, but as you know, it's not so easy to make these political changes. So we'll just have to see how that plays out.
Yeah, in fact, I really enjoyed reading your column you wrote in Wall Street Journal since you headed the World Bank and so-called one of the legacy institutions along with the IMF and the WTO. And WTO is not really functioning well at all. Since their reforms and changes are so difficult, we need informal global governance forums or institutions such as G7 or G20. In my view, I think G20 is more inclusive, and although it's cumbersome, but it does have successful track records. In fact, I've been advocating, I've been suggesting to the Korean government, previous governments, Korea should take ownership. Based on my personal experience, we can do it. Korea, country like Korea, which is considered a middle power country, and we can gather like-minded countries and we can exert a collective leadership. In this regard, again, could you share some of your insights?
Well, I think your observations are exactly right. In particular, let's start with a word on Korea. Korea is both one of the major beneficiaries and success stories of the multilateral system. As you know, in 1950 or 53, the economy of Korea was pretty low on the list. I think you were there, you were below Egypt at the time. And here you've become one of the top 10 economies in the world. And in addition, you've done it without the natural resources that some countries have. And you see this with a very active technology sector. And I might add something we can talk about a little bit more. There's a soft power dimension of Korea now through your sort of music and sort of entertainment that is quite popular all around the world, including in the United States. And then, of course, you had the transition to democracy in the 1980s. So this is a tremendous story for the rest of the world, standing in very strong contrast with the DPRK to the north. And so, like you, I've always supported the possibility for Korea to build on that record and to help catalyze the actions of others. When I was at the World Bank in 2010 and President Lee and you were chairing the G20 summit, I saw this as a very good opportunity for Korea to look beyond the peninsula and look to the region and globally. And that's what I saw the president trying to do at that time. And this is partly important because in foreign policy, there's often discussions today of the great powers. So United States, China, the EU on economics, Russian military, India. But we also have these transnational issues that I keep alluding to, whether it be biological, economics, climate, or others. And frankly, we're not going to be very successful in dealing with transnational issues unless we can figure out how the powers can work together. But you also, you mentioned something that I want to draw out, which is that the G20 has the benefit of being inclusive. It has the downside of having a lot of countries, because as you know, in addition to the 20, they invite, a few other sort of countries. So it becomes a little unwieldy around the table. And in that context, it's very important that in addition to the United States or the EU, that countries such as Korea might be able to prod action if they partner with another country. I think, as I recall, South Korea did some of this with Australia at the time. But, and frankly, if you have countries that do this across from different regions, different stages of development, different experiences, you create a small group. And sometimes that creates an opportunity for the bigger countries to sort of join in a way where they may not be able to do it in a frontal pattern. And in that context, one of the things I've always admired about your institute and the work you've done is that, without trying to overreach, I think there's an important role for Korea in this.
Thank you very much. In fact, I concur with you, and Korea is a success story of adopting right system and right strategy, right policies. Now, what's your assessment of the North Korean issue and the Trump and Biden administration's policy toward the Korean Peninsula?
One reason that I was really delighted to try to be with you today was to build on my sense that Korea is an incredible success story, and over the past 25 years becomes a leading economy. You and I were talking before with the benefit of, I think it's Netflix now, I've been watching Korean films with English subtitles. My favorite is The Crash Landing on You, and I gather the two stars even got married. But this is representative of the fact that there's a creative side of Korea that you see it in the music and other sort of developments and entertainment that also demonstrates something about Korea's sort of wider reach. And we see it in the technology field as well with some of your sort of the advanced companies, whether the cutting edge with semiconductors or sort of other materials. So at the same time, you've had these successes. You're at the cockpit of Northeast Asia among even bigger powers. You've got Russia, you've got Japan, you've got China. Yeah. And you're the meeting ground of those powers and have been historically, where the US has played a distant role 100 years ago, but more actively over the past 50 or 60 or 70 years. And I can see where that creates a certain defensive psychology in Korea. At the same time, you want to look outward. And I think there's always a challenge for Korean political leadership to strike a balance, which is you're still part of a divided country and there's a focus on the North, but also whether the degree to which leaders will focus on the regional and global dimensions. And as you may know, I was actually the lead US official on German unification in 1989-90. So in the 90s, I met many Koreans talking about prospects for unification. And obviously the circumstances are very different. No one can predict. But I remember suggesting that under any scenario, it was important for the Republic of Korea to have the partnership and trust and confidence of others in the region and globally. So the types of efforts that you made with the G20, I think were not only reflecting Korea's accomplishments, but I think they reflect the strategy of Korea and its future on the peninsula, but as well as regionally and globally. And so I think, today, part of the challenge is for Korea, you have to focus on issues at home, you have to focus on issues of the peninsula, but in the context of the APEC, the G20, the UN, your security alliances. And I believe, and always have believed, that if the Republic of Korea is seen as a contributor in these other contexts, I think you're more likely to get the support on some of the existential issues that Korea faces on the peninsula. This, of course, brings us to the sensitive issues about relations with Japan, which I know have deep historical roots. But obviously, insofar as Korea and Japan and the US, as well as Australia and India and others, can develop closer relations, I think that'll be good for everybody. That's obviously an issue only Koreans can deal with. As for the North, you and your audience would have more experience with this. I think we always have to have a sense of humanitarian ties when, the people of North Korea are not the ones that are the cause of this. And so, in terms of their malnutrition or sort of basic needs, I think we all have to be responsible. On the other hand, I think we have to be sensible about deterrence and showing strength, because the North Korean regime has clearly tried to intimidate South Korea as well as Japan, the United States, and others. At the same time, I think we need to be cognizant of North Korean tactics and how they try to use these missile tests and others to intimidate. We don't want to overreact, but we also want to keep the door open. And in that sense, coming back to President Biden, I think, the United States always needs to respect South Korea's decisions on this and be sensitive to it. And you've got your own politics on these topics. But we can be supportive and attentive to, because the Northeast Asian region we've seen throughout history is a critical area of security for all of us. And with South Korea's success, fortunately, it's also now become an economic engine for the world. But it's vitally important, and this is where I think your symposium plays a key role, to keep looking outward and see how Korea can contribute, but it can also become a partner and draw in people from the United States and the region to be your partners and friends.
Thank you very much. Bob Zoellick, as a friend of Koreans, your advice is well taken. By the way, very recently, President Biden and our newly elected President Yoon had a very successful summit. The two nations' existing security and military alliance was strengthened and upgraded. Well, with this, I think we can go on, but we should end our formal conversation here. Okay, thank you very much.
It's always a pleasure to talk to you, and I'm really glad I had a chance to speak to your audience.
Okay. I forgot to mention that Bob Zoellick served the U.S. Trade Representative and State Department's Undersecretary. During his tenure at the U.S. State Department Undersecretary, he played a key role in the process of two Germany's unification. So-called 2+4 process was led by Bob Zoellick. That's what he briefly mentioned. Well, with this, why don't we invite Professor Park? You have 10 minutes.
Thank you. Thank you very much. It is extremely honored to, I'm really honored to be invited to this panel as a panelist. I have an endless admiration for Dr. Sagong-il for his policy expertise, global network, and an intellectual leadership, not only in Korea, but also in the entire world. I come to realize that this is co-sponsored by the POSCO Group. I have to tell you that I was a recipient of the POSCO scholarship when I was studying at Columbia University in the United States. So I wanted to thank first to the POSCO Group as well. even though Dr. Sagong gave me a role of discussant and keynote speaker, I would say that I'm not a keynote speaker. I would say I would place myself as a footnote speaker. Having said that, I have reflecting on the stories, wonderful dialogue between the two. I just add up my own viewpoint, partially rephrasing the dialogue contents. I think I'm not a specialist in world economy, but there are major sources of disrupting world economy. I would list up three major sources of disruption. One is definitely corona pandemic. I think because of the kind of spreading pandemic globally, this changed the kind of economic situation a lot, the shrinking consumptions, which led to the stimulus package and overflow of money, which is led to a kind of increase of interest these days. So that is kind of also the supply chain has been disrupted partially, and also transportation network has been disrupted. So I think we have created a kind of a rather abnormal situation for over the past 2 years. And I think we are recovering, but with a possibility of stagflation. So I think that's one aspect we have to watch on. And second one is a kind of a Russian invasion in Ukraine, which is a kind of unusual development because after the end of the Second War, even after the end of the end of the Cold War, our expectation was that no major countries will provoke a war or invade into other countries. But Russia showed the kind of possibility that even a great power can invade a neighboring countries like Ukraine and the Crimean Peninsula, which was a surprise. And this is a kind of, this situation is destabilizing entire Europe and the world. But I don't know whether that was a kind of a very creative and innovative bet for Putin. Ironically, the Russian invasion to Ukraine is strengthening NATO. And then the membership is further enlarged in Europe. And other countries have an alarm. And I don't know how much trust that we have about Putin and the Russia's leadership in the future. So I think it's a losing game, but because of this situation, the supply chains in not only natural resources, food, and the critical materials, they are all affected by this, the global development. And much more fundamentally, the rise of China and increasing competition between the United States and China is directly affecting us. And it is not just a kind of a issue of capability. Everybody knows that China has economic, technological, and military capability. But the increasing chance of the muscle training for revising international order. So of course, the US administration already defined China as a revisionist country, but we can find so many instances that China is trying to change something in their own favor, regardless of any criticism from outside the countries. So when the Britain returned Hong Kong, they said that, okay, the one country, two system, actually they are making a one system actually, rather than respecting two systems. And they are increasingly provoking neighboring countries in the South China Sea and East China Sea. And then they're not accepting Google. So digital blockade is here, and they are trying to find their own alternative to manage the digital world. They are even talking about the possibility of unifying Taiwan with some physical forces in the future, which is a kind of great concern, not only to neighboring countries, but I think Korea would be directly affected if that happens. So, and furthermore, even though North Korea is increasingly getting provocative, China and Russia and are cooperating together, even by using their veto power at the United Nations when he tried to make a new resolution. I said, so this is a kind of relatively new development, and we are living in a different world. I think after the end of the Cold War, many people had some kind of hope and the optimism about the future progress of the global civilization, but actually that optimism is on the decline as time goes by. Many people that thought that, like Fukuyama said, at the end of history, so Cold War history ended, so we will have a kind of a democratic peace. But we come to find that the authoritarian or non-liberal regimes are very resilient and trying to challenge US leadership or rules-based international order. And we have that great hope that with the increasing globalization and increasing interdependence, so national border would be meaningless, and then have countries would be more and more interdependent. But it is not the case, actually. There is a kind of a movement toward the deglobalization or even anti-globalization in many parts of the world. So that's the reason why I think supply chains are disrupted. And as Dr. Sagong mentioned, we have that kind of hope that the multilateral governance system in the world, represented by the WTO, the kind of things would work to integrate the world, and then many countries would be rule-following countries, but actually the WTO itself is not working properly. And then some countries are trying to violate the rules, even though many countries are following. Fundamentally, much more fundamentally, the United States, we have expected that the United States would play a very leading role as a global hegemon and global leadership. But as you can see, US leadership is relatively on the decline compared to the past. So I think with the development of all this and the reflecting development of some kind of, not pessimism, some despair, I think the United States is changing its strategic posture inside and outside. One, I think the major trend is is represented by 2R. One is a restraint. So rather than trying to deeply engage into global affairs in every corner of the world, they try to limit their possibility, use of force and the use of their capability in a certain area, in a selective area, and try not necessarily retreat from the world, but trying to restrain. So we saw with the United States is retreated from Iraq and Afghanistan. And even though there is a kind of crisis in Ukraine, United States is not dispatching its forces. Of course, there is an alliance relationship, but still, it's a kind of very cautious approach toward European affairs. So instead of U.S. playing a kind of the leading role, intervening every global affairs, the U.S. is encouraging other countries to join the U.S. efforts to govern the global affairs. That's restraint. Another trend is what I call reform or restructuring. So in order to regain global competitiveness, they are correcting their practices and then try to restructure their domestic political system, their political economic system, and the global governance system. So not only in investing more into the infrastructure and R&D and education and technology, also trying to change a kind of strategy to reshoring and then inviting more investment into the United States. So it's a kind of a domestic restructuring is going on. But at the same time, at the global level, they try to rebuild the global governance system in a slightly different way from the past. I think that is reflected in a three-way reposturing. One is trying to build a network, rebuild the network of allies and democracies. So I think Bob Jellick's categorization was very interesting. I would say that there are cooperators to the United States and some abstainers, what Bob Jellick called, and revisionists, rebellions and challenges against the rules-based international order. So by rebuilding the network of the friends and allies, the United States is trying to gain a competitiveness again. And the other move is a kind of, rather than relying on multilateral governance institutions, I think I would call it a multilateralism. So kind of trying to gather like-minded countries and then making a kind of trusted network among themselves to manage global economy and other affairs. What Dr. Sagong mentioned, the Indo-Pacific Economic Framework is a kind of typical example of that. And then even though the United States is not a direct partner, the CPTPP is the similar kind of the multilateralism. So I think it is another the adventure to regain competitiveness on the part of the United States and other allies. And I think a new area they are developing is the economic security. And so when I visited the United States as a delegation for President-elect Yoon, the Kurt Campbell emphasized the importance of economic security a lot. And then Korea should also have the high-ranking official in charge of security, economic security. So Dr. Wang Yunjong became a person in charge. But what Dr. Campbell told us was very interesting, that in order to manage economic security issues, the three areas should be combined: security, national security and geopolitics, and technology and commerce. So I think that is a kind of an effort to protect the key technologies and especially cutting-edge technologies, and then try to secure safe and sustainable supply chains. So I think the U.S. is moving that kind of posture not only to South Korea and the world. So I think Korean choice should be that South Korea should actively join this reforming a global level, the institutional rebuilding, and participated as a kind of a rule maker rather than rule taker. I think the decision to participate in IPEF was a kind of the strategic decision, and we have to strengthen alliance with the United States for the safety and security of our country, but also to broaden our diplomatic horizon. And finally, I would say that even not because I'm a Japan specialist, I think the Korea, the normalizing the relationship between Korea and Japan is a linchpin of Korean diplomacy to look beyond the Korean peninsula. So it will make us secure in the framework of trilateral cooperation. Also, it will be a kind of a big platform to get into Indo-Pacific area much more comfortably. Sorry, I speak a little bit too long. Thank you.
Thank you very much for your very illuminating views and insights. Since we are over the time limit, but so I don't think I should try to summarize what's been discussed with all of us. But I do want to highlight and underscore two major points came out by my conversation with Bob Zoellick and Professor Park. First point regards the current state of the world economy and its outlook. As Bob Zoellick puts it, the global economy, in short, in a treacherous waters. I think this tells everything. The real problem, in my view, with this is not a temporary or short-term thing, short-term phenomenon, but the problem is structural and medium to long-term in nature. Therefore, it is critically important to keep our economic fundamentals sound and strong. I emphasize this, particularly I have the fiscal consolidation in mind as one of the economic fundamentals. The second point has to do with Korea's role in the international arena. Korea being one of the major beneficiaries of the post-World War II liberal world economic order and security order must do its parts in help maintain or preserve the system currently under severe threat, primarily due to global geopolitics and what I call global leadership deficit. So Korea being a middle power can exert, should exert the leadership in cooperation and collaboration with like-minded countries. In my view, based on my personal experience during the full course of 2010 Seoul G20 summit, can do it. Korea can do it because we have advantage of not being superpower, but we have enough clout, so we can contribute and can do our part. So with this, so my 2 points, particularly, I may emphasize this since we just have new government installed, and so I would like to send this my views to policymakers. Well, with this, I think we have to end, and everybody's getting hungry, and so we have to end here. And thank you very much, Professor Park. And actually, I will talk to Bob Zelig is tomorrow morning. It should be to thank him. Well, with this, we should end here. Please give big hands to Professor Park. And
thank you very much to Dr. Seo Bong-il for moderating our second session, as well as our distinguished guests, Professor Park Chul-hee, as well as Bob Zelig. We hope you enjoyed the first 2 sessions of the IGE POSCO Group International Conference. At this time, we would like to invite our offline guests for a special luncheon provided for you. During the luncheon, as mentioned before, we will play the pre-recorded keynote by Dr. Robert Merton, Nobel Laureate in Economics. Thank you again. Please enjoy your luncheon, and we will see you at the 3rd session this afternoon, starting at 1:40 p.m. Thank you.
It's my great pleasure to join with you in this consequential occasion to discuss global economic challenges. I will offer my observations on addressing these challenges using finance, in particular finance science, to solve these challenges. I'm going to do so by a series of examples of applying intangible financial contracts to solving very tangible economic problems. Now, a well-functioning financial system is essential for economic growth, development, and stability. And the economic system is improved through financial innovation, and the development of financial innovation is driven by 3 things: science, of course, technology, and economic need. That's what we need to get the implementation. Now, some will say there's a real sector and there's the financial sector, and they're separated. That's a fiction of out-of-date macro textbooks. The 2 are inexorably connected. And while finance may be intangible, it absolutely has very tangible impact. And I'm going to start with, talking about the period in history where finance science, which had developed between the 1950s, I would say, and the end of the 60s, finally became connected to finance practice, and inexorably so. And this was resulted in the emergence of what we call financial engineering. Financial engineering, whether it's in finance or anything else, is simply the application of science to solving real world problems. So if we take ourselves to the period, the 1970s, when there were great crises were created, a series of major economic shocks and financial events that first hit the United States and then spread throughout the world. And as you can see here on the list, for example, we had the fall of Bretton Woods. Currencies have been fixed around the world for 4 decades. Suddenly they're all fluctuating and no longer connected. Second, we had the big oil crisis. We didn't know we were going to have a second one. And oil prices went from $2.40 a barrel to $14. In the United States, we had double-digit inflation, the highest we've seen since the 1920s. And sadly, so there's deja vu today. I hope not as much. Double interest rates, highest again in US history. The stock market fell by 50% in real terms in an 18-month period. There was no mortgage money for housing. Why? Because with double-digit government interest rates and a cap on what banks could pay on interest, nobody was putting any deposits in. Now, on top of all this inflation and everything else, we had another problem, high unemployment. You're not supposed to, in economics, to have both high unemployment and high inflation. Treating those when they're both there is a very difficult task. But it happened. We call it stagflation. Let's hope that doesn't happen again. Now, what was the response from all these shocks? Well, unlike in 2008-9 crisis, the great financial crisis where innovation stopped, there was an acceleration and a wave of financial innovation that through the 70s into the 80s, actually continuing to today, but really during the 70s and the 80s, it was just an explosion. And these innovations will later be adapted around the world. I've listed here a few of these that were designed to address all these new risks that have come upon us. Now, I've got so many, about 2 pages of 2 slides worth. So this wave of innovations that all took place at this time had the feature that it not only addressed the risks of that crisis, of the moment, but it created a series of permanent improvements to the system that we've been earning the social dividends on for the last 40-odd years, and will continue to do so. So finance, with all these contracts, really did have a great and permanent impact on the economic outcomes. Now, what I'd like to do, I want to take you through a real-world example from a later period in the 1990s of how we can use financial contracts in an engineering way to solve physical important problems and do so with greater efficiency. And by the way, even though this is an example from 30 years ago, it has a 2020 tail to it, as you'll see. So going back to the early 1990s, Germany had reunified and as a policy matter, wanted to bring the East economically up to the West. And in this particular example, Leipzig, the city of Leipzig was in the East. In order to grow, it needed to have more electricity. To get more electricity, it had to get more natural gas to the city. And so it had a choice of how to get the gas. And it had really 2 alternatives that were offered to physical alternatives. One was to take its gas from the West, the short pipeline from the North Sea. The other was to get its gas from the East, from the Russian grid, with a much longer pipeline. Now, it would seem natural to say, why not take the less expensive pipeline from the West and move on? However, the Russian deal offered not only gas, but it offered a fixed price for gas at so many Deutschmarks, this is before euros, so many Deutschmarks for MCS for 15 years. So they promised a fixed price for the gas for 15 years. The city managers, as well as the head of the CEO of the pipeline company, were actually very attracted by this. And so they were leaning towards doing the Russian deal. A bank, JP Morgan, it happened to be, who had a division that did financial engineering solutions, got wind of this. And the idea was, can we come up with something better for Leipzig than these two alternatives? And certainly better than the Russian one they were leaning to. And the answer they came up with was a very simple one. It simply said, go take the gas from the West, do that physically, and and buy your gas at the spot prices, whatever they are, okay? However, we'll sell you a contract for the next 15 years that anytime you pay more than the X Deutschmark per MCF guarantee of the fixed price of the Russian contract, anytime you pay more than that, we'll make up the difference. So you, Leipzig, end up paying either the price that the Russian deal fixes or less, if the market price is less. And by the way, we'll do this for a price, and the price is $125 million to JP Morgan. And as we can show you, that is less expensive, and you can have your cake and eat it too. Now, to show you how a really well-engineered solution using contracts as a replacement for that long physical pipeline, I want to take you very quickly through a comparison of the two alternatives that were there. Here's the Russian contract. We see the Russian contract was $300 million to build a pipeline, with the $50 million for the pipeline, to the short pipeline to the west, plus the 125 to Leipzig, to JP Morgan. Leipzig saves 125 million in capital costs. Then we look at the operating costs. The Russian one was a fixed number of Deutschmarks per MCF, let's say X Deutschmarks per MCF. The JP Morgan one says you either pay the spot price or X, whichever is smaller. So the operating costs are less. But I want to also use this to show how other risk and characteristics that were important in the real world solution that are often not thought about in just looking at simple financial analysis were some of the other risks. So, for example, political risk. What happens if they do the Russian deal and 3 years later, the price of gas is half X? That is to say that they're committed to pay X and the market price is X over 2. How are we going to explain to the citizenry of Leipzig why the city is paying twice the price that people can buy in the market? It's a very complex story. It's politically very difficult to meet. The JP Morgan solution, on the other hand, eliminates that risk because you never pay more than the spot price. And so you don't have regret of having gone into a fixed price contract. Second one is, yes, the Russian contract guaranteed 15 years of fixed price in Deutschmarks. But as we know at that time, and is still true to this day, that Russia has not always fulfilled the contracts it's promised to do. And in particular, in this case, 6 years after these contracts were done, Russia defaulted on debt that it issued only 6 months earlier, and the debt was in rubles. It could have printed the money. So there was contract performance risk. In contrast, the engineered solution from JP Morgan, the commitment to pay anything over the specified price, was a full faith and credit commitment of JP Morgan, a AAA global bank. So it eliminated contract risk. And finally, one next we want to consider is geopolitical security risk. If you did the Russian deal, Russia would control the flow of gas to Leipzig. It's sad to say, but that's, as we see, an issue today. And finally, and this is very 2022, is the environmental risk. If they had built that Russian pipeline, done that deal, they would have built a very long, dirty pipeline to connect to the grid. Instead, the solution they did end up physically doing was the shorter one to the west. And so there's actually a greener solution. It did not build an extra long, dirty pipeline. So summary from this example is that if you do a really well-engineered solution, simply using intangible contracts, JP Morgan was able to provide a solution that was both more efficient, cost efficient, and greener. Now, these contractual agreements, option prices and so forth, are a central part. They're one of the cornerstones of the modern global financial system. And I just put these numbers up to show you that from the time when the first option markets were created back in the 70s, now today you can see the growth of contracts. That's 10 billion contracts traded last year. Contracts, that's trillions of dollars just in listed options. But now if you go to the full derivatives market over the counter, which includes swaps on everything from gold and currencies and interest rates in particular and so forth, we're now talking about a notional amount. That's the total amount being covered by these contracts, transferring risk and so forth, is of the order now of 600, or it has at times been even as high as $700 trillion. To frame that for you, I plot on this graph. This red line is the entire global GDP, around 100 trillion. So you can see these are enormous financial markets, enormous contractual markets. And what I want you to see is that these are there, they're part of it, and they are a fundamental part of our solutions that we are going to produce for real economic activities, okay? I wanted to show you this graph of financial innovation, which is the way we improve the financial system since the 12th century. This is showing you the timeline of major innovations. And what you can see instantly from this graph is how not only we've had innovation for centuries in finance, but the rate of innovation is accelerating dramatically. So in the past, something that might take 2 to 5 or 7 years to innovate may only take 6 months to 2 years to innovate. So the message here is that best practice is not good enough in terms of thinking about innovation of solving problems going forward. That if it's best practice, it exists. If it exists, it's a legacy. Now, if the past is the same as the future, using a legacy to design will work fine. But as you can see from this picture, the future is not at all like the past. And so the important thing to think about when solving problems and using finance as part of that solution is to always not ask the question, is this being done? But rather to ask the question, could this be done? And that's the way we've been solving problems for a long time. Now, in my last few remarks, I'd like to talk about the future, or really the present into the future, of something that I've been working on, which is trying to address the global challenge of funding retirement. And that's important both to financial and social stability, as well as making it so people could have a good retirement. And the reality, everywhere in the world, in Korea, in the United States, but everywhere, you have that individuals are now being more and more to take on the responsibility of funding their own retirement than they've had in the past. So NPS will, of course, always be there, but we can't expect NPS or Social Security in the United States to be the sole source of funding retirement. But we're going to be expected to take on more decision roles in what we call defined contribution plans. And that's where they're all going. That means people will have to make decisions they've never had to make in the past, don't know how to make in the present, and even with education, won't be able to do on their own in the future. So we're going to have to do important innovations to solve and address this problem. And I remind you, this problem is not a bad thing. It's a result, among other things, that everybody's living longer. And we have to adjust to that. So let me just point out one way that contractual agreements can help solve this problem. If you want to improve, to have a good retirement, that is to say, to be able to sustain roughly the standard of living that you've enjoyed the latter part of your work life for the rest of your life. There are only really 4 ways to improve that. And I'm not going to go through all of them. The first 3, save more, work longer, and take more investment risk, are all designed to get more assets so you can have a higher retirement. The 4th one is the one that I want to talk to you about in my closing remarks, which is for whatever amount of assets you have accumulated as an individual to get the most benefits for the same risk out of it. And the way to do that for working middle class people, for the vast bulk of the populations, is going to be really from two vehicles. One, annuities, and the other is equity extraction from the house. And annuities, I remind you, are simply where you buy a contract that will pay you like a pension money every month for the rest of your life. But then when you've gone somewhere better and no longer need money, you give up that money. So let me just show you the impact of contracts that are potentially feasible with an example from using US numbers. Here I've done this for 50th percentile income level in the United States. So prototypically, someone who has Social Security, like the NPS, has a income, has been living on 50,000, a retirement income because they don't have to save or do other things anymore that would sustain that is say 36,000 or 72% replacement ratio in any case. And they have some money in a defined contribution plan, personal saving, as well as their NPS, and they have a house. Now, if they just take their Social Security and then live on the bond interest from their personal savings or the defined contribution plan, because they don't know how long they're going to live, in this example, they'll reach 60% of the goal of what they need for a good retirement. If they, instead of holding the bond, they exchange the bond for an annuity because of the giving up of the money when they don't need it, they can get a higher amount for as long as they do need it. That will increase them from 60 to 70%, 7% of the goal. Nice improvement. But if now you enter into an equity extraction, so-called reverse mortgage, I hate the term. In Korea, you call that, I believe, a home pension. That's a much better name and more descriptive. But whatever the name is, if you take out that kind of special equity extraction and use the resources from that to purchase more annuities, then as you can see in this example, you get additional income such that when you add the three of them, you get all the way to 100%. So this is just a fast pass to show you that by using well-designed contracts, unfortunately at the moment, neither the annuities nor the home pension are as efficient and as good as they could be. But we know if we do make them much better, this is the kind of result you can get, which is really moving the needle on addressing the retirement problem. I will say this, on issues such as climate change and other big problems you've been discussing, I don't know what the solutions are, but I can very, very confident that whatever solutions we come up with, finance will play an essential role in implementing those solutions, whether it's financing the outcome, transferring the risk, or providing more sophisticated analysis. Thank you and good night.
(50년) 동안 한결같이 가장 뛰어난 철을 만들겠다는 사명감 하나로 얻은 첫 번째 이름. 세계에서 가장 경쟁력 있는 철강 회사 포스코. 이제 새로운 출발선을 앞에 두고 두 번째 이름을 얻었습니다.
Good afternoon. We hope you enjoyed the luncheon that was prepared for you and that you're excited for the 2 remaining sessions of the IGE POSCO Group International Conference. For our 3rd session on the advent of the new international trade regime, how best to cope with multidimensional climate change initiatives, I would like to invite Dr. Yu Jang-hee to moderate the 3rd session. So please come to the podium, as well as our panelists for the 3rd session. To give a bit of background about Dr. Yu Jang-hee, among other distinctions, Dr. Yu is Professor Emeritus at Ewha Women's University and former president of the Korea Institute for International Economic Policy. Please join me in welcoming Dr. Yu Jang-hee. If our other panelists might also come to the stage, we would appreciate that at this time. Dr. Yu?
Okay, all the panelists, would you please step up to the chair? 안성일 실장님 어디 계십니까? Okay, good afternoon, ladies and gentlemen. My name is Yu Jang-hee, Professor Emeritus of Ewha Women's University. This is the session number 3 of the IGE POSCO International Conference. The session 3 is entitled The Advent of the New International Trade Regime, How Best to Cope with the Multidimensional Climate Change Initiatives. We have 2 very prominent economists as the major speakers, and also we have very famous economists, 4 panelists of the VIP level of this country, and these 2 speakers and 4 panelists will be dealing with this very important issue of international trade regime, and particularly the climate change issues. We have about 100 minutes in this session. I'd like to run the session as follows. These 2 major speakers will use, each will use about 20 minutes. And the 4 panelists, each one will be able to use about 10 minutes. That'll make about, say, 80 minutes. And the rest of the time, about 20 minutes, is going to be used for the dialogue between the audience and the speakers or panelists. Okay, now our major two speakers have sent us their video presentations. The first one will be Professor Ann Kruger. I know, everyone knows who Ann Kruger really is. We don't need any lengthy introduction of Professor Kruger because she's the best known eminent person in economics. Currently, Anne is a senior fellow at the School of Advanced International Studies of Johns Hopkins University. She is also a chaired professor emeritus of economics at the Stanford University. We all remember she worked for the World Bank for some years ago and the IMF as well, either as a vice president or as the first deputy managing director. Without further ado, let us view Professor Kruger's video message, please.
Thank you very much for inviting me here. I'm pleased to be with you, although of course I wish it could be in person. It's an honor to be able to provide this presentation. Climate change poses many problems and challenges for all of us. There's agreement of almost everybody throughout the world that we have almost no time to act before the damage to the world is irreversible. Countries have committed to achieving goals in the reductions they will attain and specified the time within which they will achieve them. It's very challenging for most countries to achieve these goals, and even more challenging to try and meet them. It is only natural that owners and workers in industries which are the most damaging to climate goals are reluctant to accept restrictions on their activities. Politicians almost everywhere are confronted with strong pressures to refrain from imposing demanding targets on their industries. But however difficult it is to achieve domestic targets, that's nothing in comparison with the challenges of achieving reduction targets and at the same time protecting the global trading system. The trading system is vitally important, not only to enable future growth of the world economy, but also to protect the gains in well-being and living standards that have been achieved since the Second World War. The world has gained enormously from the open multilateral trading system under the GATT and then the WTO. Real world output has grown at a sustained rate higher than ever before attained over a comparable period in world history. Moreover, that rapid economic growth and the rising living standards that went with it were shared throughout the world, or almost all the world, as contrasted with the slower growth of the world economy in the 19th century and earlier, which was mostly achieved by the now advanced economies. A hallmark of the sustained and rapid growth was the increased integration of the world economy. Trade became an increased share of most countries' GDP, and for the world as a whole, the global sum of exports plus imports rose from about 20% of GDP in the early 1960s to more than 50% in the most recent decade. That, of course, means that trade was a major stimulant of economic growth and of increased efficiency in the world economy. Trade was clearly a major contributor to the well-being and prosperity of the world during the period, as those numbers show. But the important question is not did it contribute, but why was trade so important and how did it stimulate growth? Because those questions then lead us, the answers to those questions then enable us to understand the linkages between climate abatement and keeping the open multilateral trading system open. The answer to the question of why trade is important has several parts. A first consideration is that transport and communication costs fell sharply. Even at the end of the Second World War, transport costs for international shipping constituted 20% or more of the value of goods shipped across borders. By the year 2000, they were only 5% of the value of trade, meaning they'd fallen by 3/4. Likewise, communications costs fell really precipitously, whereas the telephone, which was very expensive for intercontinental calls, and telegraph were the chief means of international communication in 1945, email and other technological innovations subsequently sharply reduced those costs. Moreover, The speed of both transport and communication has increased dramatically, as we all know. The drop in financial cost and the increase in speed were both factors spurring the growth of international trade. That has made possible trade in many goods, which had earlier had to be produced close to the final market, and it increased the attractiveness of more reasonably priced and readily available goods that had earlier been available only with long time lags and high costs if they were imported. But rapidly falling time and monetary costs of transport and communications were only one of the factors spurring the growth of trade. Another major contributor was the liberalization and multilateralization of global trade. This took place through the WTO and when individual countries realized the benefits they would achieve and liberalized their own economies. Liberalization took the form of reduction or removal of quantitative restrictions on trade, as well as through tariff reductions. Prior to the Second World War, most countries had entered into bilateral trading arrangements, including even different tariff rates on the same good when it came from different countries, and treaties with their trading partners one by one. After 1945, the world trading system became increasingly open and multilateral. Instead of bilateral trading arrangements, countries joined the General Agreement on Tariffs and Trade, the GATT, after the war. Member countries agreed that they would keep their trading systems non-discriminatory among fellow GATT members, that in their courts they would extend equal treatment to foreign traders as to nationals, and that they would accede to GATT dispute procedures when disputes rose among countries. Furthermore, countries committed to opening and maintaining open trading systems. That meant that they could eschew quantitative restrictions and exchange controls on trade relations. The GATT was transformed into the World Trade Organization in 1994, increasing its scope over the trading arrangements. Its dispute settlement mechanism was strengthened, its purview over services was enhanced, and much more, and it's been a highly successful organization. In addition to the fundamental principles of the GATT and WTO as I described, the GATT Secretariat served as the coordinator of a series of multilateral tariff negotiations in which countries agreed to reduce their own tariff levels in exchange for comparable reductions in those of their trading partners, known as reciprocal trade agreements. There are a number of ways of estimating the average fall in tariffs around the world, and none is perfect. But it is a reasonable estimate that tariffs fell from an average of around 25% in the early post-war years to less than 5% in many advanced countries in the recent decade. By the 1990s, tariff rates even in developing countries were falling rapidly, and many of them had abandoned their initial protectionist stance in favor of more open policies. The result, of course, was their even more rapid growth than they had earlier. An average importer had to pay a tariff of around 25% of transport costs and transport costs of around 20% on the average manufactured goods in the years around 1950. Altogether, a total cost of about 45 or 50% added to the cost that was received by the exporter of the good. The costs were closer to 5 and 10% respectively by the turn of the century. It is therefore a reasonable estimate that the average cost of shipping a typical good to another country fell from around 45 to 50% of its price in the exporter's market to 10 to 15% by the turn of the century, which means that exporters could either get more business because they had a lower price in the importing country, or because they got a higher price as the importers could afford to pay more for it. The greatly reduced cost of trading internationally resulting from trade liberalization and the GATT and falling transport costs contributed greatly to the rapid increase in the importance of trade to almost all economies, as it paid to trade more, and the price of the importing country was lower, with smaller price differentials between countries. The world economy was in a virtuous circle. Rapidly rising trade led to economic growth, which ensured that resources could move into the so-called new industries and activities with far less dislocation and hardship than would have been experienced if growth in trade and GDP had been much slower. Meanwhile, the ability to move to the new industries and activities enabled the rapid growth to be sustained and even to accelerate. So rapid growth led to more opening and more opening led to it, and that was the virtuous circle. However, unfortunately, that is not to say that there were no protectionist pressures. I'm afraid there will always be those who believe, rightly or wrongly, and often wrongly, that they are harmed by economic growth and changes in economic structure. Economic growth cannot take place at all satisfactorily without the movement of resources, both labor and capital, from old industries into new ones. Those executives leading businesses, however, are sensitive, and probably too sensitive, to any changes that can affect their productivity and prospects. During the first 50 or so years after the Second World War, protectionist pressures were always there, even as the world was liberalizing and integrating. In the United States, for example, heavy pressure was brought to bear on politicians to provide protection for the textile, clothing, and footwear industries throughout the post-war period. Those industries were intensive in the use of unskilled labor, which was high cost, and made the industries inefficient as the productivity of workers in new industries rose, and therefore the real wages of American workers rose, which in turn meant that the cost of producing the unskilled labor goods rose, and therefore their markets would have shrunk in any event. Although there was some protection, the industries would in any event have declined. The workforce in those industries did gradually fall. The workers received training in new industries, and the US remained a highly open economy for a long time. Unfortunately, those in industries faring poorly seem always to claim foreign competition is the main source of their problems, and they plead for protection. Of course, sometimes foreign competition is, at least in part, a source of their difficulties. In most cases, though, other factors have contributed much, much more to the industry's difficulties. Again, in the United States, to use an example, the steel industry has sought protection almost continuously for many years, stating that imports of steel have harmed it. But while it is true that imports have increased, productivity in steel production has increased far more rapidly. It took only 1/10, 1 in 10 men in 2018 to produce a ton of steel as compared to the number that had been employed in 1980. In other words, steel production would have had to increase tenfold in order for steel employment to remain the same, even if there had been no imports. Since steel consumption rose far more modestly than productivity, the industry would have had to close inefficient plants and lay off workers, even if there had been no imports whatsoever. Of course, the US steel using industries would have had further harm in their export markets as they competed with foreign steel users who faced lower prices. Now, climate change reduces the additional challenge, and I've been talking about trade because the climate change has important challenges for trade. Finding ways to meet those challenges and simultaneously preserving the open multilateral trading system to enable continuing economic growth is a major challenge. And the reason is straightforward. In all countries, ways must be found to reduce the carbon footprint and other damage to the environment resulting from various economic activities. Climate change is a global problem, and any one country that undertakes to mitigate its climate change will get only a fraction of the benefits that it generates, because much of it will spill over to other countries. And if they're not doing anything, the climate evading country will indeed lose out relative to those who are not, because climate damage will still be there and there'll be higher costs. Any one country that fails to mitigate its emissions can enable its environmentally damaging industries to gain competitive advantage over producers of similar goods in other countries where their incentives, i.e. costs, are placed on producers to curtail their environmentally damaging activities. Most economists advocate taxation of emissions as a preferred way of inducing reduction in harmful emissions in the least costly way. The advantages of taxation are that those who are generating larger volume of toxic waste have more incentives to invest in environmentally friendly measures to reduce emissions, and the overall cost to the economy will be smaller than if quantitative ceilings are placed on activities, some of which, of course, are much higher cost than others. The problem arises because each country is choosing its own means of mitigating the environmental damage. Because of that, producers of a product using identical technologies in different countries may not experience the same cost increase, and producers in those countries with low or non-existent charges imposed on emitters will gain an unfair competitive cost advantage compared to their foreign rivals, and the generation of pollutants into the atmosphere may be even worse as a result. Although international trade does and should reward low-cost producers when they are most efficient, it should not reward, or worse yet encourage, production in countries with lower emission costs as contrasted with lower emissions, and hence probably higher rates of emission. Moreover, producers in countries where emissions are more heavily charged will inevitably seek protection, arguing that they are being penalized in international markets for doing more for the environment than their competitors. That argument will not only appeal to politicians when other countries are not seeing reductions in environmental damage, it will do worse in the sense that it will encourage other countries also to try and escape the taxes that could be so beneficial in reducing pollutants. Already, the European Union has decided that it will impose taxes on steel and other high pollution goods when they are imported from a low or zero tax country. In itself, that is a reason why exporting countries should be anxious to get their own carbon tax in place, because if they do not do it, the taxes may still be paid, but the benefits and the revenues for those taxes will go to the importing country rather than to the exporter, because they aren't imposing the tax which they should. Now, if the world had perfect techniques to measure emissions, and all producers were subject to the same measurement techniques, it would be relatively straightforward to adopt border taxes that could compensate for the additional costs of environmental protection in an importing country and impose those taxes on imports. Even then, exports from a country with low emissions, because remedial measures have been taken in response would still be at a disadvantage when competing with goods produced in a lower tax country. In reality, we do not have perfect measures of emissions. There is therefore the additional problem that some, or maybe all, producers in a country with adequate emissions taxes may claim unfair competition from imports from other countries, whether that is the reason for their disadvantage or whether in fact the disadvantage is real, meaning a genuine high cost. Protectionist pressures are likely to intensify unless countries can agree on a coordinated global method for finding equal and fair taxes that appropriately give incentives to reduce emissions and at the same time do not penalize producers in higher tax and higher emissions countries. For the world as a whole, there are two aspects to finding solutions to these problems. The first is that there can be and there should be technological advances that enable reasonably accurate and reliable measurement techniques to assess rates of emission. If we have those reliable rates, then we can know how much to tax that's fair and equally the playing field so that they are both reducing emissions to the appropriate amount. Second is that an agreement should be reached among countries as to the ways in which costs of environmental amelioration are assessed. On the basis of that agreement, border tax adjustments could be made fairly for imports from low tax countries. To be sure, there would need to be means of ensuring that exporting countries were enforcing their environmental regulations. For countries with exports goods with above average environmental damage, i.e. they had very low or ineffective carbon taxes or no means of enforcing them, incentives would then be in place for domestic producers to accept mitigation measures. That there will be costs to reduce the environmental damage is widely recognized. That makes it all the more important that ways be found to address that issue without reducing economic growth more than is absolutely essential. Quite aside from the desirability of economic growth itself, the necessary changes in policy necessary to improve the environmental prospects will be far easier to undertake politically to achieve the desired result in the context of more healthy world growth for the entire planet. For countries such as Korea, the policy implications are several. First is the desirability of moving forward with economically efficient policies to incentivize producers to undertake appropriate emission standards. Delays will make the necessary changes more abrupt and disruptive and more costly. They will also invite border taxes on Korean goods to be exported to the EU and probably also elsewhere. Second is the need for constructive participation and perhaps a desirably even leadership in international fora where the environmental issues are under discussion. Achieving agreement on acceptable ways of reducing emissions is critical for all, but more so for exporters. Third and finally, across-the-board policies need to be adopted to encourage innovations and technical change that will enable production of goods with reduced negative impact on the environment. That might entail economy-wide incentives for reductions in emissions, but should not be those that are given only to some industries and not to others. Let producers for themselves decide which are the most efficient ways to go after cost reduction. The attainment of environmental goals is highly desirable and will be more costly the longer the delays and the slower the process. Sustaining the factors that induced such phenomenal growth of the international economy in the past is equally important. Such a healthy international trading system is crucial, focusing on measures to achieve the agreement on climate mitigation worldwide and without unwarranted protectionist pressures is clearly a central challenge. As I talk with you, the World Trade Organization is in its 12th ministerial meeting, and these issues are up for discussion. I hope that we see a vast step forward, but I fear that not enough countries will undertake commitments to do those things which are necessary in order to achieve the results. Korea could and should take a leadership role as a major exporting country in the world. Thank you very much.
Thank you very much, and let's give her a big round of applause. And just emphasize the very, very important role of WTO to maintain the international trade order fairer and freer. And also she emphasized the importance of the carbon tax to reduce the carbon emission in the process of production of goods and services. And also and clearly emphasize that in making the international dialogue platform, the Korea should play a leader's role in the years to come. The next speaker is Professor Robert N. Stebbins. We cannot talk about the issues in the field of energy and environmental economics without mentioning Professor Robert Stebbins' name. He is currently the A.J. Mayer Professor of Energy and Economic Development at Harvard Kennedy School. He holds various important academic positions at the Harvard University and the National Bureau of Economic Research. He is working very closely for National Academy of Sciences of the United States and the US government as well. He is also helping in many ways US Congress and the World Bank, United Nations, USAID, and many other public institutions. If Professor Stebbins' video is ready, please put it on.
Hi there. I'm very pleased to be with you. I wish I could be with you in person for this international conference, but instead I will present in this way. And as you can see, my topic is the outcome of COP26 and the path ahead. So I'm going to look, first of all, at the major issues and the outcomes of COP26. The first thing we have to recognize is that most of the delegations are from developing countries. And for developing countries, what are important and what was important in Glasgow were two principal issues. One is finance, achieving the $100 billion per year commitment or even more, principally for adaptation. And then making up for the shortfall. After all, that was supposed to be for the year 2020. And so for the years since 2020, making up from the shortfall because it's not there. The outcome, ironically, is that the Glasgow Climate Pact urges countries to double their commitments, although even the first commitments have not yet been achieved. So this brings up the topic of loss and damage, which the notion is that here the countries most responsible for climate change, those who have contributed most to the existing stock of anthropogenic greenhouse gases in the atmosphere, which would be the United States, China, and the European Union, would actually fund somehow the countries that are most impacted by damages that cannot be adapted for. Now, this was finessed in the Paris Agreement because the Paris Agreement says that loss and damage is a very important issue. In Glasgow, where there was again a lot of interest in this, on the last day of the talks, the European Union and the United States blocked a proposal for a new fund for loss and damage payments, and instead they set up a dialogue for research and discussion at future COPs. This was the one moment at which I was sympathetic to Greta Thunberg's characterization of the annual climate talks as blah, 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 because indeed they did call for more discussion at future COPs rather than action. Turning then to the big issues for some policy wonks, the principal one was, can China and the United States return to global co-leadership on climate policy by returning to the spirit and reality of remarkable cooperation that existed during the Obama years versus the spirit and reality of confrontation that came about during the Trump years and unfortunately has been continued during the Biden year in office. The outcome was a surprise joint announcement by the US and China on Wednesday in the second week of the COP. But those joint announcements did not advance ambition, and they didn't influence other countries. And then finally, outside of the UNFCCC, there were all sorts of agreements and announcements. One of the most important one is that 103 countries signed the Global Methane Pledge to cut emissions of methane 30% below the 2020 level by 2030. But China is not included, and China is the largest methane emitter, and the measurement remains highly uncertain. We're now engaged at Harvard in some research using satellite data of concentrations in order to statistically estimate country and even sectoral emissions. And then finally, I thought that the issue for everyone, the elephant in the room, would be whether or not the new U.S. nationally determined contribution, which is very ambitious, 50 to 52% reduction below 2005 by 2030 in emissions, is actually achievable with reasonably anticipated policies. And the answer is probably not, as I will explain. And I thought, therefore, that every time I met with a delegation, that this is what they would want to press me on. But no one brought it up. And I think the reason is that all three groups, delegates, civil society, and the press, are so happy to have the Biden administration instead of the Trump administration, because at least they can talk with them. And of course, the Biden administration has rejoined the Paris Agreement, that there was what I'll call a willing suspension of disbelief. And so this issue was hardly discussed in polite conversation. Now, why did I say that the US NDC is probably not achievable? So is it achievable with reasonably anticipated policy action? This is, in the United States, after all, a representative democracy, and so there are established political procedures. And the only way this could happen, this could be achieved, would be with aggressive new legislation from the US Congress. And even though Democrats have a total of 51 votes, the Democrats still couldn't put together 51 votes on this because at least one Democrat from the Senate was opposed. So the prospects for major comprehensive climate legislation are not good. But there is non-climate legislation that can reduce greenhouse gas emissions. The infrastructure legislation, although it's not explicitly climate legislation, can reduce greenhouse gas emissions. So in the case of facilitating improvements in electricity transmission, which is very important for greater reliance on renewable sources and for greater penetration of electric vehicles, for energy efficiency, for extending the life of existing nuclear power plants. And then there's other truly bipartisan climate legislation that can be politically feasible, in particular, subsidies or tax incentives. And here's subsidies for wind and solar, for carbon capture and storage, for technology initiatives, for electric vehicle rebates. Some of these included in the infrastructure legislation are all quite promising. But the sum of all of these, if you add up all of what can reasonably be anticipated, it's very unlikely to satisfy the demands of domestic green advocates in the US, international calls for action, or more importantly, the explicit numerical targets in the Biden administration's NDC. And so the Biden administration will have to do what the Obama administration did, and that's opt for regulatory approaches. Now, a regulatory approach is one that doesn't involve the legislature, it doesn't involve the US Congress, it's purely and simply the executive branch, with an important caveat that I will mention. So there are executive orders that have been in place or will be forthcoming to reinstate and surpass the Obama administration's motor vehicle fuel efficiency standards, called CAFE standards, to reinstate the very important rule for methane leaking from wells and pipelines, a new rule under the December 2020 legislation to implement in the US the important Kigali amendments for CFCs to the Montreal Protocol, and then to recalculate the social cost of carbon, which was $50 a ton in the Obama administration, taken down to $1 per ton estimate in the Trump administration, now back up to $51, and with re-estimates now being done, maybe up to $100 per ton. But the caveat I mentioned has to do with the third branch of government, the judiciary in the United States. And new regulations are more likely to be challenged successfully than during the Obama years today. And the reason for that is that there are 245 Trump-appointed federal judges. That's more than 25% of the total federal judiciary. And indeed, that social cost of carbon that I just mentioned is being challenged in the courts. More importantly, the Supreme Court now has a 6-3 conservative majority, with Trump having appointed 3 new justices. Now, I want to finish, because that may have sounded somewhat pessimistic, with 2 sources of optimism for U.S. policy action. One is that this is the United States of America, and state-level policies and actions can be important and highly effective. We have subnational policies on the West Coast and in the Northeast that are becoming increasingly important. And it's possible that bottom-up national policy or de facto national policy may evolve from these state-level and regional initiatives from essentially the Democratic-leaning states, which represent more than half of the U.S. population and an even greater share of economic activity and therefore of greenhouse gas emissions. And finally, a source of optimism is that the Biden administration seems to embrace first-rate scientific and other expertise. And some of the best scientists, lawyers, and even economists may be able to design sound climate policies that can perhaps also be politically feasible. And with that, I really do thank you very much for your attention. I enjoyed being with you, and I hope in future years I'll be able to be with you in person. Thank you.
Thank you very much, Professor Sabin. Very insightful and informative presentations. Professor Sabin's speech include a lot of important points, particularly many governments submitted their goals for carbon reduction by either year 2035 or 2050 and the like. But are these promises really realistic? And his sort of evaluation is that it is rather ambitious kind of objectives, but whether it could be succeeded or not is really questionable. One of the most sort of serious sort of hurdle is the political games. Political games are very sometimes sensitive, and some of the issues these politicians are dealing with is very, very hard to make the public understand. So Professor Stebbins proposed that if it is really urgent to get the goal completed, the government supposed to use its own administrative order as it is absolutely necessary without going through the legislative processes. And also in the process, the government supposed to try to ask the judiciary support as the things gets more and more severe. In that sense, Biden administration seems to be doing somewhat more optimistically, because some of the policies he presented are really forward-looking sort of contents, and also this administration seems to have a positive opinion to go back to the Paris Accord. 지금까지 이제 두 미국 학자들의
Up until now, we have heard presentations from the two foreign speakers, and now we will be diving into the panel discussions. Following the following order. First will be 이혜민, next, 안성일, next, 정태용, and Kim Hong-jung. So, first, allow me to introduce Lee Hye-min, the former G20 Sherpa of Korea.
Mr. Lee asserted that worked at the U.S. Embassy in Korean Embassy in the United States, Indonesia, France, and Philippines. And he joined the Ministry of Foreign Affairs in 1980 and served at the Korean Embassy in the United States as well as in Indonesia. And he has also taught at Hankuk University of Foreign Studies and Seoul National University as a visiting professor. Currently, he is now senior advisor at Kim & Jung, a law firm. Please greet Professor Lee with a big round of applause. Thank you. Good afternoon. I'm honored to be invited to such a prestigious occasion. So, the advent of the new international trade regime is a topic for Section 3. Under international law, international trade law, we have relevant provisions, the Article 20 of GATT 20, which provides general waiver, entitled generous waiver to member countries. So climate change may not have a direct legal implication under the GATT agreement, but even if such general waiver is granted to member states, arbitrary application of restrictive measures by member states, or if trade restrictions are arbitrary or disguised as protectionist or take the form of disguised barriers, then they may be against the GATT regulations. So, although generally climate change is not applicable under the GATT agreement, arbitrary or discriminatory or protectionist measures disguised as trade measures may be against the GATT agreement. So under the current trade landscape, there are several very important agendas, the more critical of which is the connection, nexus between climate change and the digital economy. So digital economy and climate change require new set of rules previously, which have heretofore been unavailable under existing international trade regime. So before diving on to these lack of relevant provisions, I'd like to point to the latest development in the international trade landscape. First and most important of all, we are seeing a deterioration of relation between the United States and China. And not only that, WTO, G20, and indeed the entire multilateral trade regime has been significantly weakened. A liberal international trade order has lost its significance, at least in the eyes of member states, and the Doha round was a failure, a de facto failure, I would say. And the dispute settlement system of the WTO is now dysfunctional, which means that WTO is taking only a minimal role in international trade. And in April 13th, I'd like to recall the Atlantic Council at which Janet Yellen, the U.S. Treasury Secretary, said that a free security would be pursued in favor of free trade. So security will take precedence over free trade, which means that multilateral trade agreements will be replaced with sector-specific trade agreements joined only by like-minded countries. So plurilateral trade agreements, PTA, will be the norm, not multilateral trade agreements. And COVID-19 impact must be considered as well. COVID-19 showed that we may be too much reliant on a single country in our global supply chain. So disruption of a supply chain, even a single country, might have a disproportionate impact in international trade. So this is another challenge we are facing. Third, with the third change I'd like to dwell on, relates to globalization. Globalization involves usually deregulation. And in 2008, the world economy was hit by the global financial crisis, after which globalization transitioned to deglobalization. And in this deglobalization trend, the previously deregulated areas may be subjected once again to renewed regulation. So this is a snapback of regulation, and countries have become more restrictive. So deregulation has receded, and this has been amplified in the wake of the pandemic. And on the climate change front, countries are required to intervene. So on these three paths, we have seen changes in global trade regime on three fronts, which means that we may see a stronger intervention by the state in international economy and trade. And such intervention saw an acceleration in the wake of the invasion of Ukraine by Russia, followed by sanctions put against Russia by Western countries. And the globalization drive that we have seen for the past 45 years entailed the increase of efficiency in the reduction of cost. However, such trend has been replaced with a more defensive, a cautious approach, putting a priority on reducing cost. So this is another transformation we have seen in the global trade landscape. And this gave another reason for the states to intervene in the market, in global trade. And such state intervention has many examples. including the measures taken by EU countries and the United States, or more specifically, subsidies provided to the U.S. government and EU countries to EU and US companies in the semiconductor sector. So China is heavily subsidizing its own semiconductor manufacturers. So this is an evidence of state capitalism on the part of China. However, the provision of subsidies to EU and US businesses may run against a global trade regime or global trade regulation. So this has put United States and Europe into a dilemma. So liberalization, or the invisible hand of the market economy, has now receded in favor of strong state intervention. So this provides a background for the transformation in the global trade landscape we have seen. Then, what about problems pertaining to what about the problems brought by climate change in the global trade regime? The current WTO system exists only in name, and US-China tension meant that we are seeing an absence of multilateral trade rules, because multilateral trade rules has been overshadowed by competition between the United States and China. So countries are taking matters into their own hands. So we are seeing a fragmentation of introduction of trade rules. This is a cause of great concern. Environmental and climate change issues have been first reflected in the US-Korea FTA for the first time in the global trade regime. So it was a Korea-US KORUS FTA was the first FTA to have a robust provision on climate change response. And I was part of the delegation team of the ROK government. And the provision on climate change was included not by the Korean government, but at the request of the Democratic and Republican Party of the United States. So, per their request, provisions on labor rights and climate change have been included at the negotiating table by the United States. And this request was accepted by the Korean government at the time. And provisions on climate change may be a cause of dispute between the United States and Korea, in which case the parties taking the dispute to the dispute settlement body must have a cause of action. So these are the relevant legal provisions in the KORUS FTA, and this provision in the KORUS FTA has mostly been replicated in other free trade agreements, which, however, saw significant change in the US MCA. NAFTA has been renegotiated in 2018, and the revised US MTA took effect in July 2020, according to which the burden of proof falls on the party that takes the dispute to the dispute settlement body, but now the burden of proof has been shifted to the defendant, not the plaintiff of the dispute settlement, on environmental disputes, which means that provisions on the environmental protection have become much stronger teeth, have become much more enforceable, and this is likely to be reflected in IPEF as well. Indo-Pacific Economic Framework. But this connection between climate change and environment are being seen only at the bilateral level, not multilateral level. And in Geneva, the 12th Ministerial Conference is being held in Geneva, Switzerland. And the nexus between trade and environment was on the agenda, but we have not seen any substantial consensus or agreement on this. And countries failed to reach an agreement on the abolition of subsidies, including fishery subsidies is the solely remaining agenda being negotiated by member states. So linking trade and environment has yet to see any agreement by member states, at least at the multilateral trade level, at the WTO. However, the situation is different in the Indo-Pacific Economic Framework, and at the negotiating table, the connection between environment and climate change is high on the agenda. So in the IPEF negotiation, a new trade regime may be formed under the auspices of the United States and other participating member states. And I'd like to draw I'd like to make a connection between the remarks previously made. And that relates to, and one of those connections is the CBAM, Carbon Border Adjustment Mechanism, which is being introduced unilaterally by the EU without any consultation with other parties, in which case it may run against a WTO agreement. This might be a disguised trade barrier under WTO agreement. And the United States has yet to have a carbon pricing mechanism, so the United States is excluded in the application of a carbon tax, or if the United States is excluded in the application of carbon tax, then this might be interpreted as an arbitrary measures on the part of the EU. So IPF is pursued by the United States, and on its part, EU is trying to introduce carbon tax. So this is just one evidence of the fragmentation of global trade regime. Second, there are agreements on climate change, including London Protocol, Paris Climate Agreement, Kyoto Protocol, among other agreements. And climate-related agreements generally do not have a dispute settlement mechanism, and the observance, the adherence to such provisions must rely on the voluntary commitment of member states. And COP26, Conference of Party 26, was held in Glasgow on November last year in UK, with the participation of many countries. And climate change was the most important agenda at the time. However, as we have so many participating countries in COP26, having a binding and enforceable norm on climate change may be difficult and challenging. Consensus or agreement between states is required to make trade regimes, trade provisions enforceable, which means that in the absence of such agreements, trade provisions may lack its force. And Glasgow Climate Alliance or Finance Alliance for Net Zero, France, among other private organizations, may take leadership in pursuing climate change agenda, so the private sector may take up the mantle of responding to climate change. Following the failure of the multilateral trading system, and the court, one of the judges in the Court of Netherlands issued a ruling against Shell, stating that the measures taken by Shell was clearly inadequate to respond to climate change. And businesses, therefore, have a responsibility to reduce greenhouse gas emissions. So this is a watershed decision because it held businesses accountable for mitigating the impact of climate change. However, of course, this ruling by the Court of Netherlands has been challenged by Shell, and there is no guarantee that other judges or at the appellate court, Shell will lose as well, but it is still significant because the judicial branch may enforce climate-related measures against businesses. And a draft on the disclosure obligation has been announced by the Korean government in March this year, which states that investors, when they're buying or selling shares, they should provide material information on climate change, carbon emission, which means that listed companies are required under law to disclose direct and indirect impact that they are having on the environment. So making disclosure mandatory might result in or open a floodgate for lawsuits in court, which would incur significant costs for businesses. So in the absence of enforceable agreement on climate change between states, the private sector may have to take responsibility in coming up with the robust and enforceable measures on climate change, thereby providing clarity in regulatory landscape or legal landscape. Thank you. So that was a very insightful overview of two keywords or two areas. So deregulation may be replaced in favor of re-regulation in climate change. So that is quite a significant development, and countries are introducing their own policies on climate change, which might lead to a fragmentation. So the problems of re-regulation or fragmentation on climate change gives rise to a worldwide consistent unified trade norm, or at least a consensus among states on the need for such trade norm. Next, I'd like to introduce our next panelist.
Next up, allow me to introduce An Sang-il, the Deputy Minister of the Ministry of Trade, Industry and Energy. Mr. An is the Deputy Minister for International Trade and Legal Affairs of Moti, and before taking this position, he served as the Director General for the Free Economic Zone Planning at the Office of Industry and Enterprise Innovation in Moti. He was also the Director General for numerous positions at KOTRA and other public organizations. He is a true expert on this matter. Please go ahead. Thank you for that very kind introduction. At the outset, I'd like to thank IG and POSCO for putting this event together. Today I want to talk about something a little bit more specific, since everyone has given a very good broad overview. As someone from the ministry side, we talk about trade and, of course, climate change, and I would like to talk to you about the importance of that relationship, trade, climate change, and what we at the ministry and the Korean government are trying to do. To look at some current trends, the climate change and trade are related in a very specific way. We've talked about this before, but at the UN level through COP26, each country came up with their voluntary contributions by putting out more ambitious NDCs or achieving net zero carbon emissions by 20-something. But this is voluntary, so that is one of the issues. And in the global trade landscape, a new feature is that countries no longer believe that trade and climate change are separate. People now believe that they are part and parcel, that they go hand in hand. So major countries have changed their directions. So what are international organizations doing? What is the US, the European Union doing? And how do we view all of these changes, and what do we plan for the future? First of all, let's talk about the EU. We talked about this in the morning sessions as well, but right now, CBAM is at the heart of everyone's attention. Steel, aluminum, and 3 other industries comprising 5 in total are going to be pilot sectors. So they're going to be reported upon. Let's say that a product is going to be exported to EU, then these producers need to report on the amount of carbon emissions that goes into producing these products. And after that, it's not just about reporting, it's also about carbon tax that's going to be implemented. So a fee on the carbon emissions from producing that product. So this is a historic initiative. It's the first of its kind, which is why at the EU level, we have no precedent. We don't know what we are going to do, and we don't know what we need to do exactly. Last year, we came out with the EU came out with a revised set of plans, and execution, so on and so forth, required legislation, which is now in the final stretch. But a lot of more preparations are required to actually implement this. So from our side, We actually sent a statement to the EU in November of last year. As Mr. Lee just said, that report contained ideas that Mr. Lee pointed out as well, that we need to align our policies. Since this is a first of its kind, a lot of countries across the world are curious. What do we need to do? What are the details, and so on and so forth. So we had a briefing session, an info session that is conducted on a regular basis now to provide information to businesses. If you have any other questions regarding this, please feel free to ask, but let me now move on. And next, I'd like to talk about what the U.S. is doing. Climate action is high on the United States government's agenda, of course, as well. So the US-EU Global Steel Agreement negotiations began last year with a target of implementation by 2024. The specifics of that are as follows. Steel right now is mostly imported from very low-priced areas such as China and are produced in a very carbon-intensive manner. So to tackle that issue, the US and EU want to cooperate. The electricity produced an electric furnace, and different production methods are used. In China, for example, blast furnace and electric furnace ratios are different compared to those in the US. So we want to use, so the United States and the EU want to use those products produced from the United States, but then it all comes down to measurement once again, because you have to actually have the quantifications. But then this partnership is only implemented right now and in discussion at that with the EU, not other countries. After the Korea-US summit, President Biden went to Japan, where a new agreement was born. Negotiations about clean energy and clean production are ongoing among major countries across the world, and the United States is facilitating these types of discussions. In July of last year, the House of Representatives and Senate passed a new bill regarding all of these actions, and in June of this year as well, the U.S. Senate passed the Clean Competition Act, a new bill. But what about multilateral initiatives? The WTO has in place an environmental committee, but it's not specifically for climate change. In November of 2020, about a year and a half ago, a new consultative body on environment, climate, and sustainability, TESSD, was launched. And 71 countries are members of the consultative body, and that includes Korea as well. Some major topics discussed here include carbon border tax and other very important agendas. So a lot of environmental initiatives need to be incorporated into the WTO framework in order to build consensus at the global level. And now environmental products and services and education, how are you going to make all of this a bit more free? What is the level of subsidy that we need to provide? All of these are topics that require more in-depth discussions. At the OECD level, as we talked about before, the EU's carbon border tax is something that is controversial because there are certain countries that are very opposed to this. So the OECD has implemented a comprehensive carbon negotiation forum that was formally launched last week, covering topics such as ETS, carbon tax, carbon border tax, among other topics. But the problem is that it's hard to compare between countries because it's not apples to apples. We need to, once again, have measurements and in order to compare between countries so that the OECD can use that to point out and identify best practices that can be incorporated in negotiations about carbon border tax so that it provides a foundation. And the G7 is also talking about the climate club. The German's prime minister announced that a climate club will be launched next week on carbon regulations to provide more clarity on that and also apply pressure to non-members and cooperate with members within this climate club. So what is Korea doing against this backdrop? Well, we are keeping a very keen eye on what the major countries are doing. First, let me talk about CBAM. From Korea's perspective, we believe that this new initiative shouldn't differentiate between EU companies and companies outside of the EU. For example, ETS is on an installation basis, but the CBAM is going to be implemented on a product basis. The EU's ETS allows for deferral of credits, but that's not the case for CBAM. And also for the credits as well. The ETS, the credits can be sold in the market, but for CBAM, let's say that you're going to sell 100 products in the EU market, but then you have to have a reserve about 80% of that. So there is a lot less freedom, and that can also incur loss for the company. Right now, only direct emissions are measured for ETS, but if you look at Scope 1 of CBAM, Scope 2 is going to also include indirect emissions. These are some differences between ETS and CBAM. And for the accounting, the general accounting standards, this once again should not be discriminated, between the countries. So there are a lot of negotiations about the equality between countries, how fair it is, and whether it's going to be discriminative for some companies or countries. The criteria also is open to a lot of different interpretations as well, so not as clear-cut, a little bit vague in some areas. The IPEF, I don't need to remind you that Korea is a participant in early negotiations, and in July, official negotiations will commence. So Korea is going to be an active participant to voice our views, opinions, and the WTO, OECD, G7 Club are areas we are also participating in the international arena. We are trying to take on a leading role in many of these initiatives, and negotiations and discussions at the OECD level are also now underway. But these countries have different policies, as I said before, and because the initiative is to compare these initiatives between countries, come up with best practices and benchmark them, we want to be a participant in that to contribute to these activities. And some might say that Korea is still being a little bit more passive, not as active as we can be, but we are, since we account for 25% of GDP and 37% of exports within the region, we are going to be more active and committed to developing and commercializing carbon reduction technologies. That is what we believe from the Korean government. We believe that carbon emission reduction technologies and the market itself has huge potential, and we have plans and policies that we have in the pipeline for that. I'm going to be very brief because this is not a conference about that. R&D, capacity building, and export support and subsidies are some of the plans that we have. And from the private sector as well, the carbon footprint market is also growing. It's a very, very solid market. And if CBAM is implemented, certification is needed. Reporting and verification are required, but Korea is not yet prepared. We don't have the database for that. We also don't have any verification organizations that have been tried and true yet. So if we fail to keep up, then Korean companies will be forced to seek out EU companies from the US and pay a lot of money for their services. So we want to help support Korean companies and so that they can provide verification and certification services. So I'll keep it at that. Thank you so much, Mr. An. You talked about initiatives underway at the WTO, OECD, and more, and what Korea thinks about all of this, what the IPEF pursues, and all the other agreements that are going on globally. Thank you for that very broad-based overview. I know that if you are curious about the details, I'll always contact Mr. An and he will be glad to assist you. Next up, we have Professor Chung.
Mr. Chung Tae-young is a professor at the Graduate School of International Studies at Yonsei University, and he is currently serving as a lead author at the Intergovernmental Panel on Climate Change, IPCC, of the United Nations. And he is also a member or chairman of the Appeal Committee of Green Climate Initiative. He also served as a professor of Korea Development Institution, and he held various positions at the World Bank, Asia Development Bank, and the Global Green Growth Organization. And he received his PhD at the University of New Jersey and his bachelor's degree at the University of in Korea. Thank you for the very generous introduction and generous invitation by Institute of Global Economics. And the book that I'm just showing you, which contains a summary of the IPCC. The book that I have just shown you contains most of the talking points that I want to present to you. So I will skip them and talk instead about climate finance. So it has 30 years have passed since I first worked for climate change finance. So I was at the negotiating table at the Kyoto Protocol negotiation, and I was at the front. I was at the negotiating table of the Paris Climate Agreement as well. And those experiences taught me that we are still at the learning process of mitigating climate change. And during the Kyoto Protocol negotiation, there was a clash of positions between developing and developed countries. Developing countries argued that advanced countries were responsible for most of the carbon emissions, so they should be held accountable. And the norms were generally not adhered to very well. So a lack of compliance mechanism was one glaring absence. And that takes us to the 2015 Paris Climate Agreement. Top-down mechanism did not work very well, so we may have to count upon the goodwill of countries, and such philosophy has been channeled into the creation of NDC, National Determined Contribution. It asks countries to voluntarily present the carbon reduction goal, and many experts have been involved in the creation of NDC, including economists like me, and I was part of the Working Group 3, which just recently published a report on climate mitigation, drawing a lot of interest among member states. And this report was a culmination of the work of 250 academics around the world, and I worked with a scholar from Germany. And my topic of research was climate investment and finance, and I have been joined by, I was coordinated with a German scholar of 8 other academicians. So I think this is the first time we had a separate report on climate finance in the IPCC. So I'm a scientist. And scientists, including me, reviewed the current state of carbon emission, global warming, and a lot of detail has been included in the IPCC report, but the message is simple. The 60 gigaton of carbon was emitted in 2019 alone. And to achieve net zero by the year 2050, by 2030 we should reduce our carbon emission by 43%, an almost impossible goal to achieve. And carbon emission accounts for 16% of emission of pollutants. However, methane was mentioned in the report of the IPCC as well. I think the required reduction target was 30% reduction. And 2025 should be a target year of reaching a peak in emission of greenhouse gas, which must then go down. Otherwise, keeping the global temperature rise at 2 degrees may be almost impossible. So this may sound impossibly daunting, but there are causes for optimism as well. IPCC takes seriously 3 agendas in this regard. First is the importance of promoting leveraging technology, and the second is leveraging financial tools, and the third is policy. So policies, technologies, and financial tools must go hand in hand. A coordination, however, that we have not seen so far. And Professor Starvin's lecture conversation was very instructive, and he mentioned disappointing results of London negotiation, and the public sector is required to commit $100 billion, an obligation which however has not been met, and the lack of cooperation in the public sector might cause a lot of damage to developing countries because they may not be allocated the necessary finance. In 2019, climate finance received how much? Can you guess? $500 billion, over $500 billion have been committed or allocated somewhere around the world in both the public and private sector. So that's $500 billion commitment. So whether our target is 1.5 degrees reduction ceiling or 2 degrees, or whether our target year is 2030 or not, the investment requirements amounts to trillions of dollars, or 2.3 to 2.4 billion, 2 or 3 or 4 billion dollars to be precise. So this is a colossal commitment required. However, our problem is not a lack of finance. So we do have a finance available. Then what is the problem? There are other constraints. So, unshackling such constraints would enable us to mobilize the money in the public and private sector. So, among the constraints was, I think, is the following, and Professor Starvin said as much. And the one problem is a lack of assessment or rating system on the impact of climate change. So we are seeing wildfires and hurricanes and other extreme weather events. So the calculation of recovery or recovering such damage must be assessed. So this is a physical risk resulting from climate change. However, such assessment can only be made after the facts, ex post, after disasters occurred. However, the interests of financial sector is different because for financial institutions or in the decision making of the financial commitment, the key point is how much money can I recoup from my investment. So return of investment is the key component in financial decision making. However, physical risk resulting from a climate change therefore cannot be incorporated in financial decision making in advance in both the public and private sector. So this is a problem that we must tackle with. The second problem is the allocation of capital, or the problem may not be allocation of capital. There may be a bigger problem. No carbon transformation is a very important agenda. However, that transformation entails a lot of cost because the transition to a low carbon economy is a significant undertaking. And we need relevant institutional frameworks, and the transition must be orderly, or it may be disorderly. That may be the cost that we may have to bear. So we have a transition risk and physical risk hand in hand, and there may be a trade-off between this transition risk and physical risk. However, transition risk is not being discussed enough. So that was one of the message on the IPCC's report on climate finance. Absence of talk on the transition risk. And in 2019, we are seeing an issuance of green bond in the private sector to the tune of $300 billion. That was in 2019. We have a large financial institutions, including Industrial Bank of Korea and other businesses like POSCO, and their commitment pales in comparison. So our climate finance in Korea pales in comparison to that of China and the United States. And our level is, Korea's level, climate finance is lower than even that of Poland or the UAE, or more precisely, the issuance of green bonds. At the lead table of green bond issuance, our ranking is below 30. This is a very frustrating result. So building institutional framework must be joined with efforts to engage the private sector by both the manufacturers and financial institutions. And financial institutions and manufacturers on their part must take an active part. They must look at transitional physical risk not as a necessary evil or cost, but a new economic opportunity. And CBAM, Carbon Border Adjustment Mechanism, was mentioned by previous panelists. I'm not a decision maker, I'm just a professor, but I do want to argue for a change or shift in our mindset. Korea is trying to respond to the introduction of CBAM through multiple pathways, and the 7th IPCC report will cover very heavily the CBAM because IPCC report is published with a 4 to 5 years time lag, so we may see CBAM in the next IPCC's report. And Korea is a heavy carbon emitter, including POSCO. However, the carbon emitted by POSCO is the result of the production of steel that will be consumed not in Korea, not necessarily Korea, but that will be exported to other countries. So Korea's carbon emission has global implications. So we may calculate carbon emission on a consumption base or production base. However, if we calculate emission on a consumption basis, then introduction of CBAM will be almost impossible because that might raise the level of carbon emission of advanced countries very significantly. And the opposite may be true for developing countries. So production-based and consumption-based calculations may be subject to a trade-off. So carbon may be emitted in maritime transportation, air travel, or ground transportation. So this is such emissions in transportation may be categorized as consumption-based emission. So this is a topic that is being scrutinized by experts and which will figure prominently in the 7th IPCC's report. And last but not least, the Korean government urgently needs to introduce not just CBAM, but be audited for its progress on the climate change. And depending on the results, Korea may be penalized for the lack of progress, and countries are required to report their NDCs every 5 years, and the NDC backsliding larger than 40% is not permitted. So in 2025, Korea and other countries should submit the renewed NDC. So we don't have much time, and there's a lot of work for the government to do, and researchers should be permitted to study the impact of climate change on a longer term horizon. So production-based or consumption-based CO2 emission must be the topic of research among academicians until 2025. Thank you. And we have our last professor, Kim Eun-hyung.
President Kim did his master's in Oxford and did his bachelor's in economics. He specializes in EU economics as well, has written numerous articles and journals about this matter. And prior to taking on his role as president at KIEP in 2020, served as vice president of the Korea International Economic Association and has been a key advisor to the Ministry of Foreign Affairs and Trade during the Korea-EU FTA negotiations. He's also previously adjunct professor at Ewha Women's University and Seogang University. I apologize, but we are supposed to end at 3:20, and it is now 3:14. So we only have 6 minutes left. So if you can speed things up, I would very much appreciate it. Once again, my apologies for not keeping time. Thank you for that introduction. Professor Yu was also the president of our organization, so I know him very well and is a prominent figure and has actually been a mentor to me. Thank you to Dr. John for inviting me here, and also to Dr. Sagong. Thank you so much for inviting me. It's a pleasure to see you again. I know we don't have a lot of time, but I want to talk about
제대로 없고 커버리지가 제대로 많지 않다. 그러니까 명확하지가 않다 이런 얘기.
We talk about the economy and economic security and how uncertain everything is. Economic security is about protecting our country and its people from challenges and dangers that are out there. So, in a sense, economic security is extremely broad, and it's also very vague in terms of its boundaries. Economic security is different from country to country. It's very country specific. For example, in North Africa, food crises, food shortages will be one of the major economic security issues. And in Asia, countries including Korea will face energy crisis as a part of economic security. But in the end, economic security is universally important, especially in terms of climate change, to every single person on our planet. Not just for Koreans, but also for the Chinese, for Americans, for everyone, is a global impact. What I want to point out today regarding economic security, and in particular climate change and climate security, is that we are all working towards climate neutrality. And if we succeed in achieving all of our goals, what will happen? That would be great. And if that happens, and for that to happen, cobalt and aluminum and a slew of other materials are needed for that to happen at the very top of the supply chain. But we are short on all of that, even for hydrogen, batteries, and semiconductors is also an extremely important part of climate security, because you need semiconductors for constant monitoring. That's an imperative element. So let's say that everyone meets their goals, whether it's 35% or 50%, and the supply chain disruptions need to be prevented. We need to be preemptive and guard against these supply chain disruptions and bottlenecks. You may have all of the initiatives in place and even have the drive to implement them, but if we face bottlenecks and supply chain disruptions, then that can be used as a reason for not implementing these policies that we already have in place. So that's something that we need to guard against. And intercountry partnerships, especially MSP, is important to procure lithium, cobalt, and other materials that are needed on a global basis. As per current measurements, by 2030, demand will increase by 10-fold, 50-fold, and 100-fold for a lot of these materials. So it's quite bleak. For natural gas, back in the 1970s, we were saying that in 30 years that we would run out of crude oil. It's the same thing. Lithium, cobalt, and other resources are being depleted. We need to continue to mine these materials, and of course we can expand supply chains, but supply chain disruptions and challenges are bound to arise, which is why, once again, in order to establish and strengthen economic security and in particular climate security, we must prevent these foreseen issues by strengthening our supply chains. And next, I'd like to talk about the Climate Club. The condition for joining is carbon reduction by 60% compared to 2010 levels. It might be possible for Europe, but also might be possible for Japan, because in the where countries haven't experienced hyperspeed growth. But for countries like Korea that have grown exponentially, it's going to be extremely difficult of a condition to meet. In our efforts to fight climate change, we need to also take into the surrounding circumstances of different countries, conditions that are country-specific, work with civil society organizations and international organizations and other countries, and every stakeholder out there, so that we don't leave anyone out of this big picture. Thank you so much. Thank you so much for keeping it short and concise. That was a very impactful and short message. I thought we could allocate 20 minutes to a Q&A and open up questions to the floor, but unfortunately, I was unable to keep time, so we have already gone past our 3:20 limit. So I'm afraid we will have to skip a Q&A, but I'd like to thank our two keynote speakers and our four panelists. It was very invaluable because it drove home the importance of where we need to go and what we need to focus on. International order or international trade regime must be grounded in the WTO, although it is not functioning well right now. The WTO aims for two pillars. One is free trade, and second is fairer trade. As a successor to GATT, the WTO was launched under these two principles of free and fair trade. I think we also need to add greener trade to these two visions of the WTO. That is the only way we can make our Earth sustainable and sustain humanity's growth in the future and guarantee life on a clean world. So once again, freer trade, fairer trade, and greener trade. These are the three pillars that I believe the WTO needs to ground itself in moving forward. Of course, greener trade might require some regulations, but it's not about massive red tape. It's more about prodding a little bit, encouraging companies and stakeholders to move towards that direction. So as Mr. Lee pointed out, re-regulation and greener international order. These are areas that we need to move forward to. I'm sorry that we've run over time, but with that, I'd like to end session 3. Thank you so much for a very meaningful session.
Thank you and for finishing the session on time, as well as to all of our distinguished speakers and panelists. At this time, we're going to have a short break to reset for our fourth and final session for today. So please, yes, enjoy the short break, and we will begin with our fourth session at 3:30 p.m. Thank you very much.
밑바닥까지 안 보이는데. 반 모이긴 한데 이걸 조금 옮길 수가 없어요. 아, 예, 진짜요? 갈 수 있나요? 그러시면 더 감사하죠. 아, 그러니까 이걸로 가는 거.
Hello, ladies and gentlemen. We will now head into the last but not least session for today, entitled Industrial Growth Strategy in the Age of Carbon Neutrality, Innovative Green Technologies, Eco-Friendly Energy Policies, and the Role of Finance. To moderate the fourth session, we are delighted to have with us Dr. Hong Jong-ho, Professor of the Graduate School of International Studies at Seoul National University. Dr. Hong, as well as panelists, may I invite you to the stage before we begin the session. Could we also have our panelists join us at the stage? Thank you very much. As a course of introduction, Dr. Hong currently serves as chairman of the Energy Transition Forum of Korea and as a policy advisor to the Korea Chamber of Commerce and Industry. Please join me in welcoming Dr. Hong as well as our speakers for today.
자, 그러면
I think we still have to wait on one more panelist. Welcome. So we have now reached the last session of today, which is session number 4 of the international conference joint hosted by IGE and POSCO Group. As the theme for today and the title of session 4 will probably hint, today we're going to be talking about industrial growth strategies in the age of carbon neutrality and innovative green technologies, eco-friendly energy policies, and the role of finance. Carbon played a central role in the previous industrial revolutions, but carbon emissions from industries are now plaguing our environment, which is our reality now. A lot of industries are trying to curb the emission levels, and we are now facing numerous risks from carbon emissions. So I'll introduce the panelists who will be talking about this more in depth later on. But first, I'd like to introduce you to our 2 keynote speakers. Due to time differences, we have pre-recorded videos. Jeremy Rifkin needs no introduction. He is from Wharton School of Pennsylvania University. And I would like to now introduce his pre-recording.
Hello to the Institute for Global Economics and POSCO Holdings. It's a pleasure to be with you here today. I'm going to start on a bit of a somber note, and I hope it'll end up being a liberating reflection. You'll have to be the judge. GDP has been slowing all over the world now for the last 15 or 20 years. And the reason is productivity has been declining all over the world for the last several decades. The result is we have a lot of structural unemployment, especially a problem for the young Gen Z and millennial generations who are trying to find a secure place in a 21st century workforce. Our economists are projecting 20 more years of low productivity and slow growth. And let's do the numbers. We are now entering the 3rd century of the industrial era, and after 200 years of the industrial frame of mind, it's fair to say that half the human race is far better off today than our ancestors were before we began this industrial experiment. But it's also fair to say that 45% of the human race today, living on $5.45 a day, which is the poverty level, are only marginally better off, and in most cases, no better off than we began the fossil fuel-based industrial era more than 200 years ago. So while half the human race is doing better, the other half of the human race not so much. The very rich have done very well. Today, the 8 richest human beings in the world, 8 individuals, their combined wealth now equals the accumulated wealth of 1/2 the human beings living on Earth. That's 3.5 billion people. There's something very dysfunctional about the way we're organizing the economic life of the human family. It's clear that we have a dysfunctional approach to our economic future. But now we have a much more severe crisis. After 2 centuries of a fossil fuel-based industrial civilization, We have now spewed massive amounts of carbon dioxide into the air and methane and nitrous oxide from the industrial way of life. And those gases, greenhouse gases, have taken us to real-time climate change on planet Earth. No longer a theory, no longer a possibility, it's in real time. I'd like to explain to all my friends in Korea exactly what climate change is all about, because once it's described, we then understand the gravity of this crisis and the need to mobilize Korea and the rest of the human race toward one goal, and that is to saving life on Earth. Climate change changes the hydrological cycle. We are the watery planet. Everything on this planet depends on water. The problem is, for every 1 degree Celsius that the temperature goes up on Earth because of global warming gases blocking the sun's heat from getting back off the planet, so for every 1 degree Celsius that temperature goes up, the clouds are actually sucking up 7 more precipitation from the ground. 7% more precipitation from the ground. So what we're getting is more concentrated precipitation in the clouds and more dramatic, extreme, exponentially out of control water events all over the world. Blockbuster winter snows, unparalleled in human history. Massive spring flooding across every continent. Summer droughts and wildfires raging across the planet. Typhoons and hurricanes in the fall season. Our ecosystems cannot catch up to this runaway water cycle, the hydrological cycle. They're collapsing, ecosystems all over the world. And infrastructure is collapsing, and people are dying. And I want every parent that's listening to me today to understand this. Our scientists tell us we are now in the 6th extinction of life on Earth. Doesn't even make the headlines. The most important story we've ever faced in the short 200,000 years of our existence as Homo sapiens. We've had 5 mass extinction events on this planet over 450 million years, well before we human beings were populating this Earth. And each time there was a change in the chemistry of the planet, massive quick die-off. And on the average, 10 million years for new life to flourish. We are now in the 6th extinction event, and our scientists are telling us that we could lose over 1/2 the species inhabiting this Earth in the next half century. That's the century of our young toddlers and children today. The last time we had an extinction of life on this magnitude was 65 million years ago. Now we're talking in the next 50, 75, 80 years. We are asleep. But now, thankfully, we are beginning to awake. We need to step back and ask the question, where do we go from here? Clearly, the fossil fuel-based industrial era is sunsetting. It's on a death watch. But what is going to replace us? We need a new economic vision for the world. It needs to be dramatic and forceful, and we need a game plan to deliver on that economic vision that has to be quick. We have to be off a fossil fuel-based carbon civilization, and we've got less than 30 years to get the job done. So we need to step back and ask the question, how do the great economic revolutions in history occur? If we know how they occur, we're going to get a roadmap in Korea, in America, in Europe, in China, and all over the world, so we can charter a new course, a new path into the future. It's interesting that when we look back at human history anthropologically, there have been at least 7 major economic paradigm shifts in history, and each one of them share a common denominator. It's fascinating, and that is at a moment of time, across a civilization, 3 new technology revolutions emerged and converged to create what we call in industry a infrastructure that fundamentally transforms the way our society communicates, powers, and moves its economic life, its social life, its governance. What are those 3 technology revolutions? Number 1, new communication revolutions. Number 2, new energy regimes. Number 3, new modes of transportation and logistics. So when new communication revolutions converge with new energy regimes, which in turn converge with new mobility and logistics, it establishes an infrastructure that brings larger numbers of people together in more diverse relationships, annihilating time and space so that we can begin to behave as a social organism in time and space. These new infrastructures change our temporal orientation and our spatial orientation. They change our economic life. They change our forms of governance. They change our worldviews. Let me give you two examples from recent times. The first industrial revolution in Britain in the 19th century and the second industrial revolution in the United States in the 20th century. The Brits take us into that first industrial revolution with a new communication revolution, steam-powered printing, no more manual print presses, a big leap forward in the ability to produce cheap print very quickly so that we could have something called newspapers and magazines and textbooks for a new phenomenon called public school systems. And then the Brits laid down a telegraph system across the British Isles in the late 19th century. Steam power printing and the telegraph, those communication technologies converged in Britain with a new source of energy. They went from wood to coal. And then they took the coal and they got it out of the mines with a new invention called the steam pump. Then they put the steam engine on rails for locomotives, for transportation and logistics. This convergence of communication, energy, mobility, and logistics took us from regional markets in Britain to national markets because we could bring larger numbers of people together over time and space more quickly. It took us from more regional governance to nation states. It took us from proto-industrial capitalism to full-fledged capitalist economies. It took us from more rural populations to dense urban populations. The rest is history. In my country, the United States, we led the second industrial revolution, and the big revolution in communication was the telephone. Alexander Graham Bell. All of a sudden, people communicating instantaneously over thousands of miles with their fellow human beings. Later, radio and television. Those great communication technologies in America converged with a new source of energy, cheap Texas oil. And then Henry Ford put everyone in a new form of mobility and logistics transport, the internal combustion engine, automobiles. Later, inland waterways, ocean traffic, and air traffic. That second industrial revolution took us from national markets to globalization and global mediating institutions like the World Bank, the IMF, the OECD, the United Nations. And it spurred a shift from dense urban populations to suburban rollout. That second industrial revolution peaked. We know the date. It peaked in 2008 when Brent crude oil hit a record price of $147 on world markets. And when that happened in July of 2008, the entire global economy shut down. That was the great economic earthquake of the 200-year history of the fossil fuel industrial revolution. The collapse of the financial market with the subprime mortgages a month later was an aftershock, because that was a Ponzi scheme, a fictional economy. Why was the 147 benchmark for oil the beginning of the long sunset for the industrial age? Everything in the industrial era depends on oil, fossil fuels, coal, oil, and gas. Our food additives and preservatives, our pharmaceutical products, our construction materials, our heating, our transportation, our food products, they all depend on fossil fuels. So when the price of fossil fuels goes over 80 a barrel, watch all the other prices going up. And what happened in 2008 is when oil hit 147 a barrel, purchasing power stopped because everything we were buying, using, was based on a high price of fossil fuels. If this sounds familiar, this is what's going on right now, one more time. That is, we're seeing the price of Brent crude oil now, as I speak to you today, $119 a barrel. And I believe it's Goldman Sachs that predicted just this week, it's going up to 140 a barrel. This is a surge in a death throw of rising prices for fossil fuels and then collapse, rising prices, then collapse. It's clear that the age of fossil fuels is not sun rising, it's sun setting. And then the question from here is, where do we go? How do we chart a new direction? Let me share an anecdote with you. When Chancellor Merkel became Chancellor of Germany, she asked me to come to Berlin in the first few weeks of her new government to help her address the question, how do we grow the German economy and create new business opportunities and employment? The first thing I asked the new chancellor when I got to Berlin, I said, Madam Chancellor, how do you grow the German economy when your businesses are plugged in to a second industrial revolution infrastructure of centralized telecommunications, fossil fuel nuclear power, internal combustion road, rail, water, and air transport, and that infrastructure to communicate, power, and move the economy, social life, and governance? It peaked in its aggregate efficiency, the ratio of useful to potential work in every major industrial country over the last 20 years. That's the nature of the infrastructure. They have a birth, a life, and a death. And I said, so to the chancellor, you can have market reform and labor reform and fiscal reform, and you can stimulate a lot of startup companies for employment, but as long as your industries are plugged into a dying second industrial revolution infrastructure whose performance has peaked out, you'll never move forward to a new era in history. So on that first day, I discussed with Chancellor a third industrial revolution. We had already been working on that in the European Union. I've been blessed to advise the last 4 presidents of the European Commission and the current European Commission President's Board of Governors. So here's what we laid out in the European Union, which is now the operational plan of the EU. The communication revolution, this is already here. It's called the internet. We've got 4.5 billion human beings right now as I speak to you who have in the palm of their hands a cell phone, and that cell phone has more computing power than sent our astronauts to the moon. 4.5 billion people with that kind of computing power. Now the global internet, this communication revolution, is just now converging with a second revolution. And that is, we are seeing the emergence of an electricity internet. Millions of individual human beings and small businesses and cooperatives and neighborhood associations and big corporations and governments are installing solar and wind renewable energy where they work, where they live, in their communities. They are capturing the sun, capturing the wind, and within the next 10 years, it'll be hundreds of millions of solar and wind installations. And by 2040, it's going to be much of the human race using electricity internet, where they are downloading solar and wind, which is free and abundant and all over the world and is everywhere. And whatever electricity they're not using, they're beginning to share across a newly digitalized electricity internet across regions, across continents, and in the next 10 years under the ocean and across time zones around the world. We are beginning to create a global electricity internet to share the sun and the wind, so that when one time zone is in the sun, it can share with another time zone that's in the wind at night. This electricity internet is managed by the same type of big data analytics and algorithms to share electricity, renewable electricity, as we use analytics and algorithms to share news, knowledge, and entertainment on the communication internet. The two internets are converging, and they're being joined by a third internet, a digitized mobility and logistics internet made up of electric and fuel cell transportation, powered by solar and wind from the electricity internet. And those vehicles are increasingly becoming autonomous and driverless, and they're being managed again by big data, analytics, and algorithms, just like we share news, knowledge, and entertainment with data, analytics, and algorithms on the communication internet, and now sharing our electricity around continents and soon around the world with data, analytics, and algorithms on the electricity internet. These three internets, to communicate power and move the economy, society, and governance, are changing everything around us. But they also ride on top of a new platform called the Internet of Things. We're placing sensors, millions and soon trillions of sensors everywhere in the world. sensors in the agricultural fields, in the wild environment, in factories, in homes, and businesses, and automobiles, and they are collecting real data. And they're sending that data back to the three internets: communication, energy, mobility, and logistics. We are establishing a global brain and nervous system to connect the human race with all the spheres of the planet: the hydrosphere, the lithosphere, the biosphere, the atmosphere. The brain, Galileo, GPS, those satellite systems outside of the planet. The nervous system is the Internet of Things, the sensors. And every building in Korea, around the world in the coming years, will be retrofitted for climate resilience against the floods and the droughts and the wildfires already happening. New buildings from scratch will be zero emission. Every building will have an edge data center so that they can begin to connect with each other in fluid platforms with small and medium-sized enterprises, blockchaining, all sorts of relationships around the world. We're going to see the phase out of some of the centralized giant data centers of the 20th century. Every building will be retrofitted. It will have an edge data center. It will have micro power generation with small solar on the roofs. It will have wind nearby with microgrids. It will have storage units for energy. It'll have charging stations for your electric vehicles. So we are beginning to see the building stock as open nodes rather than secluded residences that can actually work with each other across regions and across the entire planet. This is the third industrial revolution. And this is the actual game plan of the European Union and China. As I said earlier, I worked with the last four presidents of the European Union and the current president, Commission. And in our new plan, which is now in place in EU, it's called Digital Europe, Green Deal. Digital Europe is the infrastructure I described. Green New Deal is the way to create the new businesses and the new jobs that will take us into a zero emission infrastructure for Europe. In China, I've been blessed to work with the leadership in China. When Premier Li came into office, he announced that he had read The Third Industrial Revolution, the book, and it instructed the government to follow up on the ideas and themes that I'm discussing with you today. And now in China, the plan is called China Internet Plus and the Ecological Civilization. In America, I've been blessed to work with Senator Charles Schumer, the majority leader of the United States Senate, and developed, along with our global Third Industrial Revolution team of industries, we developed a 230-page plan, a $16 trillion 20-year effort to transform our infrastructure in the U.S. from an aging second industrial revolution platform to a third industrial revolution. And much of that plan, many of the critical components, are in the new legislation passed by the U.S. Congress and signed off by President Biden. So where do we go from here? This new third industrial revolution changes the entire economic model. It moves us to a new frame of reference for understanding business. We are moving from markets to networks. We are moving from ownership to access. We are moving from growth to regenerativity. We are moving from productivity to flourishing. We are moving from externalities, which have long plagued us, to circularity. We're moving from geopolitics of the fossil fuel era to biosphere politics and sharing the sun and the wind of the planet. We are moving from globalization to localization. We're increasingly a more distributed economic infrastructure. The third industrial revolution allows smart, small and medium-sized enterprises and large companies to engage wherever they are in fluid platforms and be able to work alongside other companies all over the world in real time. So localization is a more flat, distributed way to engage in global trade while maintaining, if you will, a strong economic base at home. So to both have onshoring, but also to have global trade as well. Korea can play a very important role here. Korea is the poster child of the post-World War II era. We're always impressed by the fact that it went from a very poor country to one of the top 12 industrial powers on the planet. You have world-class companies. POSCO Steel Holdings is a very world-class company. You have SK Holding, you have Hyundai, you have Samsung, lots of industries. But now you need to make this transition. Korea needs to be, if you will, a first mover in Asia and the Pacific. And that means you have to call upon the government and industry and your municipalities to develop the kind of roadmaps that we've developed now in Europe, China, and the United States to begin this 20-year infrastructure transition into a third industrial revolution and a more resilient economy that can create the new jobs, employment of the 21st century, and hopefully mitigate the worst abuses of climate change and allow us to flourish once again on this planet. You also have the financial community that needs to come to the floor. Your public pension funds in Korea are already investing in green bonds in Europe and other places around the world to finance this infrastructure transition. Now they need to take those green bonds home in Korea and do the same thing there. So there's a tremendous opportunity. Korea can be a first mover here. We are on the cusp of this shift. It's going to be important for companies like POSCO. Without steel, we can't make these new technologies. We need it for all of the renewable energy technologies. So we're going to have to move to a green hydrogen economy using solar and wind to produce green hydrogen that can go through the pipelines and heat up the furnaces so that we can engage in steel production that's both carbon neutral and at the same time cheaper than our existing energy technologies. We're beginning to do that in Europe. POSCO can be a leader in Korea and Asia and the Pacific in how we make that transformation from a fossil fuel-based steel industry to a renewable energy-based fuel industry with green hydrogen right at the center of this new, if you will, worldview. I'm hopeful. I think that Korea has a great opportunity here and to lead this new revolution, and we have no choice. Our young people are taking to the streets all over the world, and they're saying we are in a climate emergency. We need to address the extinction event on this planet. We need our political leaders to step forward and our industries to move forward and help us make a great transition from a geopolitics of the 20th century to a biosphere shared politics of the 21st century. Korea will be there, I'm convinced, right at the head of the path in helping lead this great revolution forward so that life can flourish once again on this planet. So future generations, not only our own species, but our fellow creatures, can enjoy their moment, this special thing called existence, this little oasis in the universe. Thank you very much. I appreciate the time.
Thank you. That was a keynote address by Professor Jeremy Rifkin, and we were treated to the anecdotes of his conversation with German Chancellor Angela Merkel on designing a strategy for a third industrial revolution. And the European Parliament this week set out its vision for 2030, by which point all internal combustion engines would be banned from sale in the European Union countries. So this is just one evidence of our shift toward decarbonization, which cannot but have a large impact on our economy. And this is the topic of our fourth session today. So I'd like to introduce the second keynote speaker.
The second keynote speaker will be Bernard Lawrence, honorary professor of Free University Berlin and current managing partner at Deloitte.
Me to this IGE POSCO Group International Conference on embracing sustainable growth in the age of industrial transformation. It's a pleasure to be here and to lecture and to give a keynote to you. And I'm really deeply honored to follow up Jeremy Rifkin, who has been a hero of my academic life for a long time. And it's the first time in my life that I have the privilege to give a keynote following him. And I'm happy to directly follow up at least two of the major points that he addressed, which is using, of course, Germany as a case study, being ahead of the curve, with being the Green Deal center in Europe. And also I will follow up on the second point that Jerry made in the very end about industry transformation and the role that many of the industries particularly play that you are having in Korea, such as steel, and the new, I would say, I love the term that he used, revolution that we have with regard to the consequences of the transition of the geopolitical and geoeconomic order of the 20th century to a new, I think, order that is just developing in the 21st century. And this comes, of course, again, with particular regard to what happened on February 24 in Europe, and I will refer to this later. So in what follows, I want to address you with a keynote, of course, related to the panel speeches on industrial growth in the age of net zero. And I will make basically 3 points. I will first look a little bit in the why. Why are we in this context here? And why are there so many conferences globally taking place? And there are so many questions in boardrooms, both and among policymakers, on the question how then to transform our economies into a net zero future. So this is a little bit my first point. My second point then goes straight into Germany as a case study, and I follow up many of the comments Jeremy made. And finally, my third point, I will look at 5, and very briefly look at 5, I would say, key strategies for the transformation of industry, particularly with regard to the experience we are facing here in Germany and in the broader EU framework, knowing that many of our Korean friends are looking carefully into the transformation and the policies implemented in Germany at the moment. I know this from my former time, in my former life as a political appointee in the German Foreign Office. So I start with why is this so urgent, this whole matters, and this goes back, of course, as every good narrative in this field, to COP21, when we discussed all these things earlier, 2015, in Paris. Paris is for me the starting point of what I would say is the great transformation. Being around the climate field since 1990, I think the acceleration that we have seen after the Paris contract is unheard of. What we all underestimated, that we were there in Paris, either in the role of negotiators or in the surrounding, was the reaction that investors, the reaction that the capital markets and the whole investment community had already after Paris. The day after Paris, when we all came up again after 20 hours of sleep, when the contract was signed, the Wall Street Journal came out with the fact that the financial industry already anticipated this change and immediately reacted with their shares in industry. And that was a huge game changer. So the first phase after Paris, which we've seen also from a European perspective, but I see also globally, was not driven by regulators, in my reading, but mainly by investors in financial industries through their shares of industry. The second development is now, and that's so interesting, that regulators coming, and that's logically following the beauty of Paris, when we see that we asked, of course, for the NDCs in +5, so regulators are under pressure, and basically the Green Deal is nothing else than a reaction to this delivering on the Paris Accord with strong regulations and strong standards. And what we see now, particularly in Europe, is what I always referred to earlier in my advisory work for both corporates but also policymakers. Strong standards make strong companies. I'm truly convinced that if we get the standards right, if we get the regulation right, we will see even stronger companies coming out of Europe in this field. What happens is that we have a very simultaneous discussion among policymakers in at least 3 major regions of the world. I would say in the North American area, in Europe, and in Asia here, about the question how we can support industry on their way through this, what I would call the great transformations. This simultaneous development is due to the fact that they all more and more understand that they have to deliver and that challenge their national industries to deliver on this. And what happens now is that we see sector by sector reactions in industry, depending on in which bucket of industry I would say they are. We have, of course, strong industry buckets that I would consider or name the transform or die bucket, right? If you look at cement, Jeremy earlier referred to Korean steel industry, chemicals. They can not longer exist in the old way. They need green hydrogen, as Jeremy pointed out. Well, they need new energies to deliver and perform. Then we have a second bucket, which I would call transform to win. It's the high interest business models, logistic, life science services, consumer products that have a huge profit growth perspective. And there's, of course, the third bucket. Industry has to react, and this is a bucket I would call transform to transform. High impact business models like machinery, engineering, professional services firms even, that succeed by making sustainable transformation possible. And we can see top line growth all over in these sectors if they're making the right choices. I would say all of them have to make the right choices now. And this is something that we see all over in the boardrooms, the discussion now, how to make the right choices in order to avoid that the further investment based on fossil fuels are not stranded assets, or if I would call them sometimes even stranded costs. So my first point is what happens internationally, globally in the industry transformation goes back to Paris, and it's for sure a mixture of financial industry and regulators driving this change. Of course, the other players, consumers, employees, activists playing their role, but I think these two, regulators and investors, are the main drivers, and that goes back to the beauty of the Paris contract. My second point is that Germany, I do think, is setting the agenda for the EU's Green Deal at the moment and is driving the change globally. Germany has a very, very clear, transparent, and really constitutional right-based plan that gives us the ambition of reducing greenhouse gas emissions by 2030 up to 65%. That's a huge ambition, becoming climate neutral in the second or third wave then by 2045. And the government now came out with a plan developed by a broad coalition of think tanks that they want to reach this ambitious goal in 3 steps. The first steps, reaching the 2030 targets by 65% greenhouse gas emissions, would be basically to look into 4 fields: energy sector, transportation, industry, of course, being the third largest, very close to transportation, and buildings. This is where they want to focus on to reduce enormous amounts of CO2 tons. The second step, beyond 2030, is getting even more complicated when we will focus only on carbon-free technologies that are installed in industry, electricity, heating, and transportation. This will be basically a 95% reduction without negative emissions. That's unheard of, and I have to say, boardrooms are slowly only starting by understanding what this challenge means for them. That will be the much more complicated stuff than the one that we had until 2030. The 40% we reduced now, the next 25% are really hard, but then up to 95%, that will be very, very difficult. And the third step, this is the last 5% of non-avoidable greenhouse gas emissions from agriculture and cement are, of course, offsetting via, I would say, biomass CCS. We will see a big CCS discussion, not only in Germany, but in Europe. And this will be, of course, a game changer, as you know, that there was a very critical discussion in Germany and Europe on CCS. I expect that we will deliver on this plan, and this is certainly a top priority by the new government, but of course challenged very much though by the effects of February 24. I argued in a paper that I published in Davos that the events of February 24 will even accelerate the green transformation. There are good reasons to do this, but there are of course voices that say it makes it even more difficult. So let me come to my third point on the strategies how to get this done. And I think there are, with a very broad overview, looking into how we deal with this in Europe and Germany, I would say mainly 5 strategies. The first strategy, of course, and that's really important to understand, And don't underestimate the effort that the German government and the European administration is doing in this, is the massive expansion of renewable energies. The new goal of the traffic light governments are really ambitious in this. This is, and you know what that means for a country like Germany. We are not Norway, nor are we Namibia. We have a really, really very small country in comparison to the many cities and people that we have in the countryside also. So this is a big challenge for our country. The installed capacity and electricity generation of renewable energies will increase by far. We are thinking about an increasing, that means a triple of the speed in outrolling our renewable energy, and that's something that causes a lot of political and social controversies and discussions. First strategy, massive expansion of renewable energy in a new, as you know, all electricity world. The second strategy, of course, is energy efficiency. Primarily, energy consumption will be halved in Germany by 2045, especially in the heating sector. The primary energy consumption makes a huge difference, and there is, of course, major changes, particularly in this field since February 24, because there is a broader understanding and support in our population for this energy efficiency issue. I mean, to make an anecdotal wisdom, I have 3 daughters in my house, 13, 15, and 17 years old. So you can imagine the time that they are standing on the shower is a lot of time. And now after the war coming up, it's really en vogue to reduce the time to have hot showers because it's good for the freedom and the independence of Ukraine and to do something against the tyranny of Putin. And that really gives you a view of where the German political discussion among young people and many citizens is at the moment. The third strategy is electrification. Electrification of everything that is possible to electrify. Transportation, of course, heating, industry. Wherever we can, we will replace oil and gas as far as possible with electricity by 2045. And there we see a ramp up of heat pumps and e-mobility as key factors. We can see in some of the EU countries there are more e-mobility than in others. That's depending, of course, on the maturity of the infrastructure. That makes a huge difference. But now with new programs, not only in Germany but also in France and the EU, we will see more of this and more infrastructure, which makes e-mobility even more successful. This makes a huge difference. Electrification of transportation, heating, industry to replace oil and gas, our third strategy. The fourth strategy, and that's really a global one, is hydrogen. And Jeremy referred earlier to the steel example. I would say not only steel, but in Germany for the whole chemical industry, this will be the huge new game. I speak of green hydrogen as the premier cru champagne of the new world, of the new energy world. I think we will use green hydrogen in particular for industry, not for mobility so well. And we will have, of course, a gas bridge. But since this gas bridge has broken away, you know that the German business model was very much relying on cheap fossil fuel imports from the East, cheap security from the US, and cheap access, if I may say so, to a global Chinese market. All 3 basics are broken away, I would say, or at least challenged by February 24. So there's a new thinking, and we will see, particularly in the steel industry, gas for direct reduction only available to a limited extent, and green hydrogen needed much sooner. So what we observe now, and I think that's the same all over, is a global hydrogen strategy. Germany, as other European countries, are looking into the global south to assure access to those places where we can import green hydrogen much faster and import them to save our industry. The fifth strategy, of course, is CCS, and I did refer to this earlier. I do expect from 2030 onwards the ramp up of CCS infrastructure. This will be needed not only in the steel chemistry, but many other process-related industry, but also as an energetic use of residual materials. We will see in our scenarios in two of the think tanks we are working with a huge importance for this in order to reach the 2045 goals. So let me sum up and maybe open it up then for your panel discussion. I completely agree with Jeremy's historic economic view on the development 1, 2, 3 industrial revolutions. I do agree that this is a major challenge for global industry. I do think, though, that we are in the lucky situation that we have actually the technologies in place, and we have, with regard to the constituencies I know best, which is Germany and Europe, a willingness to go there. It's about now execution. It's about speed and scale. It's about execution of the right strategies. I have addressed some of them, and I'm happy to learn how your discussion goes on with this. Thank you very much.
Thank you to our two speakers. Lawrence just talked about cases in Germany and the EU, what efforts are needed to decarbonize and reach net zero. Normally, you would think that carbon reduction starts with regulators, but it was really interesting to hear that all of this movement was actually precipitated and triggered by investors and the financial sector. I think that has significant implications for Korea. Now, next up, we have 4 renowned experts on this matter who will be joining us as panelists. I will give each of the panelists 8 minutes. Please tell us some insights. Share with us your opinion about the government's role, especially in particular to carbon neutrality while maintaining industrial growth. First off, we have Kim Jong-gap, Distinguished Professor at Hanyang University, who is also the former CEO of KEPCO and former Vice Minister of Trade, Industry, and Energy. Please go ahead. Thank you for inviting me. Today, we talked about sustainable development and how we're going to make it sustainable. That was the main point that we talked about today. And in that sense, I believe that our development has been overly focused on increasing GDP, cranking out the growth numbers, and increasing productivity. So it's no longer a sustainable model in Korea. Now, second, I would like to point out about total factor productivity. But that shouldn't be the focus anymore. We need to focus on the input. Our potential growth rate has waned throughout the years. And third, environmental safety and environmental stability has been sidelined due to our focus on growth, which led to skewed growth or ill-balanced growth. So I think our growth has a lot of holes in it. And as a result of that, we're now seeing all of the repercussions piling up all at once. It's regretful because I think that 30 years ago or so, we should have realized these changes, or maybe we did realize, but we didn't change the way we did things. It would have been great if we had started 30 years ago, because Germany and EU, as we heard in the keynote speeches, have been moving faster on this issue and are now at a much better level of dealing with climate change and reducing carbon emissions. So once again, I believe that our future lies in eco-friendly growth. We heard about the WTO's principles of being freer and fairer trade, but it needs to be a greener trade. I believe that a freer, fairer, greener, and more eco-friendly growth path is our future, for which we need to really ramp up our efforts. We've talked about this in previous IGE forums as well, but Jeremy also talked about it today. In Europe, carbon tax is imposed and carbon dividends are handed out to the citizens. And from the perspective of advanced countries, it's more about doing this upstream in the gas, coal, and production or import level. That is where we need to deal with climate change and implement actions more at the upstream level to nip it in the bud. Professor Chang pointed out that is it consumer-based CO2 or production-based CO2, and alluded to this issue. I believe it needs to be both. It's not just either one, it's not black and white. Of course, if the regulations and initiatives are implemented upstream, it will trickle down to the consumer level. But putting these initiatives and regulations and systems in place at the consumer level is also needed. At the consumer level, a market-based approach of implementing carbon tax is, of course, going to be effective, especially from an economist's point of view. We always say that carbon tax is the best way. But, as I said before, this is an issue that we have simply postponed, refused to deal with for the past 30 years. So we need a market-based approach, but we also need regulations in place to further fuel these changes with more speed. As the CEO of KEPCO, I know the difficulties, especially regarding electricity prices, because it doesn't take into consideration seasonalities. So there are no incentives to produce more and better. There are no incentives to save on the electricity consumption. We used to spend electricity like we do water when we're showering, as was mentioned. Fuel tax and all these other tax initiatives, tax-based initiatives, are these the best way forward? Because in the market, from the consumer's perspective, maybe it's a signal, maybe $2 per liter, let's say, but for the poor people, the more marginalized and vulnerable people who need support in the form of subsidies, because electricity and all of this are basic elements that are needed in daily life. Gas companies are penalized, for example, in EU, especially for 10 million households that are experiencing difficulties paying their utility bills. And these tax collected from the companies are used to support these families in need. And that's a different type of signal that is sent to the market. We say that the carbon tax, level of carbon tax needed is $200 per liter. But in Korea, I think that a two-tier approach is needed. It's not just a market-driven approach that is needed, but also a regulatory-based approach as well. We have a more long-term based plan in Korea. For example, Ours isn't as ambitious, maybe, as some other countries. The industrial structure, the legacy of the past 7 years can't be changed overnight because of the shock that that is going to bring to the market. The energy side needs to be a transition, but the industry side needs to be a transformation. POSCO, petrochemicals, the cement industry that are heavy users of electricity need an efficient source of energy. Climate change is a crisis, but can be a blessing in disguise, can be an opportunity. That's what we always say. POSCO has came up with the Hyrex, their new hydrogen reduction steel making technology, and they are pioneering and trailblazing the way. And so they are at the head of the pack. They have a competitive edge because they've been a fast mover and a visionary. We all say that this is now the age of ICT and cutting-edge technology, but I believe that steel is actually the Iron Age, because it's not going to change the fact that we need steel and iron in our daily lives. So even if we're living in the age of ICT, these legacy companies, these incumbents, also need to change, but it's not a transformation overnight. Because especially the materials industry, including steel and iron, aren't going to change overnight, because unless we come up with new innovative materials to completely replace steel, for example, they're going to be continued to be produced throughout the world. I think now in Korea, we are sort of complacent, thinking that maybe a great innovative technology or maybe regulators are going to come up with an innovative solution that is going to fix all of this in a swift manner. But we can no longer simply wait on someone else to take action. We need to take the initiative, take ownership, and send the right signals to the market alongside with these regulations. I'm sorry that I took a little bit more than 8 minutes. Thank you for your message. I know that we have a lot of people from POSCO here today as well, and I know that that would have been very uplifting to all of you joining us here. And did you say that we use electricity like water, or was it the other way around? Well, anyways, we are trying to reform the electricity price scheme, because that's something that we've always recognized the need for, but it's never been an easy task. In Korea, we talk about inflation and how raising electricity prices is going to cause difficulties for the working class people. And so we have reached a plateau of sorts, but I think now is the time to change and move forward.
Next, we have Mr. Lee Se-hoon, Director General from the Financial Services Commission. First, it is a great privilege to speak at the IGE, a POSCO International Conference. A sustainable growth and important agenda for the government. So on the financial front, I'd like to talk about the government's endeavor to promote sustainable development. I'm sure you have read from the media the new direction of the Yoon Suk-yeol government's economic team, a new policy direction of Yoon Suk-yeol government's economic team, standing on 4 key policy pillars. The first of which is letting the private sector take ownership. And second, be more forward-looking and promoting the well-being of all citizens among the 4 agendas. And the short-term challenges promoting growth and taming inflation must be joined with more long structural challenges to make our economy more resilient. So, as we embrace the future, achieving carbon neutrality and responding to climate change have been identified one of the key government agendas. And the policy direction announced yesterday covered many topics on climate change. I'd like to go through them briefly. A national determined contribution of the Korean government will be implemented seamlessly. That is a government commitment. However, we need to promote efficiency in pursuing NDC by pursuing diverse path of reduction. So we are still very much at the working. So our search of optimal solution for achieving carbon neutrality is still very much a work in progress. And to reduce the carbon emission, economic incentives must be provided to the business sector, and we are designing many schemes on this front. And our economy should be more circular so that we can live hand in hand with our environment. So those were the policy directions announced by the government, and that will inform the design of more detailed implementation plans. So they will serve as a backdrop for a more in-depth, actionable implementation plans. So what advice or assistance can the regulatory authorities can we provide to the financial institutions? This is one of our challenges. So to ensure seamless implementation of net neutrality, financial assistance or financial fundraising is a key. Finding the source of money. And green economy initiative has been pursued for the past several years by the government, and some of the agendas are still work in progress. Some agendas have been fulfilled, have achieved their goals. So let me give you some of the most prominent examples. The first is helping the net neutrality endeavors of companies, and green economy or carbon neutrality, and all of these concepts must take more concrete form and have a clear definition to really help businesses. So designing the right taxonomies and definition of terminologies are important, and this is a responsibility of the Ministry of the Environment. So we have developed the K taxonomy, which was announced last year. And on the front line of our financial sector, financial institutions are scrutinizing the applicability or validity of this K taxonomy. So the most readily applicable areas like the issuance of green bonds are now being subject to this K taxonomy. So they are the first adopters, early adopters are K taxonomy, and we will mobilize many policy tools to help businesses become truly greener. As the government understands, out of financial assistance provided by the government, achieving carbon neutrality took up 10% of the government's financial assistance, which, however, will grow in proportion going forward to ensure seamless implementation of achieving carbon neutrality. And next agenda requires taking a slightly different perspective, and that is concerns risk management. So for the financial sector, to help the real economy, then the financial sector itself should be put on a resilient, robust ground. However, financial sector itself is exposed to the climate change risk, so this risk must be adequately managed. So, for example, we can consider physical risks brought from extreme weather events, including flood and hurricane, and the payment of insurance by insurance companies may undermine their financial health, and it may hurt their bottom line. And carbon-intensive businesses with a large-scale stranded assets may see a deterioration of their loans. So such distressed loans must be closely monitored by the government. And next, fourth, we should build a ESG infrastructure in Korea for the private sector. So ESG activities of businesses must be evaluated on a robust basis. So we should have the right ratings system methodologies. So having a strong rating system is one of the keys to building a really strong ESG sector. So we are planning to expand our disclosure requirement, and this falls under the jurisdiction of the Ministry of Environment. And many public and private organizations must have a stronger rating system which should enjoy the trust of the market participants that could provide really informative data. And just 2 to 3 years ago, in Korea, the financial sector did not take ESG or achieving carbon neutrality very seriously, but the situation has changed. A green bond, issuance of green bond, or carbon neutrality are the imperative for ensuring a long-term sustainable growth. That is the understanding of Korea's financial sector. And ESG commitments have been announced by many companies along with their promise to achieve carbon neutrality. And this private effort must be joined by the government's endeavor. And in implementing a plan for achieving carbon neutrality in the financial sector, we should identify many challenges, and our understanding on such challenges must be shared between the public and private sector. So we should engage all stakeholders. And when we assess carbon neutrality activities, those who are at the front line of assessing our progress in carbon neutrality may face significant challenges. So, for example, there is a problem of a classification. Producing green hydrogen clearly is ESG friendly, carbon neutrality friendly. Then what about providing financial assistance to businesses that only indirectly contribute to ESG, that only indirectly reduces carbon emission? So there are a lot of gray areas in defining whether an activity is friendly for carbon neutrality or not. And as I've mentioned, there's a problem of rating or assessing ESG score. So what should be in the methodology box in ESG ratings? There, we need more clarity in the market, so we need to sort out all the noises and find the right methodologies and relevant reference points for a stronger rating system. As many as 100 assessment tools are being used by some rating agencies, whereas some rating agencies are using only 20 to 30 criteria. So we are seeing a great divergence in the number of criteria. So if the ESG rating is really to settle down, take root, then our ESG rating system must evolve. And if we want to be truly carbon neutral, that may involve a lot of cost. So one of that cost may be the expense incurred in the process of disclosure, and ESG assessment might be quite expensive as well. And all of those resources devoted to assessment, those financial resources must be shared equitably by all stakeholders. So who should bear the burden? How it should be shared is another point that we should think about going forward. And how should we score the ESG points? What activities should we assess? How should we define sustainability? Those are all the challenges that we must tackle with. And this is very much on the agenda of the financial regulatory authorities and financial institutions in the private sector. Thank you for listening. So that was remarks from Mr. Lee Se-eun, Secretary General of Financial Services Commission. The role of the financial sector in being carbon neutral is an agenda worthy of a very detailed consideration. So 2020 should be a decade for being net zero in carbon emission, and we have a great expectation on this cause. Next, I'd like to introduce our next panelist,
who is Oh Hyung-na, professor from Kyunghee University, who is once again an expert on this matter. Good afternoon, ladies and gentlemen. Thank you for inviting me to this meaningful event. Professor Lawrence said that we already have the technology there. Of course, energy-related technologies required for our 2030 goals are already developed and they're commercialized, but carbon neutrality technologies required until 2050 need to be technologies that industries can use, but we only have about 50% of the technologies that we need, meaning that with the technologies that we have right now, we can only reduce 50% of the carbon emissions that we need to reduce by 2050. Now, this is where the industrial technologies come into play. The core here is energy-intensive industries like steel. These industries, by their nature, are very carbon-intensive, which is why they have always been at the center of carbon neutrality discussions. These materials industries that are very carbon-intensive are unique because these will continue to be our core industries even in the future of our economy. 30 years, 40 years down the road, these energy-intensive materials industries will be still high in demand in our modern economy. And the products produced are also highly competitive globally, which is why technological competition is going to arise. We competed over energy. Now we're going to be competing over industrial technologies because without competitiveness in these industries, we cannot guarantee national competitiveness, let alone carbon neutrality, which is why low carbon development of these industrial technologies and commercialization as soon as possible is critical. These technologies, even if they're still not yet here, the competition over these technologies have always been there. We already have the competition that we can witness, especially in ESG. That's a testament to the competition that's already out there, despite the lack of the actual technologies that have yet to be developed. Right now, the focus is on E in ESG, and in particular climate change. E comprises, unlike before, a very large majority of ESG, about 60% comes down to the E, and the rest is S and G. ESG rankings and scores, corporate value, corporate management performance are correlated, as research has shown. First, we talk about climate risk response as a criteria for high ESG scores. Second, we say that future products markets, as our previous speaker and moderator has pointed out, that by 2035, new cars based on carbon are going to be prohibited, along with other low carbon or zero carbon products in the market. So number two comes down to, in ESG scores, whether the company is future ready in transitioning their products to be fit for the future. And the third reason that increases ESG scores is ease of financing or low-cost financing. Climate financing or green climate, the green climate has a variety of definitions. First is eco-friendliness, and the second is investment from the financial sector. So it's the environmental sector, the finance sector, and investments. Now the public sector has taken initiative for green action, including the NPS, but in the private sector, asset managers like Blackrock have been very active in assessing and evaluating corporate activities using ESG as a barometer. If the risk is seen to be high, they are put on a watch list that is published. Companies that require constant monitoring, or companies that have not declared their carbon neutrality goals, or companies that have announced plans but aren't keeping up with efforts to deliver on those plans. The ESG market as well, as of 2020, was 40 trillion. And according to Deutsche Bank, in a couple of years, the market will triple. So these funds in the market are going to allow for low-cost financing, which means companies are incentivized to get a higher and better ESG rating. One thing I would like to suggest is the following. The 2020 MSCI ESG ranking is quite telling. For each power producer, we've evaluated the level of their contribution to increasing global average temperatures. This is the level of detail and public disclosure of this type of information. At the center of ESG is RE100. As we talked about on the finance side, it's very difficult, especially because of measurements, to decipher whether this is actually eco-friendly or not. But the one that is most transparent, clear, and more impactful is RE100. A couple of Korean companies have joined in that movement, but we don't have a lot. There are only a handful because of the unique characteristics of Korea. We are still behind. The country that experiences most difficulties is probably Korea. Even if the private sector, even if a company wants to join the RE100, at the national level, it's very difficult for Korean companies to take the initiative. It's not just about the power sector. It's something that determines Korean companies' competitiveness as a whole at a national level. And it can really be a detriment to and hurt Korean companies' competitiveness if we aren't able to join RE100. So that is an area we need to make sure that isn't a trade barrier in the future. Of course, climate action is going to raise costs because of the social cost of carbon that needs to be incorporated into prices. ESG projects and eco-friendly green projects, economic feasibility can only be secured and can only be strengthened by increasing the cost of carbon that is incorporated into these prices. That is the only way to facilitate and promote these projects going on in the private sector through green financing. And in the industrial sector, low carbon transition needs to be supported, fair and equitable transition needs to be supported, and these green finance funds go into these types of initiatives. Right now, the cost is only set at about 220,000. Korean won. And this isn't really going to make much of a difference. It doesn't really make a dent in consumers' pockets. So once again, the private sector's green financing, green funds, and climate funds, as well as public sector funds and financing must be expanded for our efforts to really proceed. Government policies are currently supporting this type of transition. If the price, however, is too high, then that can also pose risks to companies that are in the process of that transition. Carbon-intensive materials companies need to overcome the instability and volatility of the carbon costs. Using these types of government policies, but the carbon pricing needs to actually be at a certain level for the government to take this type of action. If it's too low, then it's really not going to be effective in any way, especially in getting the ball rolling in the public sector and private sector. Next, I want to talk about transparency in measurements. How are companies going to certify the level of carbon emissions? How are we going to measure it? How is it going to be objective? This can't solely be put on the private sector because we need a measurement system. But it seems that the FSC is already interested in this matter, fortunately, so I will leave it at that. I am always sharp in keeping time, but everyone has been very much to the point and concise and short. And since we're the last session, we aren't as rushed. So we're now down to the last panelist.
Our last panelist is Ms. Kim Hee. She is Chief of Carbon Neutral Strategy and Senior Vice President of POSCO. I understand you have a PowerPoint slide. But I ask you to be brief in your presentation due to time constraints. So I am the last panelist of the last session. I'm from POSCO. I am the Chief of Carbon Neutral Strategy at the company. So the topics on economics, environment, climate change have figured prominently in today's conference. And now, carbon neutrality is the topic of our last session. So I'd like to introduce the ambitions of POSCO in reducing carbon emission, how we can do even better in emitting less carbon. So I'm Chief of Carbon Neutral Strategy and Senior Vice President at POSCO. I have worked for the 30 years. I had worked for 30 years as an engineer at Pohang, a steel production plant of POSCO. So I wore a safety helmet and safety suit and got my hands dirty in steel production plants. So I have a rich experience in industrial processing of steels. That gave me pride of being at the vanguard of Korea's industrialization, but now I have taken up a different mandate, reducing the carbon emission of POSCO and indeed our country. So I'd like to talk about the carbon neutral strategy of POSCO as a corporate citizen. And our ambition is achieve bringing disruptive revolutionary changes in the green economy. 1968 was a year of starting POSCO. And it has risen as a global company. It is the 6th largest steel producer in Korea, so it is a story of building from scratch. And for the past consecutive years, in Wall Street Dynamics Global League table, it is always at it is among one of the top steel makers, and we are committed to being not just a large steel producer, but indeed a very green company, in part by making progress in the ESG front. It was in October 2020 that we committed ourselves to be a leader in transitioning to a low carbon economy, and we promised that we'll be carbon neutral by 2050. So the requirement for carbon neutrality is getting ever stronger. So 2050 carbon neutrality has the following components, and we will reduce carbon emission, not just in our production plants, but across other industrial processes as well. We will use more eco-friendly resources or materials, and we will use green hydrogen in the process of producing steel. Our ultimate ambition is to develop commercial technologies for Hyrex or hydrogen reduction steelmaking. Steel, as has been mentioned a lot, takes a very important part in economic growth. So, making affordable steel is very important for being competitive for shipbuilders, automakers, and electronic companies. So it has a wide repercussion in both the downstream and upstream industry. But steel has downsides as well because it is very carbon intensive. So in terms of life cycle assessment, a lot of materials used for steel making are recycled. So per unit basis, it produces comparatively less carbon. It produces only 2 tons of steel for 1 ton of steel plate for automobiles, and the comparable figure is much larger for aluminum or carbon fiber or magnesium, and the recycling rate for steel making is 85%, which is quite high. But manufacturing sector takes up 30% of Korea's GDP, and steelmaking takes up a large share in that manufacturing sector, so the absolute level of carbon emission is high, despite the low per unit emission. So making a greener steel is very important to be economically competitive, and this is our roadmap on the upper right side of this presentation slide. In 2030 year, we will improve our blast furnaces and transition to electric furnaces, and we will build experimental or pilot production plants, and our ultimate goal is being 100% green in steel production, and low carbon bridge technologies will be developed by POSCO to expedite our process towards carbon neutrality. Pellets and HBI would be used for inputs of our furnaces, and artificial intelligence could be leveraged among other smart technologies to drive efficiency in our industrial processing. And we will replace blast furnaces with electric furnaces, and these electric furnaces will use scrap for resources. And a hydrogen reduction steelmaking has been talked about a lot today. And Professor Jeremy Rifkin said that industrialization inevitably involves the emission of carbon. So industrialization gave rise to a revolution in communication, logistics, transportation, and however such revolution must come with lower carbon emission. And in our steelmaking processes, CO2 emission will be reduced with the following technologies, as you can see in these pictures. FeO2 is a chemical compound of our steel materials which contains carbons and hydrogens. So C joined with O2 yields CO2. So turning these carbons into hydrogen and turning them into H2O is our goal. But it is easy to drop water, but it is very difficult to take back that water that has already fallen. So this industrial processing is irreversible. So we are living in, we may still be stuck in the Iron Age, which means that we need even more innovative green technologies. But I'm very much encouraged by the presence of our innovative Finex technology, which ditches iron ore in favor of iron ore fine, and 20% of our HTO undergoes reduction processing, and this will help us to be even more greener in our steel making, and it gives us a competitive edge against other steel makers, as you can see in more detail in the right part of this presentation slide. So on the left, and you can see pictures of fluidized bed furnaces and shaft furnaces at the left and right part of the image respectively. So already processed steels or pellets must undergo reduction, and in the process CO2 is emitted. And how our fluidization bed furnace is difficult. It is fed, iron ore is fed directly, and that helps us reduce the processing cost. And 70% of the iron ore is iron ore fine. So iron ore fine can be used directly in our shaft, fluidized bed furnace. And if we use hydrogen, then this will allow us to absorb heat in steel making. So the number of fluidized bed furnaces can be changed flexibly under our technology. And Finex technology has been used since 2007. It has been developed as one of the core technologies of Korea's steel industries, and 3.5 million steel has been used with our Finex fluidized bed furnaces. So this is one of the core technologies, Finex technology. And Finex technology has been built on an open platform, and we convened the world's first dedicated forum on hydrogen reduction production, and we plan to hold another such a forum, hydrogen reduction forum, in October in Stockholm in 2022. So this serve as an open collaboration platform for open collaboration, and this will help all stakeholders, allow all stakeholders to put their head together to drive innovation in hydrogen reduction, steel making, and iron slags, among other materials, are being used in, let's say, a cement production or generating electricity from sea wave. And these are the top research topics of academic research institutions in Korea. And challenges faced by steel makers are relevant to all stakeholders. And this must involve the public-private partnership. In hydrogen reduction, steel making technology has been developed for quite a long time by Japan, among other countries. So this has been a long-term commitment of overseas countries, which clearly shows that government must take its part in developing hydrogen reduction technologies. And CCUS should be subject to more rigorous definition and classification. And the need for a more resilient infrastructure has already been raised in today's conference. So to make our economies more competitive, then we need innovative hydrogen reduction technologies. So this represents our new business strategy. So we need smart solutions, and we need a competitive edge. And that must entail the working together of all relevant stakeholders, and we promise to be a relevant citizen, a relevant corporate citizen on the global stage and be a global leader. Thank you, Ms. Kim Hee. So we had 2 keynote speakers and 4 panelists for the last session, and one question lingered. One question continued to pop up in my head, and that is the fact that we are in the midst of the joint transition to a low-carbon economy and carbon neutrality. So what implication does this have for our firms? This may represent a significant challenge or threat. Do we have the capacity and capabilities to promote RE100? Do we have the capacities to seamlessly introduce, let's say, a carbon tax? Or on the other hand, we may take these challenges as new opportunities to accelerate the development of innovative technologies, as we could see from the cases of POSCO. So these are challenges, but these challenges can be interpreted quite differently depending on how optimistic we are or how audacious we are. So I refuse to be pessimistic. To ensure a brighter future for Korea's industry, we must understand the gravity of the situation and the breadth and depth of the knowledge and commitment that are required by firms and the government. So our unwavering commitment to rise to the challenge, I think, provides a background for the 4th session, the last session today. Thank you for being with us. And I was a moderator for the 1st session. Thank you for listening.
Much to Dr. Hong Jong-ho, as well as our distinguished speakers and panelists for today. With this, we conclude the IGE POSCO Group International Conference 2022 ESG Global Summit. On behalf of the conference organizers, I would like to thank you for joining us today, and we look forward to hosting you again very soon. Thank you very much.